All right, guys, welcome, welcome. Thank you for your patience there. How's everybody doing? We have a really good webinar here, and I think it might be the most important part of our series. We are going to be talking about position sizing made simple, and the goal here is to never blow up an account again. So if we follow these rules, we'll be able to keep ourselves safe, and I think it's the most important part of this whole series because I'll be completely honest with you. You do not need to be that great of a trader if you have excellent risk management. A trader with a great system outside of risk management will underperform a trader with an average system and great risk management. So I think it's a really important thing to focus on. I'm really excited to get into this with you guys. So let's get right on into it here. We are at part 4 of our Trading Foundation Mastery series here, and it's going to be a good one. So let's go, guys. Welcome back. First of all, I know we've talked about a lot of things leading up to this, so I'm really happy to see you guys in the community, and I see your progress here. It's great. We're all building this together, and even as a pretty seasoned trader, just going over these fundamentals has been so good for me as well. So I think that there's something here for all levels of trading, and it's always good to go back to the fundamentals. So let's talk about what we're going to learn today. We are going to be talking about calculating proper position sizes for any trade. We're going to be going over understanding risk versus reward, the fundamentals of that relationship, and how you can best use that understanding to serve your trades. We're going to be talking about a few different rubrics, so to speak, parameters that I think are tailored to new traders and then to more advanced traders. And that's the 1% rule versus the 2% rule. So we'll get into all of that. And we're going to also get into using position sizing calculators, how we can use those effectively and basically save brain power using these tools. So we don't have to stress about what our sizing is going to be and all of this stuff because we already know that going into a trade. So really actionable stuff here. No matter what system you trade, this is very applicable. And I'm excited to get into it. So really quickly, let's go over what we've learned up to this point. We have talked about a good amount of stuff here so far. So in the first, checking my notes here, in the first session, we really went over the trading plan blueprint, and we gave ourselves a solid foundation to kind of build off of. After that, we really honed in on how to actually read the charts, how to use some basic tools, basic indicators to help gauge a good trade and a valid setup. And then we went into a little more detail in session 3. We talked about a 3-step plan to execute these trades, how we knew how to when to get in, when to get out, and how to manage the trade in the middle. So today we're building on all of that, and we're getting into the actual position sizing. So once we've identified that valid setup, now we're getting into how much capital should we put to work on any given setup. And yeah, I just think this is super important because it's so easy to fall into so many traps. And we're going to be talking about a lot of mistakes that people make when it comes to position sizing. And trust me, guys, I'm speaking from experience here. This is the trickier part, I think, to trading, at least more tricky than a lot of people realize because it's very insidious. We could feel very strongly about a setup and have that influence the position sizing we take. And I really do like to just hammer the point that trading isn't about being right. It's about being wrong in the right ways. So we're going to be wrong a lot. And our safety net, our risk management is really what it comes down to in terms of differentiating between a successful trader and an unsuccessful trader. So that's where we are right now. That's where we are on the roadmap. That's what we've covered. And here's where we're going. So I want to talk about the biggest account killer. What is the number one reason traders blow up? I think based on the intro here, you probably have a good idea, but let's think about it, right? What is the one thing that can cause a good trader to blow up? It really does come down to that risk management and that position sizing. So there it is. A poor position sizing will kill any good strategy. It really doesn't matter if you don't have the best strategy. That's something that has a lot more fine tuning, a lot more experience that you need to kind of cultivate your exact strategy. We gave a nice basis here to build off of, but everybody's a different trader and we all have different trading styles that will, that we can kind of work on leaning towards and building our system towards so we maximize our personal edge in the market. Let's see. Got a Discord notification here. It looks like I'm in. Let's see. My Discord guy's here. Looks like I got booted and have to restart. So I'm just going to restart my screen real quick for y'all. Thank you for your patience. There's my screen and there's my beautiful face. All right, we are back. We are back. There we go. Just checking chat. Awesome. Awesome. Okay, great. So, why does position size trump everything? So, you can be right 80% of the time and you can still lose money. You can be right 40% of the time and still make consistent profits. The difference here is that position sizing. So, it's really, really, really key. We see a lot of traders who have amazing instinct, and sorry, just making sure we're all good on the back end here, getting some pings. There we go. Okay, thanks again for your patience, guys. So we have some really good traders who have amazing instincts, but they're just not able to capitalize on those instincts because they haven't learned the fundamentals or they don't respect the fundamentals of position sizing. And I will switch to full screen for the Discord guys here. Changing windows right now, Tim. Thanks for letting me know.
So on the bottom, there's there we go. Yeah, Windows, dual Windows, and then you full screen presentation.
There we go. There we go. All right, you're seeing the magic behind the scenes here, guys. Awesome. Okay. So yeah, this is the difference between a good trader and a bad trader is position sizing. I can talk till the cows come home, but it really comes down to that. If you get this fundamental tool down or skill down, you are in so much better shape. You don't have to be the best trader on the block to be consistently profitable. And that's what it's really all about. If we can find a system that makes us consistently profitable, it's just the sky is the limit from there. You can build off of that, you can hone that edge, but this is what it really comes down to. So let's talk about it. We have two traders here. We have trader A. He has a great strategy, but he just cannot manage the positions. He will blow up an account eventually. This is all about tail risk and repetition. So if we're doing this every day, we're going to be taking hundreds of trades, thousands of trades over time. And it only takes a few of those to really put a dent in your equity curve, your overall profitability over time. We are all about smoothing that equity curve. We're about taking out some potential gains. We will miss some of these amazing gainers that we would have if we were positioned oversized. But overall, our profits are going to go up and to the right. And I don't know about you, but that's the kind of chart I want to invest in, up and to the right. So we are trying to get our equity curve to look like a Bernie Madoff Ponzi scheme, just like that, right? Maybe it won't be that steep of an angle, but it will be consistent and it will be something that you can use as a foundation to build off of. So that's trader A. He has a great strategy, but poor position sizing. Trader B, he has an average strategy. He's not doing anything too crazy. He's sticking to the fundamentals. He's getting those base hits and he's stacking those up and compounding those gains. He's the one who we want to be like. He's the one who will have consistent profits. And so it's not going to be as flashy. I'll tell you right now. And that is, I think, the biggest obstacle. Because when we're in the markets, we get very, very desensitized to swings in our account size. Money starts to lose value when you're able to make or lose it so easily. So I think that this is one of those areas where psychology is a major factor. And we're just all, as human beings, prone to wanting more, prone to wanting that next big hit. It makes us feel so good to nail a big trade with big sizing. And I'll be the first to say, early in my trading career, this is what I live for, right? I was all about those big gains on big sizing and, saying I have high conviction, high confidence. I'll put my money where my mouth is. And I think as I've grown older, as I've mellowed out a bit, and most importantly, as I've taken significant losses, I've learned that, what really gives me more of a dopamine hit that consistency, that ability to look back on a week, on a month, and on a year and feel really good about controlling my risk and letting my trades and my trading skills speak for themselves through my profit loss by not getting massive drawdowns on any one position at any one time. So the same market and the same time frame can lead to very different outcomes depending on which style of trader you are. Let's talk about the mathematics of trading success, because it's really not about being right. It's really about managing that risk. So here's the formula preview here. We have our win rate times our average win versus our loss rate times our average loss. Our whole goal is to take setups that have a higher reward than potential risk. Because if we're only taking 2-to-1 or 3-to-1 risk reward setups, then it's okay if we're wrong half the time, because we're all humans, we're all going to be wrong. I'm wrong a lot. I don't know about you guys. I'm wrong a lot, and I've been doing this a while. So my whole thing is to protect myself via the framework of my trading so that it's okay if I'm wrong half the time. On a good month, I'm wrong 30 to 40% of the time. On a great run, I'm wrong 20% of the time. But even then, if I was right 4 out of 5 times, if I didn't manage my risk, that one being wrong, that one instance of being wrong out of 4 out of 5, that could totally tank my equity curve. That could really eat into my profits over the month. That could be the difference between being profitable and unprofitable in uncertain market environments. So I think it's just so important, if you want to do this seriously and trade month in, month out, not just wait for the best times of the market, but actually extract money regularly from the market. It's all about position sizing. So let's get a little more in depth with this win rate versus average win loss. So let's do another couple examples here. So example A, someone has a 60% win rate and a $100 average win and a $300 average loss. That's not going to work. The math ain't mathing, right? What about somebody with a 40% win rate with a $250 average win and a $100 average loss? They're cooking. They're making money. So it's really important to reframe your thinking, because you're not supposed to be targeting being right all the time. You want to be more right than wrong, but that's not going to be the make or break difference in anyone's trading career. What is that position sizing. And when we control the average win and loss amounts, that's when you know that you're really getting a handle on yourself as a trader, when you're able to execute and practice that discipline that's required. And that's when you'll start seeing leaps and gains. So guys, I know there's probably a good amount of you that feel like you're close to a breakthrough, that feel like you're on the edge of getting it, so to speak. And I think this could be the difference, because if you have that feeling, you're probably on the right track. You're probably identifying good setups. You're probably not throwing good money after bad, so to speak. But it could be that those losses are just hurting you more than they should. So with this kind of framework, I think you'll be in much better shape to actually capitalize on your instincts. Because if you're here, you probably have decent instincts. You're taking the time out of your day after the market's closed to try to learn a little bit of something about this. And so hats off to you. Just keep going and keep practicing discipline more than anything else. You don't have to be a genius. You just have to be disciplined. So let's talk about how position sizing affects the long-term results. This is a chart of compound interest. So let's walk through this real quick. We have our principal plus X% equals Y. So that means the amount that we invest in a trade plus the gains on that trade equals Y. And then that is our bankroll. We had this amount of money, we added this amount, and now we have this. So now for the next trade, we have a higher dollar value, this Y, and then we are going to be essentially over time, over a number of trades, using that to fund more trades and to keep doing this thing where we compound our gains with small winners, and it will form a parabolic return. So the big thing here is that small, consistent gains, they compound over time, and large losses require exponential gains to recover. So this is the kind of thing which is really easy to understand, but until you really see the numbers, it's hard to kind of really get a grasp on just how damaging this can be to anybody's trading career. And this was one of the biggest lessons that I had to learn. And I've blown up, man. probably 4 or 5 accounts over the years. I was averaging one blown account a year for the first 3-4 years of my trading, and that's no good. I was treading water. I was doing great for a while, and then just boom, a few bad trades would just crater my net account value, and it's not only damaging financially, but it's also damaging mentally. You start to doubt yourself as a trader. You start to not take good setups because you're just more afraid of these big losses than you are excited for the potential wins. And this is like a super, super toxic mindset to be in. And it was a big turning point for me to kind of get out of that rut and realize, hey, my emotions are going to fluctuate. My trades are going to fluctuate. What I need is stability and consistency in my framework and in my risk management specifically. And more specifically than just risk management, that position sizing. Because even if I'm managing trades perfectly, if my position sizing was off, I'm setting myself up for failure. So we see this compound interest chart. This is what a good trader's portfolio will look like. This is what a bad trader's portfolio could have to encounter. So let's look at this chart here. We have the percent loss of a position, and then the percent gain needed to break even. So if we keep our losses capped to 10% or so, then we only need 11% to break even again. If we have wider stops and it's a 20%, all of a sudden we need 25%. See, it's already starting to differentiate, to decouple, so to speak. And it just gets worse and worse as you keep going. So 30% drawdown requires a 43% gain to recover. A 40% drawdown, 67. See how it's getting exponentially bigger here? If you draw down 50%, you need a 100% winner. You need to bag something just to get back to break even. So this is kind of a concept. It was really illustrating the concept of risk management, because if you take big drawdowns, you have to outperform. You have to really lock in, and it's just not conducive to long-term success. Let's keep going just to prove this point a little more. If you draw down 60%, you need 150% gains. 70%, 233. If you draw down 90%, you need a miracle to recover. And so we are not in the business of hunting for miracles. We are in the business of doing this. Nice smooth equity curve. We're going to build off our gainers and just keep on working that up there. So let's talk about some golden rules here. I think that there are two simple rules, and you can choose which to follow based on, you can self-critique, and if you're a beginner, if you're more experienced. I will not make that decision for you. That's a very personal thing. But in general, these are the two baskets of trade management and position sizing that I would look at. You have the 1% rule for newer traders, and then you have the 2% rule. So let's talk about them. Here's the 1% rule. You never risk more than 1% of your account on any single trade. Really simple, really simple. I know that's not glamorous. It's not glamorous. And, it'll take a while. It'll take a while to build accounts, especially with a smaller account. But it's super, super important that you respect this, even if you have a small account. I don't care if you have a $5,000 account or a $100,000 account. By only risking 1%, you are setting yourself up for success, and you will just get more looks at stocks. You will get more opportunities. You will get the practice from the repetition of taking more trades in a structured and disciplined way. And that is where you'll get that graph that we talked about that's just ramping up and up and up. And I'll tell you right now, nobody expects the gains you can get by compounding small wins. It's really, really magical. It's the most magical thing about trading, where you don't have to make big wins. You just have to keep winning. And if you have a good system, you will keep winning. So it's really that simple. So for a $10,000 account, the maximum risk is $100 per trade. That simple. It really is that simple. This keeps you in the game long term. It prevents those times where you have big drawdowns and then you miss the opportunity to put that capital to work where it's best served. So if you're a new trader, never risk more than 1% of your account on any single trade. If you're a little more advanced, I think that it's okay to do this 2% trade rule. And this one is going to be riskier. It's also going to allow you to grow that compounding equity curve faster. So it provides consistent profitability still. That's our biggest thing. And, the rule of thumb that I've heard, and I think is a good, just that rule of thumb, is that if you are consistently profitable using the 1% rule for 6+ months, then you can start bumping that up. You're doubling your risk. You're also probably more than doubling your potential gains, because remember, we're only taking setups that have higher potential gains than drawdowns. That I'm blanking on the word, but you know what I'm saying. When the risk reward is 3-1, 2-1, 5-1, if you're able to pinpoint these setups, then you just have to stick to the system and it will work. So 1% rule, good for beginners. It'll take a little longer, but that's okay. It'll also take way longer to hurt yourself. And if you're a new trader, it's really about getting that screen time in, getting that time in the game, and building these skill sets. Because like I said, this is not an easy game, and 90% of traders fail. If you don't want to be that 90%, don't rush things. Don't rush things. Trade prop accounts, trade with Trade the Pool. That caps your risk. If you're trading your own money, 1% drawdown, get out of the trade. It will take you so long to blow up an account doing this that it's basically impossible. You could be a really bad trader, and it is possible, but I don't think any of you guys are really bad traders. I think that most of you have a pretty good skill set under your belt, and you just need a framework in which to let that thrive. So that is the 1% and 2% rules. I think it's super important that you guys stick to them, because that is really where the rubber meets the road. This is the most actionable part of this. If you take nothing else from this, just identify yourself in one of those two baskets and stick to those rules and see how your profits look at the end of a month or two. I think you'll be really pleased to see that you're not taking these big drawdowns. And when you get shaken out of the trade, and you do get stopped out, you lose out $100 on a $10,000 account. It frees up the mental and the actual capital to go into the next setup. And you'll have higher churn. You'll get more looks at the market, more base hits or at bats, so to speak. And you'll start getting those averages up, and it'll show in your profit and loss. So let's talk about some account size scaling techniques, because as your account does grow, the dollar risk increases, but the percent stays the same, right? So $10,000 account, we are risking $100. With a bigger account, we're going to be obviously ramping that up because it's based on the percentage. So this is where the compounding gains can really start to ramp up your overall net account value while containing your potential downside to a very manageable percentage. So 10,000 account, $100 risk. A $20,000 account, $200 risk. It's real simple. This is not complex stuff, but like many things in trading, the fundamentals and the non-complex, non-flashy stuff is where you actually make the money. When you are talking about quantitative systems or people at trading desks at big organizations, big institutions, they practice this stuff religiously because they have to, because it's their job. And maybe there's a lot more latitude, a lot more leeway that you might give yourself psychologically when you're trading your own money and it's not your main job, and you can always refund the account if you blow it. But I think that even with a small account, even with $1,000 account, practicing this risk management is what will get you to the point where you are treating this like a job, and where you are like essentially able to make a living off of just trading. It might take a few more years if you're starting with a lot less capital, but I've seen people do it, and it's the greatest thing ever to see somebody attain financial freedom through discipline. Because you didn't get lucky, you didn't strike it big, you didn't buy the latest meme coin, you're not all in on Fartcoin. Although Fartcoin does look pretty good right now, I'm not going to lie. I might buy some Fartcoin, but that's not the point of this. The point of this is that you can get there. Anybody can. I really truly believe that. I've seen people that that I would not consider good traders or disciplined traders learn these skill sets in a relatively short time, a year or two, and start just absolutely cooking and becoming monsters at this. And I think that's why we all do this, right? We do this to attain financial independence, financial freedom, and to dictate the own course of our life in a world where there's a lot of external factors that we can't control. But this is something that we can absolutely control. And I think that it's really one of the best opportunities out there if you have the mindset for it, and you can cultivate that mindset. So let's get into the actual nuts and bolts of this. Let's get into some position sizing calculators. So we are going to use, for the sake of this, position size calculator that I use from TraderLion. They're a great company, great service. The tool itself is completely free. So you can just type in Trader Lion position size calculator and it'll pop right up. And if you'd like to look for something else, totally fine. Just look for simplicity, accuracy, and ideally offline capability is really nice. So there's some mobile apps as well. Don't have the names up right now, but they're going to be easy to find. And basically, since this is just a simple calculating tool, you don't need internet access, you don't need anything else. But just having this and allowing yourself to kind of frame the trades before you take them, it'll allow so much more mental space to actually focus on the setup itself. So let's go through a little practice session here. All right, here's the scenario. We have a $15,000 account. We are trading XYZ, which actually is a stock now. I think that's Square Block. Anyways, it's trading at 75. Our stop loss is 72. We're using that 1% rule in terms of our account size. So how big is this position going to be? I'm going to switch tabs real quick here and we can do this together. All right, here is our position size calculator. So let's pop this in. $15,000 account size. And what are we risking? $3 per share. Let's see. Let's fill in the rest here. Our entry point is 75. Symbol is XYZ. So this has real-time updating, so we can get the quote here. Let's see what it pulls up. Server responds with error. Oh no, the joys of doing it live. So the potential profit taking price is also very valid, and we can just put in the stop loss exit price right here as well. So let me pop over to the other tab here. Where is it? Bear with me, folks. There it is. Okay, $15,000 account size. XYZ is trading at $75, and we are stopping out at 72. So using the 1% rule, what do we get here? Let me go to full screen. So 1% of that 15,000 is the $150 risk. That is how much we are willing to lose on any given trade, which equates to the risk per share, 75 to 72, $3. So the position size is $150 divided by 3. That equals 50 shares. We can have 50 shares of this and respect this $150 drawdown at our stop level of $72. So our total investment is going to be 50 shares at $75, which amounts to $3,750. Oh, and I'm just hearing that we have a trade the pool calculator too. I'm sure Tim will be able to throw that link in the chat, and that's a great tool to use. I wasn't aware of this. Trade the pool just keeps giving and giving. I love this place. So that is going to be really helpful as well. It's right there. So I like Trader Lion, but I like Trade the Pool more. So let's go with theirs. So using this tool, we're able to very quickly and very easily just kind of do all this mental math for us. And it allows us to free up so much space for the next trade, for the current trade, and to just kind of generally what's the word I'm looking for? Assess the market conditions as a whole. I really do think this is an under acknowledged part of this, where there's something called decision fatigue. And this is a psychological concept where it doesn't matter who you are, it doesn't matter if you're the most seasoned trader in the world. If you have to make a ton of decisions, the future decisions that you make will be impaired. It's just a numbers thing. Everybody has a certain amount of a finite amount of decisions that they're able to process, even if they're simple little decisions, before they just get burnt out and they start it starts affecting the quality of their decision making. So anything we can do when we're entering a trade to free up those decisions and to free up that mental space, it's gonna pay dividends, because you won't encounter situations where it's maybe it's the afternoon session and you're like, man, I'm just too burnt out to do this. I just don't feel like I have enough confidence in my decision making at this point in the day to execute. And you'll find the more that you front load all of the work to any tools that you can, the better you'll be set up to take those trades later in the day, later in the week, where otherwise you may just let them go by just because, hey, there's always going to be too much to watch. We'll never catch every trade. But the more space we have, the more trades we'll catch. So I think that's super important there. And I want to talk about stop loss placement and position sizing and integrating those two. So stop losses determine your risk per share, and position size, it depends on that stop loss distance. So whenever you have a wider stop, you have to take smaller positions. Whenever you have a tighter stop, you can take larger positions. And remember, this is all in the framework of still capping your risk at that 1 or 2%, depending on your trading experience. So by doing this, you're really setting yourself up for success. It really is make or break in terms of this kind of stuff. I can't emphasize enough how much just changing my position sizing and nothing else in my system just allowed my profits to be so much more consistent. And my profit loss chart, it was implementing this tool was a massive volatility dampener, just like on stocks where they can get really wild. It's just unpredictable, right? And nobody wants unpredictability in their finances, right? So just smoothing that out. And yes, it does mean that I stopped making as insane gains on any one given day, but I wasn't taking those massive red days. I remember days where my account was down 5%, 8%. There was a minus 20% account day for me. And, you stack a few of those and the account's dead. So by doing this, you're able to really, really stop the bleeding much faster. You won't get drawn down and dragged down by trades where you just keep moving the goalposts and you keep saying, well, maybe I'll catch here. Maybe I'll catch here. Maybe I just add in here. Maybe I don't respect my stop and instead I add and just pray for that gain. Because you look at that chart that we looked at before, if you're down 20% on a stock, you need 25% to get up. So then you add in, all of a sudden you're doubling your exposure. You're not at 2%, you're at 4%. What if it drops another 10% overnight on you? All of a sudden, then you're looking at like a 36 or what is it, a 43% move to the upside that you'll need to reclaim that. So this is where you get into hoping and praying. And remember what we talked about. Hope is not a strategy. Math is a strategy. So we stick to the math. We do not expect the unexpected to happen. We do not expect miracles, because that's just not the game we're playing. I'm seeing that it's just my face showing here. So let me pop my thing back up. I'm going to have to restart that there in StreamYard. Thanks for bearing with me. Next week, my replacement monitor will be in, and I'll have another screen to watch the chat and everything. So thanks for bearing with me here momentarily. There it goes. All right. So stop loss placement and sizing integration. We talked about, let's see. Okay. This was the screen that should have been up while I was describing that, but it's pretty straightforward here. Basically exactly what I said. Wider stops equal smaller positions, tighter stops equal larger positions. Going forward here, let's talk about portfolio heat management. So I think there's some really important rules here that'll really help set you up for success. And one of them, the most important one, is never have more than 6 to 8% of your account at risk across all trades. So what this means is that if you have 4 trades at 2% each, there's your 8% total. So then no matter what happens in the market, you are not risking more than an 8% drawdown, which still is no fun. Don't get me wrong. 8% is big. You need about a 9.5% move up to reclaim that 8%. But just imagine if we add 5% in each one of these trades. That's a 20% of your account at risk. Everything drops and stops you out because of some rogue headline or something. You are down, Oh man, I do not have math brain today, but I'll tell you what, it's a lot more than 8 or 9% that you have to make up. We're talking 25, 26, 27, something like that, you know? So that makes it a lot harder, and you're just setting yourself up for failure like that. I know it can seem kind of kind of pointless, or kind of like you're not accessing your potential leverage, but just overall this smooths out the equity curve so much that you will be shocked at how much more money you make by investing less in any given stock and overall. So there's another big factor here that we haven't talked about yet, and that is correlation. We have to consider if the equities that we are investing in or trading um, are highly correlated. So we can't risk all 8% on, we can't go like long Google, Apple, Meta, Netflix, because then if there's some, I don't know, maybe some I don't know what some interest rate decision or something that comes out of the blue. I've heard horror stories about surprise rate hikes or cuts just destroying people's positions. So if you are in correlated equities, then you're exponentiating your potential risk there. So how can we work with that? How can we manage the correlation management? So, like I said, it's bad to have four tech stocks because then they all have that correlated risk, and you want to have a kind of barbell approach to this. So often I will find myself in one or two tech stocks, and maybe something like energy or something like a commodity, something that won't move one to one with these tech stocks. So, for example, you could have tech, healthcare, energy, and utilities at 2% each. And then, no matter what market conditions you encounter on a given day, probably one of those is going to be doing all right, because remember, not that much money actually enters or leaves the stock market on any given day. Almost the entirety of the movement is flow between sectors, and money is shifting around to find where it can get the best returns for its investment. So because of this, diversifying will lead you to much, like I said again, a much smoother equity curve. And I think that's what we should all be targeting. So sector correlation, it affects real risk. It's pretty straightforward there. Let's talk about some common mistakes that people will often encounter here, because there's a decent amount. So we're going to go over a few of them in depth. The first is risking too much because you're too confident in a trade. So this is one that I've been very guilty of in the past. When I think that I have an A plus setup, I want to press that thing. I want to really press it. So what I have done in the past is sized up considerably, and I was right more often than I was wrong. But I did not make good money because it only took a couple of those times being wrong on an oversized position to set me back a month of consistent gains. And it's just a terrible feeling where you sit back and you look at your trades and say, "Hey, I took 7 great trades and I took 3 bad ones," and I'm like, it's a wash. That just feels really, really bad. So we always want to avoid any scenarios that are demoralizing and set us back. And I think one of the biggest ones is where your trading skills do not match up with your profit loss. You know, it's just such a bummer when you feel like you're outperforming on the setups that you're taking and identifying, but you're drastically underperforming where you should be in terms of actual money in the bank. So confidence does not eliminate risk. I don't care how confident you are, you will be wrong. It's all about being wrong in the right ways. Every trade gets the same position sizing because we are all about consistency. We're all about running the same thing. How would this affect us if we ran this 10,000 times, a million times, right? If we just kept doing this every single day and kept drilling it, are we going to be better off at the end of the day or not? And that's really what it comes down to. So that's our first mistake here. Our second is not adjusting position size for volatility. So this is where we talked about if you have a high volatility stock with high ATR, average true range moves, they move more on a given day. In those stocks, they need smaller position sizing. So that's where an ATR calculator can really come in handy as well. I highly recommend everybody mess around with that, or an ATR indicator on TradingView or your platform of choice. And what that'll allow you to do is kind of gauge, okay, this is the stock I want to trade. This is the average volatility. So that really does impact where you put your stops and your profit targets, right? So if you have a high volatility stock, you need those smaller positions. But if you have the low volatility stock, you can handle much larger sizes. So if you're trading something like healthcare, something like I don't know. I'm a big fan of defensive names like Altria or Philip Morris, something like that. And they do not move that drastically day to day. Something like CVS or UNH, although that's been ripping lately. Well, I guess until until today, the healthcare is having a bad day. But in general, these lower beta, lower volatility stocks, you can size up greater on them and still be within your risk parameters. So that's a pretty common mistake, and one that, again, I've experienced plenty of myself. So especially when you guys, I think it would be fair to classify you guys overall as relatively risk on, uh, traders who like those high flyers, like those momentum moves, like those small caps. And when you trade those, you got to practice this stuff. It's really, really important, especially when you get halts and all of this crazy stuff that can really throw your game off if you're not respecting your risk. So that's mistake number 2. Mistake number 3 here is averaging down without proper position sizing. So here's my general rule of thumb for averaging down. If you're going to do it, you better have thought about that before, and that was part of your plan. So maybe instead of allocating the full 2% to the position when you enter, you allocate 1%. And then if it goes down to a key level but holds and it's still within your risk parameters, then you can add that 0.5%. If it goes down to your make or break level, you can add the 0.5%. But that make or break level needs to have a real tight stop, because otherwise you're just digging yourself a hole, and you need to respect your overall risk for each trade, your overall percentage risk. So because of this, I think it's just kind of I want to say non-negotiable. Like, averaging down without a plan will just murder any trader. I've seen it happen so many times. Chad, I love you, but I'm going to use you as an example here real quick. A good friend of mine was in AEHR when it was in the 40s, and he was killing it. It went up to 50, 55, and then it started to drop. This was a parabolic mover. It went from like $5 to 50 in a year. And it was so easy to give back profit because he was just averaging down as time went on. And, nobody thinks that a stock is going to deflate 90%. But if it does, and you've been averaging down since 20% down, you're going to find yourself in a real big hole. And again, we refer back to that table that we showed about if you draw down 50%, you need an 100% gainer. And that is a lot to ask, especially when a stock has confirmed that it is in distribution. So just really important to not average down unless you have a game plan and you are, willing to accept the consequences, which could be significantly more severe than if you just stick to the regimented system. So as a blanket rule, stick to the system. Don't sway from it too much, because that's where you could really get hurt on those tail risks. So last common mistake here is ignoring position sizing on small accounts. So I get it. I've been there. I am not a very wealthy person in general. I got into this late and I'm making up for lost time. But that urge to be riskier because you have less capital is super damaging, and overall has set me back far more than it would have if I just stuck to my rules and let the rules compound my gains over time. So you got to respect the position sizing, regardless on whether you're a small account, medium account, large account. It doesn't matter, because this is all percentage based and it's all mathematical. This is just the optimal way to do it, more or less. Everybody might, or people might have different rules. It's relatively arbitrary, 1% and 2%, but the idea is you got to keep it way smaller than what many people would consider acceptable risk tolerance. And that will allow you to be wrong multiple times, even in a row, and not blow your account. Because at the end of the day, it's about staying in the game. It's not about the highest percent returns on any given day, week, or month. It's about being able to keep doing this and to keep extracting money from the ATM, which is the market. So even if you got an $1,000 account, still need to respect that 1% rule. It's going to be hard. You only have a 10% max risk. So you're probably going to be trading much smaller names or fractional shares, but you will still get the same amount of looks as a $100,000 account. You'll still get the same amount of at-bats. And as your account scales, which it will, the percentage rules scale with it. And so it'll keep giving you more and more room to play with bigger dollar stocks and to push this this advantage that you're gaining for yourself. So those, I think, are the most common mistakes. And now let's talk about position sizing in different market conditions. Because when you're in a bull market, you can use standard position sizing. But if you're in a bear market, you might consider reducing your positions to 0.5% instead of that 1%. This will allow you more chances of being wrong. And most importantly, it'll allow you to stay in the game until the market turns around, until you get better setups, higher quality setups, and you can start sizing up again. So I think this is a really big thing that great traders do. They adjust their position size with the market conditions. I'm a big Minervini style, Can Slim style, William O'Neill style, Jesse Livermore style trader, and they all do this. You know, when the iron is hot, you strike with your full position sizing, and you try to have those maximum numbers of positions working. So they'll often have 4 to 6 to 8 positions going at a time. And but you know, they still practice diligent risk management. And then when the market cools off and there aren't as many setups appearing, they will tone that down and they will only focus on the few that are working, because you know there's always a bull market somewhere, but you can make it way harder on yourself if you treat all market conditions as the same. So let's talk about building your position sizing routine here. It's pretty simple. So we've got step one. You're going to check your account balance, whatever that account is. I mean, obviously, that's how you're going to determine your risk percentage. That's step two. Determine that risk percentage. If you're a new trader, 1%. If you're a more experienced trader, 2%. If you are a rock star, maybe you can go to 3 to 5%, but then you're really playing with fire. So I would not recommend that. I don't do that myself. Then you identify your stop loss level, of course, and based on that, you have all the parameters you need to use one of these position sizing calculators to calculate your risk. After that, all you have to do is let it rip. Just got to pull the trigger and just let the math work for itself. You've done all the prerequisites. We've talked in the past weeks about how to identify setups and when to take them. So you follow those rules and those frameworks, and you implement this framework, and you keep on building that system out. So you keep doing that, you're going to make some money. I guarantee you. So let's talk about some key takeaways here, and then we'll get into some Q&A. Position sizing is so much more important than strategy. You do not need the best of the best strategy. You just need a strategy and very diligent position sizing, and you will make money. You can be wrong 7 out of 10 times, but if you're only taking 3-to-1 risk reward trades and you stick to your stop outs, you're going to make money overall. It's just math, guys. It's just math. So 1% rule, great for beginners. 2% rule, great for more experienced traders. 3+, never more than 5 if you're very, very good at this and been doing it a long time and really want to push it. But I don't even think that's a good idea. So that didn't even go on the slide. The takeaways, 1% or 2%. So always calculate before you trade and never exceed 6 to 8% of your portfolio overall, because you're just exposing yourself to too much potential downside on any one bad day, bad catalyst, any one tail risk. We do not want to get wiped out if a black swan event comes. We want to take a 8% loss on a black swan and sit and watch on the sidelines and be ready to invest that 92% of capital where it can be best served. So that's what I got for you this week. Next week, we're going to be diving into one of my favorite parts of trading, and that's the psychology of everything. We're going to be doing a boot camp on all of the basics of trading psychology and how we can essentially leverage the innate tendencies of the human mind to best serve us instead of hurt us. Because the stock market overall, it preys on people's psychology. It absolutely will decimate traders that are operating off of fear and greed, and it will reward those that are operating off of discipline. So we're going to be talking about why smart people often fail at trading. This was me for the first couple of years of my career. I try not to toot my horn too much, but I'm not dumb. But I am very human and very prone to psychological flaws. And, I've had to really iron those out, and it's paid dividends. And I believe anybody can do that if I can do that. But it's a trap for smart people, because we get really good at convincing ourselves that we're the exception to these rules. We are not. Nobody is. That's why they're rules. So doing all this will help build an unshakable foundation going forward, and you will just have that discipline, which will allow you to capitalize on the setups and on the trades and, get that equity curve moving in the right direction. So that's what's on tap next week. And I need to get some water and use the restroom. So I'm going to hop off for about 30 seconds, 2 minutes, something like that. And I'd love to see you guys pop some questions in the chat. I see some starred questions already, so we're going to get into those. And yeah, then we'll tackle whatever we can for the rest of the session. I have 23 minutes for you guys, and I'm looking forward to spending them however you guys would like to, whatever you'd like to bring up to the table here. So give me 1 second and I'll be right back. Thanks so much, guys. All right, all right, all right. We are back, everybody. We are back. Let's see. We got some starred questions here. I'm going to take it from the top and Let's see. Okay, first off, I am seeing some chart-specific questions. I appreciate those, but I am going to be focusing on the stuff that is focused on position sizing first. So any questions like that, highly appreciated. And then if we have time, we will talk about everything else too. But I want to. I'm working on being a little more disciplined in terms of these Q&As because in terms of replayability and rewatch value, I want people who are here for position sizing to get position sizing focused information and, and so on, depending on the topic. So as always, thank you for all your questions. I see you, Darren. I see you, DJ. We will get to those for sure. So first off, we have CJD9532. What about profit taking? I always get greedy after seeing some profit and never close my position and hope that it will go more upside. This is a great question. So there are a few things we can talk about, and I think this honestly deserves its own full presentation, full webinar, because there's a lot of ways to manage positions, and I think that that's a little bit of a different focus than just position sizing. So for profit taking, there's a few tools that I love to use. One is higher time frame targets. So those high volume profile nodes, those areas where if you're breaking out of a base, you're going to be overall targeting, it to cut through the low liquidity sections, the low liquidity nodes on the volume profile and hit and basically gravitate, magnetize up towards that next high volume node. So whenever you encounter one of those high volume nodes, it is always a good idea to take profit. And what will often happen is you'll see price digestion there. You'll see flagging occur. You will see mixed tape where buyers meet significant sellers, where sellers, try to push it down and buyers reaccumulate up into this key new level. So that is a great area to sell some on the upside. And what that does is it allows you more latitude in management of the trade going forward. You can take a little bit more drawdown on your remaining runner position because you're essentially de-risking by selling into strength. That's something that's always hard to do psychologically, to sell into strength, because like you said, you always hope that it will go to more upside. And it's always tricky to identify the change in tape in terms of when that selling does start to occur. And, there are often small pullbacks on the big move up, and you don't want to get shaken out there, right? And so if you've held through those, then you start to see what looks like another small pullback. It can be very hard to pull the trigger and, ring the register, so to speak, if you believe that this is just another small pullback. So that's where these high time frame targets really help out. And I think that's a big one. You can also do this on a smaller scale, right? In the midst of a breakout, you can sell some on these the high volume areas of the day. So usually the morning session, you can take some profit off at ATR targets, especially if it exceeds ATR targets. And then as price comes back down to shorter term moving averages, and we see that the uptrend is holding, you can choose to either add that capital back in, so keeping the same risk level, or you can just, be more confident in your runners and, not have to worry about them as much. So there's more than one ways to look at this. But for me personally, I love trimming my swings into these higher levels and into these outsized moves on a daily level, and just expecting normal price fluctuation. Not anything, even the most powerful stocks are going to go up in a complete straight line unless you got a complete squeeze situation. It's almost always better to sell into strength and to keep selling into strength in small amounts. And then if it's a real winner at one of these major levels, like the next big high volume node, it will flag out and start to base out, productively, and you can re-enter there as a new setup with a new risk. So by doing this, I think it's a really good just baseline system that will allow you to lock in profits as a trade works for you and to not get killed if it goes against you sharply. For example, my HIMS trade, on Trader TV, I've had to talk about it 2 weeks in a row. It's been my worst trade of the year, but you know what? I am proud of it because you know what? What can you do? You take a stab at something that looks good, you take profit as it starts to work, and then if it blows up on you, like HIMS absolutely did blow up on me, I was down about 20% on a trade because it gapped my stop, which is terrible. It sucks. But, at the end of the day, I took profit when I was up 30% a portion of the position. So overall, it was a loss, but it didn't kill me. I still had a green month because of coin and a few other big winners, and it really allowed me to think clearly and say, hey, I'm not going to go down with the ship. I don't know what the fundamentals are anymore. They lost Wegovy. That was a huge aspect of their business plan. And now if it sets up again, I'll take another stab, because you know what? It didn't hurt me so bad that I'm not willing to entertain the possibility of another position. So great question, CJD. I hope that helps answer it. Electronic Mail says, where do you get your signals from? That's a tough one. I mean, I use a lot of different scanners for swing trades. I'm a big VCP guy. I have a VCP scanner. For more intraday or momentum-based plays, I will look at the highest movers, highest percent movers. Highest volume is another really big one. I love seeing stocks that have a big influx of volume. That tells me that the traders are looking at it. It's on their radars, and it should have a good follow through on the movement, whether it's to the upside or downside. So that's definitely something to consider. This is another one that really deserves its own webinar, because there's so many ways that you can, or so many different systems you can follow, scanners, screeners that you can look into. And I think it's a little bit too broad for me to really tackle in depth right now. But that would be my quick answer. I use VCP scanners for swing trades. I use highest volume traded in the pre-market, or highest percent move in the pre-market, to look for these high flyers and these momentum plays, especially on small cap trades. Let's see. Funded account companies limit our daily loss to 3%, 4%, 5%. How can one handle this and become successful? Great question, Isaac. I think the biggest crux here is, again, position sizing. If we are sizing small enough that these on any one trade, then these 3 to 4 to 5% drawdowns simply won't occur, right? Because if we're doing the 1% rule, the worst we can lose on any given day, if we get stopped out of all 4 of our positions, is 4%. And yeah, maybe that will be the daily loss, but hey, that's probably a good thing, to be honest. So I think that don't look at these daily loss limits as a negative. Look at them as something that are there to protect you, because believe it or not, they are there to protect you. They are not here for the trading companies to make more money off of you. They really do encourage healthy trading and longevity to your system. So yeah, it's a good thing. It's a good thing. Let's see. All right, what else we got? We got Captain Sunshine, and I see you too, Rebecca. That'll just take a little bit more time, so I want to get to some of the easier questions first, and then we can spend more time on the advanced ones if we have time, for sure. And since I do have a hard out here in 10 minutes, unfortunately, I have an important appointment I need to go to. If I do not get to any of these, I will be in Discord all weekend, and I will show the full example of a share size calculator, how I use them, and we'll use the trade the pool calculator for that as well. So on to Captain Sunshine's question here. How does sizing/stop out system apply to trades that require setup time? I.e., you notice large call buys for a shit company like ENVX. Yo, hold on. I love this company. But yes, they are a shitty company sometimes. So you notice the large call buys for a shit company like an ENVX, Enovix, and you position, but it takes a week to run. Wouldn't you miss? So this is tricky, right? There are a couple factors here, I would say. First off, it's great that you're watching Flow. I use Flow as a huge part of my system. We got a bunch of traders in my room that did catch the CNVX move. Shout out to Cape Cod in my server there. So we did notice those call flows for sure. And as you might have noticed, I think there were August expiry 15 strike calls. They were entered at about 0.5 each, and they knifed to 0.3-ish, I want to say, before exploding today. I think they were trading for about $1, something like that. So what can we do to basically keep us in the trade through the chop before this breakout? I think the biggest thing is to not trade the initial breakout. So there are often false starts, right? So what you can do is say, I think Enovix is basing for a big move. I will not take the first move on that looks like it's breaking the range. I will either wait for a back test of the range or wait for the range to break, come down and catch on some level, even if it's not a complete back test. And what I'd really like to focus on, I think the biggest thing is sizing small enough that as long as the base holds, you're still in that position. It won't stop you out. So again, this is another thing, another just aspect of that on higher volatility stocks. Innovix is definitely one of those. You got to size smaller. If you size smaller, you won't get stopped out before that breakout. If you size too big, and trust me, I've done this many times, even on this name in particular, you will get stopped out on a liquidity raid, usually a deep cut into the base or maybe a swift undercut of the base, and then you will miss the initial move. What you can also do is say, hey, I got stopped out. But if it comes back and it was a liquidity raid, then you enter on the reclaim of the key base level and you put your stop under that wick. And then you have your stop size, right? From that liquidity raid bottom to the base break, the key level reclaim where you entered, and you calculate based on that percentage, and you find out how many shares you can have in this trade and respect that risk. That is what I would say. I hope you did catch the NVX move, and I think it does have legs, so that's on my radar too. I did not catch it myself, so let's see. What makes a high percent mover look promising, and what is a VCP scanner? Great question. So a high percent mover will look promising if it looks like it is breaking a major base range and it wants to continue higher. So that would look like a surge on high volume through a key level, and then constructive price action from there. So maybe pre-market, a stock, a small cap stock breaks out. It's got a crazy catalyst. It's got a small float. It's getting a ton of pressure. It's really cooking the shorts. So what I would like to see is that large, usually pre-market move, have a slight retrace, but start to flag out and base and look constructively there. So in general, I generally mostly trade large cap stocks. So it's kind of, it's taken some adjustment to essentially figure out which of these moves have continuation volume and continuation legs. But in general, what you're looking for is the big stick up, then constructive price action, and basically buyers stepping in earlier and earlier, and shares drying out, supply drying out at the new accepted level. We're always looking for price acceptance at a given level. And if we get price acceptance, eventually the buyers will outpace the sellers. There will be no more people willing to sell at this price level because they're all bullish and think it's going higher. And the bulls will be more and more willing to buy at a slightly higher level. And that's what's going to drive that next leg up. In terms of what is a VCP scanner, so that's a volatility contraction pattern scanner. You can search, I'm sorry, that's my alert, letting me know that I do have to head out in a few minutes here. What you can do is you can search trade the pool VCP or trade the pool volatility contraction pattern. And I did a whole webinar on that, and it goes over exactly what the pattern is, how to trade it, and probably most relevantly for you, how to screen for it yourself. So I'm all about teaching people how to fish here, So this is how I fish. It's a great system. Mark Minervini is the one who pioneered it, so to speak. Highly recommend you check out his work. He has some great books on it as well, and it's really good stuff. Hey, MXD, good to see you in here, brother. Let's see. How do you handle swing trades where you get a move sooner than expected? I find that when I leave runners, I just end up burning profit instead of taking gains and moving on to the next trade. This is a great question, and it's one that I'm still honing my system on as well. MXD, I know you trade a lot of options, so that kind of makes it a much trickier question, right? In general, I think the same basic rules apply, where we want to sell into strength, and especially with options, we want to sell into that gamma thrust, where there's a rapid repricing of the potentiality of a stock to reach the strike based on the expansion move. So whenever you get that expansion move, it's always a good idea to lock in profits. It's always a good idea to free roll trades at 100%. I don't care how confident you are in them. I believe, based on watching you trade, you probably do all of this already. So I think it's just about kind of honing in a little bit more, and just being a little more diligent on taking profits faster and leaving smaller runners, and then being willing to add back into the runners. If you have 5 contracts, you sell 4 when you get the big gamma thrust. You're sitting on great profits there. And then your last contract craters, it goes to half its value. Maybe you stop out and maybe you re-enter with the 1/5 capital of that runner into a contract that is more reasonable now. So maybe the move was you are in a 15 strike monthly, stock's at 10, it surges to 13, and your contracts are up big because all of a sudden it's a lot more likely that we hit that 15. Well, you take the money, you maybe leave one runner, the runner drops, and instead of re-entering a 15, maybe you get a 14 strike or a 13 strike, and you just play for that retest of the swing high. And then if that works, you can continue rolling up with profit. I think the biggest thing for options in particular is to roll up as you go. So once you're near in the money, just take the money, wait for it to accept price at this current level. As you do that, the contracts are going to deplete in value as theta starts to eat them, and then you will get nice entries on the next strike up, essentially when it's ready to make that next move. Tim asking, what is a good time frame? Excellent question, and it really depends on your trade horizon. If you're a swing trader, I look at the daily and weekly charts primarily, and then I'll enter on the 1 hour and 4 hour charts primarily. Once I have my levels based on that 1 hour and 4 hour, often I will hone into like a 15-minute chart to really try to pinpoint levels and pinpoint an entry. But I think those are your main time frames: the 15-minute, the hourly, the 4 hour, and then daily and weekly to kind of overall frame the trade. If you are a scalper, then you're looking at the 15-minute and the hourly primarily, still within the context of your daily and weekly framing. And then you're going to be entering on a 5-minute, 3-minute, 1 minute, something shorter term than a 15-minute chart. So it's a tough question because it totally depends on your trading style. For me, I'm primarily a swing trader. So for me, I love those hourly charts. I love the 15-minute charts to enter on. And it's always in the context of a 4 hour, a daily, and a weekly as well. My boy Fast Eddie saying, how do you factor in sizing up into your risk management calculations? Is it factored into your initial calculation, or is it something you calculate as you're in the trade? Great question. So this is factored in beforehand. So we are using things like ATR and general price action of a chart, saying like, okay, this is how much it moves on average on a given day, a given week. And we're using that volatility to hone in on our accepted stop out level, and based on that stop out level, we're going to be taking a smaller number of shares using those profit share calculators, position size calculators. And we are going to use all that information to inform that. We're going to feed that into the bot, and it'll tell us how many shares we are allowed to have. Awesome. So thank you guys. I know I missed a few questions here. Rebecca wanted us to go over a profit size calculator, share calculator example. What I'm going to do is this evening, I'm going to post one of those in Trade the Pool's Discord. I'm going to have screenshots walking through exactly what I would do or how I use it. And also, you guys are more than welcome to reach out if you have examples you'd like me to go over, and we can go over your examples as well. So I'm here for you guys. You guys are here for me. I love it. I appreciate 90 people watching still. That is amazing. You guys are awesome. I appreciate you spending the time with me here on a Wednesday afternoon. And I do have to head out, but I had a lot of fun here and hope you guys learned a little bit of something. Thank you so much, everybody. And we will be back next week for trading psychology. And then
wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money. It's going to be a great day. You guys know where you're at. wants 200, baby.
You ready to get back to the trading action?
You aim, you shoot, and make money.
It's going to be a great day. You guys know where you're at.
Good morning, everyone. Welcome back. Yeah, there's some gremlins in the machine, so sorry for the late start, but we're back. We're good to go. Hopefully you're hearing me fine. Everything's great here. So, yeah, what looks like pretty boring open so far. So we'll kind of go through that and see what happened in the market yesterday. We had Jay Powell come out. No one seemed to really care. Right? It was the minutes. It wasn't the full meeting. But you can see that kind of happened a little bit later in the day, a little bit of a down move and then up by the close. So, if you look at yesterday's daily candle, it was just kind of what we were talking about. We're saying, hey, the market gap's up like 3%. It's probably not the time that it's going to rip another 2-3% from the open. And we didn't really get much of a move. I'm happy that we actually sold off and then bounced later in the day. That to me is better than the alternative, which would have been some sort of like rally in the morning and then getting slapped there. So that's interesting to me. I actually brought some, because we were talking back and forth about, do you chase this move, right? Trying to kind of quell the FOMO of the super excitement of, the war is over or at least paused or whatever. So I did what I always do and just grabbed the numbers just to try to prove to everyone that it's just not a good idea to chase the market when it's up a little bit. So I've got some data to show you here. So we'll start with this chart right here. So this is the equity curve of what happens if you buy the Qs every time it's up 2.5% for more on the day, and you just hold for a day. So if you bought it, yesterday, and then you wanted to sell it today, this is what happens. This is right. This is the zero line. This is the you make no money line. And right, again, let's point it down. So on days like this, it's a 50-50 shot of whether or not you make or lose money. Just like if you look at the bottom here, this is where the distribution is. It's not like we are statistically down a lot, but we're both flat. It's actually up 51% of the time, if you want to be exact. But when you get volatile moves like this, they generally don't happen in nice, chill, smooth bull markets, which is what I'll show you here. You get volatility like this when the market is working through some things, I think is the best way to look at it, right? So if we take a look here, so this is the chart, and these are all the times, just every time you see, lines here on the chart, these are when you get this up move of 2%. So you got a lot in the 2022 bear market, right? You got a lot around the tariff tantrum. You're getting a lot around here. And if you keep going back, right, this is COVID, you got a whole bunch of, it's just not the time to be generally buying, because when you get large up moves, they were generally preceded by some sort of large down move. So on average, you were going to lose money. I did this 1 week out, 1 month out, 1 year out, pretty much the same story. Of course, you go 1 year out, there's like a 75% chance. You buy the Qs on any random day, there's a 75% chance you're making money in a year. So we can ignore that. But 1 week out, right, 2 days out, 3 days out, all of this stuff, there is no predictive value at all in buying these markets. And because they generally happen in bearish markets, you just don't want to randomly do that. So what do we do, right? So I just think we go back to kind of what we talked about yesterday, which is we just look at the most recent history and we see, it might rhyme, right? It doesn't have to be the exact same, but it might rhyme, in which we had that huge day and then we did nothing for like 2 weeks. Finally, when we broke out, that's like your confirmation move. It's like, okay, the market has digested whatever bad thing caused the down move that causes the huge up move after, and let's just hammer it through. And that's what I'm going to continue to look to do, which means you're going to continue to be in a buy the dip, sell the rip mode. And we can take a look at that. And that also leads me to just oil, in which, I don't even know if I consider this the big crack day that I was looking for that happened on silver, right? Silver imploded and just never came back. I can bring up that chart. It's down here, right? When it had this insane, huge down move, it's just been a mess ever since then. I haven't seen that in oil yet. It doesn't have to do this by any means, but it just gapped down yesterday and then started to rally back up. So oil may not be over. It may be kind of more of the same. I don't know. But when I look at it, I'm just saying, hey, Markets, they're choppy right now. There's no evidence that I can see that we're off to the races from this point on. So again, just play accordingly, right? Earnings is coming up, so we should just those are periods where you ignore the market entirely, because if earnings are doing well, then everything else is going to be just fine. There'll be more individual names to play, things like that, right? For me, when it comes to the market, I think things are just in a chill out type of mode. So we do have one guest that made it in. It wasn't Mitch, but we do have an airplane Jane. So we'll bring her on whenever they're ready to go there. And don't worry, we'll get everyone sorted out. Just sometimes computers happen. There we go, Jane. How's it going?
All right, I am good. I'm just getting my screen and everything all set up. Let me go ahead and share that.
Sure.
So we've got it. Let's see, right over here. That should be good. Right. So I was just setting up, basically looking at what we have as far as the bigger money levels. I can hear you in the background. Okay. Let's see. Did it work there? Was it working and I just disrupted it?
You disrupted it. You gave it a disrupt.
I'm sorry. It
That's
has
all right.
the screen share pop up. It continues to pop up when I'm trying to screen. Okay, see, it says screen shares requested. Boom, I'm not touching it. Okay, all right. So right now we've got, this was the old level. And if I click into it, this is the SPY, right? So we are beautifully above 657.31. So to me, it's showing bullish. I've got the inverse indicators. I don't know why that just popped up. You know, it's one of those days. SPXS, we'll go through the inverse indicators. Bullish signal to me when we've got our big money level way up here, and we are down below at 36. So SQQ, looking at it, we've got that there at 76.51. We are still below that today on the intraday. When we look at basically SRTY for the Russell and SDOW, we are well above on all of them. We've seen that the Russell has really accelerated. This was the January level. So we came in, we tested that just barely, almost there. So watching to see if we can really accelerate up above. On the SPY, we were testing the bigger money levels as well from before, but we still have major selling up at 692. So I can't be full bull until we get there. For the quarter so far, yes, we have seen that nice V-shaped bottom, the taco bottom. However, I'm with Michael on USO right now. I don't think that the sell-off is really complete because the bigger money is still down below for us. And when we are still above it, this could be a pause. This is just that temporary ceasefire. Oh, but not really. It's not everybody. It's just the US and Iran. That's it. But it's not. I think that the fear dropping simply means that everybody was selling their puts. They were the cautionary hedge to the downside is off. People are buying more, but they've taken off their protection. They are not looking at such a dramatic drop, which could be another rug pull in the making. When we look at the SPY, and we see that, yes, we've accelerated up to a resistance zone. However, this could be a bounce. This could be a bit of a dead cat bounce, and we could see a further drop to the downside. If we look at it on a weekly chart, we would see that, yes, we have that upward move, but we could have a third leg down for those Elliott waivers, that we've had a 1, a 2 up, and that third one could be happening next week. So we have a temporary ceasefire. This might not be done yet. This could be the bounce for which the big guys are going to sell into to drop it. So I think we need to see where we end up on Friday. Do we end up red on the week, or do we end up full, strong, bullish, super Mariboso? Isn't that what it's called? the full green candle for the week. All right, back to you, Michael.
Yeah, no, I like that, right? And it's just, we brought the data to show and, buying after a huge move like this is statistically not the move. And that's one of these moments where I just think cooler heads prevail. Even if we're wrong, even if the market rips for the rest of the week, I am still very content with my not chasing game plan, because I know I again just showed you guys the data. In the long run, chasing large up moves, expecting them to continue right away is a losing strategy. And just one kind of topic about how I think of trade signals. That was so bad. Buying when the Qs were up 2.5% or more was such a bad strategy that sometimes that makes you start thinking the other side, right? So now my brain's starting to turn of, okay, when the market gaps up and moves up that percent in a single day, the move, obviously, you'd lose 75% of your money if you bought and then expected to hold for a couple days after. Maybe there's something else, right? So maybe it's an inverse ETF signal. So just because it's very important that when you're looking at data like that, you remove your ego from it, regardless of what you think, because by staying open like that, sometimes if the conventional wisdom is so dead wrong, you can do the opposite of the conventional wisdom and make a whole bunch of money doing it. So now I'm exploring this idea of under what conditions do these gaps fail the fastest and the most, and then I can create a whole strategy where I'm going to be buying SQQQs into large moves, which would probably go well with a lot of the other stuff that I was doing. Like I mentioned, I've been long into this sell-off, right? So I'm very happy with my swing trading portfolio's performance. But if we are going to pull back just a little bit or chop around a little bit, there could be some short-term money to be made there. So always, right, have an idea, test it. If there's no edge one way or another, then that's fine. You just ignore it. But if there is so much negative edge, sometimes that's all you need to go, oh, well, right, maybe I should be doing the opposite because everyone was so jacked up yesterday. Maybe the place is to short. Maybe that's the move.
And I'm going to be the bull here. I'm going to say, yeah, I think we have structure here. And I think that's what's holding in. I think the market hasn't dropped nothing since yesterday. And I think that's a telling sign that, yeah, the bottom could be in here. We're not just dropping like we used to, right? Where we got the move up and then we got the quick move down. That's starting to change here. So if you
Well,
look at
and
the
just to be
structure,
clear, right? Both of these things can be true at the same time, right? It can
Yeah.
both be not a good idea to buy right now, and the bottom could be in, right? So,
Yeah.
and that's what I go back to the last great taco where the bottom was certainly in after he backed off of all the tariff stuff, but it was not a great idea to tie up your money right there in that moment. You would be better just to hang out and wait a little bit, or if you were going to buy something, you just have to be okay with, you can hang out for 2 weeks before something happens. Your stop's wide enough that you're not going to get jiggled out on any kind of move, right? There's a lot of ways to play it. So I'm just saying, right, both of these things can kind of exist at the same time.
Yeah, we have to see what happens here. I think it's going to be prudent to kind of watch in the day trade action today to see if you get the upside move, right? And one thing that I want to mention is that I know a lot of people are really staying bearish here. That's one thing that I kind of just don't agree with either. Like, I understand if you're waiting for pullbacks to jump in the market here, but at this point, what I'm seeing, right, what has changed? Well, we have a ceasefire, regardless if it's anything actual of material, it is a ceasefire, right? It's been mentioned. Look at the stock reaction. Don't look at what's in the news. The news is going to tell you the stuff that scares you, right? Well, look at the price action, right? Since, of course, Monday's action, right? And since we've gotten this news, where are we? We're way higher and barely pulling back, right? So if we were all the way back to where we were before this news, then yes, you can be concerned. But another thing about the straight, right? Everyone's like, oh no, but the straight's not open now. The straight's not open. Well, guess what happens when that news headline hits the tape if it is open today?
That means
Well,
oil will
oil
drop like a rock.
crumbles, right? Oil drops like a rock really fast, and the SPY goes ramping up fast. And this is why I think that, if you wait too long, you could miss out the trade completely. We could be 10 points, 20 points from here with just that mention alone. So I think that, who's not to say, I mean, if we made it from 650 to 670s with this, well, 20 points higher puts us really quickly up there towards 590s, and we're right back near all-time highs. Right. So
That's where I think alerts
hey.
are very important, so that if you get that alert, that the price action could come with a leak, right?
Yes.
And then you follow that price action. So I like to hear you say follow the price, not just the news, Mitch. I like that. I like that because it's true.
In this case, right? Because, and one of the things that I was saying yesterday was a lot of people were like, oh no, but oil's coming right back up. But look at the USO, right? I mean, how much have we really bounced, right? It's really small of a bounce compared to the drop, right? It's very measured, right? Until we get back above, let's say, a 50% retracement. Shout out to my man Steve out there. I know he's out there yelling about 50% somewhere. But until we get past, let's say, the 130 area, I won't be concerned about oil coming back at us, right? Because that straight opens, guess what? Kapow, right back down, right? This is right back through that 120. If anything, going right back towards, let's say, 115s and back towards like 110. So that's what I can see here. And a lot of times when oil starts to turn, what a telling sign to me was kind of the action that we have in the big boys. If you look at the big boys, what has been seeing, right? Well, you've been seeing how they've been coming down for a while now, not just based on this news, but have already topped. Right. So this tells me more and more, right? Unless I see XOM back at like 172, 175, then I can feel, we can go higher. But I think we've really started to crack this trend. Now we can start to take a look. The XLE is the top in, right? It looks exactly like the XOM chart, right? So to me, you could still have bounces, but as long as you don't get like past the rejection zones, like in the 60, well, then it's just a dead cat bouncing and now can come right back down, right? So trade ideas on this. You could look at XOM to the downside, right? There's no reason why you can't go after that, right? You just want to be looking for bounces going back towards, let's say, like a 4-hour support zone that can act as a resistance, which could be right above it, let's say the 160s today. We'll see if we get up there. I don't mind taking a short on XOM. It's actually a part of my playbook today that I didn't get into, but you get it right here, right? So we'll take a look at some other trade ideas. What are you guys looking at for some trade ideas going into the market? Anything that you guys are actually looking that can stick here? Some trends? Anything you guys got?
Well, we've got earnings for Simple, Constellation, and REL. So those are three that I looked at earlier this morning. So with the pre-market price action, I'd say, for REL, we are testing the highs up there. 1380 is what I'd look at. The bigger money is hanging around at 1344 from earnings. With Constellation, to me, I am a full-on bull with this one. Their earnings volume was down at 147, and the pre-market is well above that. So I'd say I'm watching Constellation for a bullish move today. If we break that 148 zone, then that's going to be bearish. And we've got Simple just fading away. Simple Foods down almost 30% now. The bigger money is down at $11. So looking to see if they can reclaim that. But many times, I don't know if you guys see this, but typically it'll be roughly a 3-day move before you see a reversal. I don't know if that has to do with old settlements of trade date +2. But typically you will see 3 days of directional move from what I've seen with earnings before you find a bottom or a top reversal. The tops tend to just pull back and continue, in my opinion, and then the bottoms will have a reversal. But typically it's after 3 days. So don't get sucked in catching that falling knife day one.
We will see what happens there. Yes, CEG definitely on my radar. I have TLN, so I'll be looking to see if that can get right back to the upside and see some independent power producers take off. Looks like let's go to what are you taking a look at, Michael? I see is that car on your screen, huh? What you looking at there,
Well, that is reached. So it's funny. I've got some mean reversion systems, and they're looking to buy a lot of oil stock
triggering?
today, and then looking to short car. So
couldn't make a new high. I tried to make a
uh,
new high this morning. It got up there to what in the pre-market? I think we got a little
oh, it
pre-market
was
spike there.
this from the systems yesterday was just. If, I wish I could get all trades to work like this. I know it'd never be possible, but yeah, it shorted right at 270, and then actually
Oh,
flipped long down there in the 230s. Uh, generally speaking, when you get that flip, you're generally wrong on one of them. But yeah, this one worked in both areas. But this is more of a swing type of thing where it's just reaching absolutely extreme overbought levels and massive volume spikes. So between the two of those, right, it's the system is just saying it's time. Time to take a short. Understand that anytime I short, it is quick because if whatever is causing this, right? It could persist. It could be a short squeeze. You want to be all the caveats, right? When things go up, it's way easier for them to go up than to go down. So just be careful. But yeah, if we can get pulls back into like even the 180s or something, that'd be just a wicked trade. You're talking like 100 points per. But yeah, I think it's time. I think it's time to take a short on this guy.
All right, we'll see what happens there. Let's keep it going, guys. A lot of action going on. It's about to be 9:30, and we will see. Will we get some more information from the truthster? We will
Also,
definitely.
looking at NVIDIA,
Ah,
NVIDIA has tested, it's sort of like ping pong leveling, back and forth between the 180 to 184 level.
that mines look
180,
good.
184.90 is where I see that we've got. So let me make this big screen right here, just because I already have it on this. So right here is where we have all of the quarters. We've got 5 quarters right there between 181 and 182.37. Most recent quarters up here. So is this the drop of testing the upward trend line from the bottom and then roll over? So still cautious on NVIDIA because this could just be a massive sell into this strength. Again, I don't really like NVIDIA full long-term swing until it's up above 194. Right now, we're still sort of stuck in this box. And to me, that's a no trade zone. It's going to be a headache, whiplash, annoyance. So that's what I'm seeing there for NVIDIA. So just be cautious, in my opinion, on NVIDIA if you are an NVIDIA trader. Maybe good butterflies right there for those that like to trade options.
Well, and that's I think the thing that's going to annoy everyone, right? So, to be clear, I'm not bearish. I don't think, unless trade, the war starts back up, I don't think we're going down. But I think what's going to frustrate the most amount of people is just the fact that they're getting all hyped up and they're not zoomed out and saying, even if we hold this well, we're just back inside the range we've been in for months, so it's not like with most kind of V bottoms, like if you look like the tariff tantrum, for example, I'll bring up here. If you look at this or COVID or something like that, you had like just almost an immediate drop and an immediate pop back up, right? So you had an uptrend and then just fell out of bed, then you came back up. This, you didn't have that preceding uptrend. You had preceding chop, right? So this was, if you took out the tariff tantrum, the market just kind of resumed on the same path that it wanted to do anyway, if this didn't exist. And it's the same here with COVID, right? COVID, we were having a wicked time. Everyone was doing great. This thing was just in a nice uptrend. We had the drop and then it just kind of resumed that trend. So if we're going to do the same thing where we are going to have the drop and then resume the trend, the trend was just chop, right? So there is a world where we're just re-entering that chop zone. I certainly hope that's not the case. It has not been fun to swing trade inside of this chop zone. But that's just, we have to prepare for that opportunity. So we did open up there. So we will just go into our 1 minute chart and watch the first couple minutes here and see what ends up happening.
We'll see what happens out the gates here, see what leads, what comes down. Healthcare on the downside out the gates here. Defensives pulling back a little bit. That'll give me some opportunity on some names. I know Costco was really strong yesterday. I'm looking to see if the value trade continues working. So that's one thing that I started seeing pick up yesterday that most didn't notice. Most were talking about, let's say, oil stocks, but I started to see the value trade pick up. So looking to see if value comes back into favor here. That could be XLP, right? You can look at the XLP to see if that starts actually coming into play here. I'll look to see if it can hold a little pullback and then get right back through the highs.
Also, the dollar, if you look at UUP, we are below the bigger money levels on UUP.
Know it.
Yeah, so 27.68, and we are at 27.55. So, or 27.42 now. So, looking to see that likely those commodities are going to rise. That they are ready to see oil go higher from this point. Gold, silver, the other metals as well. I know there was a big talk of uranium this morning as well, about enriching uranium with Iran. But we also had, what was it, JAG-U yesterday, that was that uranium trade stock.
Yeah, I
that
trade
is
ripping, guys.
that's failing a bit today.
Yeah,
Names
URA
like
is a
Light.
good one to watch. We're talking about Light, LIT.
Yeah, that one's doing really well right out the gates.
Oh yeah, Light, which was just recently added right into the
COHR.
S&P.
Yep.
And this is
COHR
lower
doing
fluid.
well. So I'm looking at stocks leading the SPY here. COHR, ALB doing well there. Sienna, Intel doing well. Intel had a nice spike right before the open there. A nice spike to 62. Now trying to recover back up through the 60s. That's an interesting chart. GLW, right? Like, I think there's so many people just stuck in like that there's no names that are continuing and having trends when there's definitely is, right? This is
Yeah,
where
those
it's
people
like,
you don't follow.
yeah, like don't like
They're just
look at
not
that
looking
chart
at
of
anything.
GLW. GLW is on a 52-week breakout and just ripping and rocking and rolling. It's just don't be stuck in the stocks that you might not know, right? Like look at this chart, right? Like that's a breakout, guys. Like, you know what I mean? Like I feel like too many people are like, "Oh no, there's no stocks going up in the market right now." Like maybe you're just not looking, dude. USAR really taking off for me, guys. That's a trade off the dollar, right? So you can look to trade those minerals if we still see the US dollar down here. Metals and minerals starting a nice little push right out the gates. NAK with a nice little lift. CRML is another name that I might take a shot in if I have the opportunity or the money to. That's actually getting a nice little ride right here, right out the gates here. Might take a shot there in CRML. See if I have the money.
So far, overall indices, right? So your GLW pulling back a bit there, and same with the Qs, a little bit of rip off the open, pulling back. Mag 7 is actually holding strong and up today. So a little bit of inverse of what we saw yesterday, in which it was, we were getting that Mag 7 weakness and kind of everything else, or everything else was strong. A little bit of the opposite, right? And this is why we always kind of shout these out off the open, because these are going to be, it's going to flip flop, right? Some day is going to be a Mag 7 day, your big cap tech. Some day is going to be nothing. And you can see that where, right, RSP is trying to kind of catch up here, but still down 0.15% on the day. And then the Mag 7 just already gapped up. So just watch those two carefully and just let's see what ends up happening there, right? So with the whole Mag 7 thing, you want to watch, like, I don't know, your Microsofts and maybe Tesla's. No, Microsoft's awful. Maybe Tesla holding in. Yeah, a little bit of a bounce there in Tesla. Had a huge rip this morning, so must be some news on the Tesla to keep an eye on.
All right, guys. Jumping into AU here, guys. I like gold.
I'm in AU
like
in a
gold.
swing. You know what? I'm
There
in
you
AU
go.
for a swing, PSLV and SLV. Once I saw that they flipped their position on ZSL, I was on there.
I
On
love
it.
gold.
Well, there goes Tesla. Yeah, breaking out the new highs here. So a little opening range.
Let's go.
Pop
Let's
here.
get some of these stocks to start rocking and rolling. And
Saying Michael Burry had an article on Tesla that makes me, or Palantir, that makes me want to buy it.
oh, that makes me want to short it if he's buying. Oh, look at the
No.
Palantir takedown.
Yeah,
It
that
dropped
makes
8%
Wow.
yesterday. It's dropping
Yeah.
fast. No. That is a no
makes
touch,
me
man. I'm
wanna
telling
buy.
you, Palantir is going right back down. This is a stock that so many people think, oh,
Hold
but the
on.
war is here. The war
Hold
is
on.
here. This stock is coming back. No,
Hold
that
on.
stock is not coming
It
back. That
just
stock
hit
is.
a bigger money level of 135.45. Let's see if it rebounds here.
Look at the structure, guys. That structure on that chart just looks exactly like what you see on a stock that has broken,
And
rejected the
yeah,
highs, and going right back down. Right. So
Yeah, it's
I would say
IVG, right?
one,
It's
yeah,
a big component of IVG, right? So it's going to move with IVG. But yeah, that just makes me wonder. That guy's just wrong so much,
but
right?
he was long it at one point, right? So
yeah.
I think
We've
he's
also
doing
got
the smart move here,
earnings
going
to
short it.
watch, right? So we've got to watch those earnings because we're coming into the earnings season. The easy gap fills and gap and goes. So I think that's the easy volatility while we have maybe a pause for the CPI data coming out. Is there a
Right, little
link?
lift there.
Mitch, do you have that link for the CPI show?
Yeah, that's for tomorrow. We'll get to the action there. We'll talk a little bit more about this coming up in just a little bit here. But we are going to be doing an inflationary data show tomorrow, guys. So don't miss it. Of course, it's going to be starting at 8 a.m. So you guys can come in here a little bit earlier and see some action live.
Well, what's wild is that we had core PCE and like GDP and like a whole bunch of
TLN
numbers
ripping.
today,
Let's go.
and the market just didn't care. Just didn't. There's one thing that we're focused on right now, and that's this friggin' straight. And then yeah, look at the SPY here off the
The
open. So just be
industrials.
careful. Just nothing.
Industrials are looking really, guys. I want you guys to start paying attention to the things that work on oil, and pay attention to how they're reacting to this oil news. They're not going to just rip these stocks for no reason, right? Railroads are ripping higher, right? Farm and heavy construction ripping higher. That tells me oil is coming down, baby. Stop stressing so
Well,
much, man. XLI is a leading
no
indicator
one's,
there.
no one's stressing.
The
Yeah,
industrial
everyone's just
trade.
playing their
No, I'm
playing
talking
their
about like
strat. Right?
I'm talking about what you're seeing out there. There's so many people out there on Twitter right now that are just like,
Oh, you're
no, I didn't get any of that rip, so I'm gonna get into my real bearish shoes here.
you're following the wrong people. Then I'd say
No, I'm
just
telling
I don't
you,
know about that.
the
With the
feed,
dollar dropping, I think oil's going to continue higher.
the feed, man, the feed just shows it
you're
out there, guys.
wrong.
I might cut
See,
Bitcoin here.
yeah, that's why I follow.
Everything else is ripping. Everything else is ripping. Yeah, I'm gonna
Nice
cut
trade there,
Bitcoin.
Snowman on
It can still come
Simple.
back up, but I'm out of
follow
Bitcoin right now
technicians
for the
there,
short
right?
term.
Yeah, Simple, they flipped their position bigger money down to 1047. So that's a nice trade.
I got TLN ripping higher, so that's going to help your CEG trade that you were talking about. So we'll see if that can go in here. It actually is looking really nice here. Look at the rip on CEG. Mwah. Independent power producers looking really good there. CRML looking good there too. Now I can grab it now that I got out of my Bitcoin trade. So
Constellation up 8 points from open.
oh, that's a little bit too higher now. I was looking at that at like 870s CRML. But that's looking really good, guys. TLN going in the green there. USAR really ripping up there for me. Going to continue to ride those trades that are doing well. Metals and minerals really kind of taking off there now, up 0.76. You got other names like TMQ going higher, right? I talked about this trade, guys. This is the dollar coming down trade, right? Look at this nice rip there, right? Another stock up 5%. UAMY up 3%. So that's another one that I can maybe come after today. I might try to have to come after this one, UAMY, of course. I like this chart too. It's not a bad looking chart off the weekly.
There's the USO watching this just opening range break. Looks like it's starting to. It's just been battling this low. Kind of no traction there on either side of things. See if it. Right, it seems like a do or die level right here, right? If it breaks here, away we go. If it can bounce from here, I don't know. We can hold a little bit today.
I'm telling you, I think there's just too much. XLI really strong here now, starting to get going. I'm looking at farm and heavy construction really starting to take off there, guys. I'm just mad I don't have Cat or D or one of these names because I should have just been
Ooh.
taking the monthly low there. If you would have took the monthly chart on Cat, you would be literally like in a prime position, right? So like you looking back, hindsight 2020, that 700 we were looking at for the rip, it's almost at 800 already. Cat doesn't lie to you, man. Cat knows about that oil price. And there's a reason why it was being held back, right? It was being held back because of oil prices. One of the best stocks of the year. It came down, but really, how much did it come down? Very measured move. Now look at it; it's almost breaking a new high. So Caterpillar, just skyrocketing. And then what happened yesterday? The lemmings came in. They started to upgrade Deere overnight, right? Well, why are they upgrading it? Well, because the oil price changed. Is it because they weren't thinking about upgrading it? Probably they were probably going to upgrade this 2 or 3 weeks ago, and then they were like, oh crap, the war. Hold on a second. Let me hold this report for 2 or 3 weeks, and then I'll put it out when the war starts changing tunes here. And boom, Deere starting to go higher. ETN, another name to look at in this space. And this is why I say you look at the industrial space. It's not going to lie to us, right? Because it really is dependent on oil. Look at this rip higher. These are the trades that I'm telling you guys they're coming back to. It seems to me like they're going back to the trades that were working prior to the war in February. What was those trades? Those were industrial trades that were going higher. Those were value trades that were going higher. It wasn't the tech trade, right? It wasn't the Mag 7. So I'm actually not even leaning towards that side. I'm looking to see exactly what was working continue to come back and work. Why are the AI names up, right? Those COHRs, right? The names that were working continuing to work. WDC made a new all-time high yesterday. So this is why I'm like just trying to stick to the stocks that are working, right? Utilities up
you
higher,
see
independent power producers ripping.
silver there, Jane?
Yep.
The dollar, man, dollar down. It's gonna help it. Silver looks
Ripping,
good. SLV
ripping,
looks
I
great.
know. I know. I'm
That's why I
loving
like
it.
gold. That's why I love gold.
And the Mag 7 has been it's been doing great, right? So it's definitely been this kind of big cap tech leading the market here, right? Tesla had a huge rip there. We talked about Nvidia earlier. That one looks like it's making new highs after a pretty decent little gap, right? It had crazy pre-market action, but holding on nicely there. Right? Apple's been, and Microsoft, I think, has been the laggard here.
VidX might have cut me out right
Yeah.
at the bottom there, and now it's starting to come back. Do I just jump right back in? Sometimes it's like that.
Mr.
You got to take the
Sassy.
small haircut, get right back in.
Yeah, so Microsoft there's been for sure the lagging of the Mag 7. So depending on
starting to push.
right, if you want to chase the leader or the laggard, and the leader kind of looks like it's Tesla trying to give it a good shot here. And I know there was some Amazon news as
Tech
well.
starting to lead.
That one-
I
Semiconductor
have to tell
equipment.
you, in driving 95 down, you know how many Amazon trucks I saw? It was not Target, it was not Walmart, it was Amazon trucks all the time that I saw on the highway. So to me, that means it's a leader just based off of the number of trucks that I saw driving on the highway.
Yeah, it ain't going away.
Every day, every friggin'. I feel bad because I live out in
Space
the middle of
stocks
the
doing
woods,
well, guys.
and I got a huge driveway and then crazy dogs. But yeah, every day, it's cheaper to buy from there. Yeah, ASTS holding up nicely here.
Yeah, I'm looking for Rocket Lab VWAP recovery here. A little pullback there in
TPL. What's a
USAR.
TPL?
For that to hold. I want it to break 17 today. Breaking 17s could be a big win there for me in USAR.
Whatever a TPL is, bought some of that from the swing side of things. I usually don't look at my swing account too much, but it was pinging me because I'm running out of buying power.
KLB trying to recover here. Might take a shot on that one. Looking to see if space stocks can move today.
So Texas Pacific Land Corporation. Man, that sounds boring, but yeah. Just buying the pullback. Strong stock pulling back.
Scott Q showing up again on my gainers list, so that means that stock's making a move again. Looking to potentially buy Bitcoin again. It did cut me out right at the bottom today, so it was a very small cutout though. I think I was being wise to cut it out at least early in the day just in case it didn't go into free fall. But if it recovers back, I might want some action, especially the way the SPY is looking right now. The Qs are looking good. This is what I talked about. They might just start to bring this trade away from us. So you can see how the hourlies are holding so well on the SPY. This is where I think, people yesterday were kind of freaking out, but the SPY hourly just looks pretty. Really, really great hold of support there on the SPY. If the hourlies go, yeah, you can start to look for further time frame pullbacks, but you can see it on the SPY. I'll show you guys it right here. It's just clear as day, right?
Yeah,
On the SPY, right? The
we
levels
also
are
have
clear.
a bit of a bull flag there. Yep. If you pull it back, zoom out a little bit there, Mitch.
That's it. It's right there. I mean, it's
Yeah.
just this trend line from here, and that's what I'm looking at, guys. I'm trying to keep it just price action focused, not even trying to determine what the next move is. Just look at this. Look how every time you're coming back into here, it's a buy zone. It hasn't been a selling zone yet, and now this is that push up, right? You're having that rule of three. You're broken up above it. You held the pullback. So right now, we hold 674s. I'm in the bull camp.
Well, what's interesting is that this is happening at the same time oil's hitting new highs a day, right? There's been
this is the
right? So
and what's going to happen there? So something's going to happen. I talked about it on my Twitter, Michael. That's exactly what I said. I said something's going to happen. What's going to break first? Is it the SPY going upward, or is it oil all of a sudden just push down? Right?
Or right? Or does this correlation just break? That's the thing, is that we've had scenarios before where oil goes up and stocks.
It's usually headlines though that break those quick correlation couplings.
People need to remember that the whole energy sector in the S&P 500 is 3%. That's it, right? It's it's one of those things that it trickles down and affects everything eventually. Maybe I don't even there's argument that it's right in the U.S. I don't know, things could be different, but yeah, just to see the correlation flip. And it's just one of those things that just shows that if the market was just as easy as oil down, stocks up, we'd all be rich, right? It's just not going to work like that.
Unemployment claims came in higher, and we had price index flat with the GDP quarter for quarter down at 0.5% instead of 0.7. So it is, we're seeing maybe a bit of slowdown and positioning today. We are an inside day, which is going to be harder to trade. We got to get outside of yesterday's high for it to be that big bullish rip, in my opinion.
Yeah. Well, I talk about it all the time. There's so many systems traders that's like a hard and fast rule. Is start trading if we are above yesterday's high or below yesterday's low. But if you're inside yesterday's range, just stop, right? And so if you go to my chart here, you can just see how inconsequential these days have been. The gap happened, and so far we're just chopping. So very simple thing to do if you're one that's, you're trading S&P 500 names, or you want to trade the indexes because of the liquidity. You just mark yesterday's high and yesterday's low, and you say, okay, let's see what happens if we react at those levels. Right now, today's range has been kind of microscopic here. We just haven't really moved too much at all. So we will at some point, right? We talk about this where it's the market goes through periods of volatility contraction and then volatility expansion. We had the volatility expansion when we had this massive gap up, and that was the expansion. So maybe we're just going to go through a little period of contraction and then expansion again, right? So because the indexes are not doing anything, it's time to look under the hood, right? We're talking about silver ripping, Mag 7 doing much better than the overall market, IVG tanking, right? There's areas to look at. You just have to go and find them, right? Software just getting pummeled.
I'm just laughing because there's so many money managers that were like, oh no, but software.
Yeah, they're not
Dude,
swing
there's
traders though, right? So like
it,
you can't laugh at them until you go out a year or two.
dude,
They're
I
not.
can still no, I can still laugh at you if you buy at a dumb price. If you just buying just because you're just like, oh, I'm gonna buy here and go underwater 30%, but then in 2 years from now, I'm gonna be up 10%, bro. I still think it's a horrible trade.
Yeah, well, if you do that, you should be fired as a money manager. In that
You know what I
hypothetical,
mean? Like,
generally speaking, what they'll do is they'll pick areas. They'll say, you know what, from the 70s to the 60s, we're buyers. Right? They're not like us where they're all in one price and they're looking to get out a couple days later. And if it goes down, that's
yeah.
bad. They're like, okay, let's start lagging in. Especially if you're a large hedge fund, it's going to take you weeks to months to get into a position. So you're just going to start slowly every couple days. Let's just add a little bit, add a little bit. So they probably are loving down days like this. Let's just, if we can go down 10% in a day, that'll be great. I bet you I'm going to be buying a whole bunch of software names tomorrow. I bought a whole bunch of oil names today. I bought some Oxy. Again, this is all systematic. I bought some Oxy off the open. I think it's PSX. Phillips, some of this guy off the open. Just you buy these guys it's a different beast, and that's why we're trying to always ride these fund managers, because they don't care what happens over the next day, week, month, even quarter. Right? They're looking, where's my bonus going to be at the end of the year and the next year, that type of thing. It's the different views of the market that I think actually make the market and make edge. Because if you know what they're going to be doing, they're going to take a long period of time to do it. So if they're going to be accumulating an asset, then you can say, well, great. In theory, that's where we talked about with yesterday or a couple of days ago with the whole Wyckoff bottom. That's what causes these low bases to take place. Is there's some value investing nerd that's not looking at charts. They don't care about price action. They've done some sort of model and say, hey, this is the value we think it is. We'll take that trade. We'll have risk around it, that type of thing, and go from there, right? Yeah, and trade according to tax season. That's probably another thing that impacts them. But oil here has just been rocketing. So, came to that low of the day. You can see the line I drew there, pop back and forth. And then, this is starting to feel buy programmy, where every 1 minute candle, right, is the high is above the high before it. They've just been, picking her up all day long. And the market's been holding anyway at the same time. Again, if it was just that easy, that oil up, stocks down, that would just make the algorithm building too easy on us. We'd all be multi-billionaires.
And I think a lot of people are missing the run in utilities led by independent power producers, regulated electric. I've talked about the move for Nextera Energy coming as much as I can, guys. That it's looking like it wants 100. I've yelled at Jane to buy it so she can offset her Orlando pricing for Duke.
We have
Duke
solar
Energy.
power.
Look at
We
Duke.
want solar. We got solar.
Sometimes you got to buy the utility itself and then tell them, hey, I own you. When you call them, you be like, I own you. You don't know this, but I own you.
Keep me happy.
I'm a shareholder. You don't tell them that part. You just say, I own you. You don't tell them how you own them. All right, guys, we'll see what happens though. But that trade is a good one given by Jane also today. CEG, take a look at that ripper out the gates here. That was a good call, Jane. I'm riding that wave with TLN, but nice trade there to take a look at, right? So another thing that happened yesterday, I don't know where the hell Polymarket got this data from, but Polymarket was saying that supposedly half of the data centers were going to not be opened in 2026. I kept searching for where the hell they got this data from, but I think they just made it up.
I think
they just made it up.
They've been caught in that like a handful of times, because I think it's just a pure marketing shtick. It's like if we make up enough bullshit that people start talking about how we're lying, then at least they're talking about us, kind of thing.
That's exactly what it was, and I got annoyed by that because different medias were aggregating it and like calling it like a breaking news, and I was like, dude, I'm long one of these names, right? Like it actually matters to me. Like, you know what I mean? Like, so I don't know, man. The SEC, do your job, man. But
Polymarket is an SEC, right?
Well,
Yeah,
that's
but
the
they
thing. So
should
that's why
still.
Kalshi is
Yeah, I don't know.
Kalshi is
They
more interesting because
they
they
should keep it.
went the traditional route. They're CFTC regulated. If they were caught doing that stuff, they would get slapped a little harder. That's why
Exactly.
Polymarket transacts in crypto, because they're like, we can kind of do whatever we want, and because it's all crypto based, we can just make stuff up, um, which is
All right,
interesting,
guys. I do
right?
want
Did you
to
You know,
see
get
how
us
this
in other words,
a little
the
preview of what's coming tomorrow, guys. Let's go to my screen here. Let's talk really quickly about what's coming tomorrow here before I get back to my trading here. So, of course, yes, tomorrow we will have CPI hit, and we're going to have a co-stream here with futures traders, with stock traders. Join us 8 a.m. Eastern. Don't miss it. My man Steve will be here, the man with the stash of Wall Street, ready to take you guys into CPI inflation data. I'm going to be giving him some nice statistics to pull from. We'll take a look at the action. I'll be coming in a little bit early, also able to help out. Look for us. Don't miss it. The stream tomorrow, 8 a.m. Eastern. Don't miss it. CPI. We'll see if inflation can turn this market around. Maybe we just grind up today and then the CPI takedown tomorrow. Who knows, guys? We will see what happens. Stick around.
car looking like it's little rainbow of death, I think it was called, right? We had a nice little pop up earlier in car, and it looks like it's reversing down here now. So
Oh, yeah.
I took a little shot
I'm
in
willing to
the
take a
real
shot.
account,
I'm
just
willing to
a
take a
little
shot too, man.
risk against today's high. I think I've got like half an ATR above today's high as a stop, and this is, I'm hoping, a couple day move, we can get under like 200, right into the
Are you trading
180s or
like
something.
heaven now? You're taking the BATL hit.
Yeah, not that crazy stuff, right? I'm not worried about card doubling overnight. That makes me feel a
Well,
little
how?
better
I
about.
took a little bit there with you,
Yeah, but
a starter at least, to get it started here on car. I'll look for ads at 250.
so a
If we can
heads
break
up,
250,
CAR
we can
has
push.
34 million and BATL has 15 million.
I'll
So
be
it's
right
going to
back,
move
guys.
half as fast. But it
Well,
is
but then you got
still
to multiply it by the dollar, right? So that means car is 20 times, 30 times market cap, right? So because it's a more expensive name. So BATL is like a $3 stock. So
right.
BATL's market cap is, well, let's see if I actually look it up.
But
Market
that's
cap
also part of the catalyst of the speed of light's price action.
Yeah, you're talking
Colton,
70 million for BATL and 10 billion for car, right? So just a different. So car is a mid cap to potentially, well, if it keeps going, a large cap, and BATL is like a tiny little micro cap thing.
the speed though, the speed of the floats is what does it for me. Those super, like the
But-
lower floats can be life changing when you're on the right side and life changing when you're on the wrong side. So I'm
But
always
you don't look at
cautious.
the dollar amount it takes to move the stock, right? Because if you have two stocks and they have the same float, and one stock is a penny and the other's $1,000, right? That penny stock is going to take nearly no dollar amount to move it. Then the $1,000 stock's going to make a whole bunch to move it. So that's why I personally, and I get your opinion on
Yes,
this, why
but
I
if it's
use
over
market
8
cap.
million, then it's optionable. And so the options can also affect that underlying price action, especially lower floats.
Yeah. I've just always looked at it as like raw dollar amount it takes to move the stock, right? And that's why, BATL, you were getting BATL in one day went from, what was it, $1 to $5, so it's or 6x in a single day. And then car, it's up a lot, but it's doubled over the last 2-3 weeks.
Right.
So
Which
yeah,
can happen. And yes, it will slow down. But also put up LITE. Put up LITE. LITE has, let's see, how many in the float? We've got 68 million. So it's in between the two. So you can see, yes, we had a 6% jump today in value. But that's also related to a cap. Now you also see the volume dropping off on a smaller time frame. So, and divergence likely it's going to come back. And with car as well, You've got that top out with that sort of death wick at the top. And now it's coming back to the bigger money level at open, 259.40. So
And its market cap on light is 68 billion, right? So we've gone from
right.
70 million, which is right near nothing for a company, to 10 billion for car for 68 billion. And then at the same time, these things have been moving slower and slower and slower as you go up the market cap. That's why when I look at Nvidia at like 3 trillion, I'm like, well, what more is it going to do? And is it going to double again and be a $6 trillion company? There's just so much money it would take to move a name that has that big of a market cap to it, right? So
I agree. I'm just always extra cautious on those low floats because they can have that rocket ship up or elevator down price action very quickly with the amount in the float.
let's hope for an elevator down. The point of, when I look at these overextension moves right into this prior resistance and everything, it's just someone's got to take profits at some point. Right? So someone's been very lucky here, right? And has had, has made a lot of money off of this thing. Just pure dumb luck, right? You bought it on this day and it just ripped, just doubled in price.
Did any Congress people trade it? Is my question.
Maybe we'll find out that later. At least the Congress people are doing way better than the hedge funds, man. Yeah, Citadel, I think, is actually still down on the year, which is just embarrassing, which is going to create an interesting conundrum if they end up going bust from just, back-to-back horrible performance. It's like, what does that happen for the whole payment for order flow business? Right? That's now the only place that they are profitable is with this order flow thing. Their whole hedge fund model, which they spend billions on, is just crap in the bed. It was like 3% last year. They're down this year. And you would expect the increased volatility for market makers to help in some respects. Like, hey, the market's moving, make some cash off it. Instead, it's this no dice.
Maybe that's why Robinhood is going to be helping with the Bank of New York Mellon to help with that order flow model.
Yeah. It's weird that it's like, so I read a little bit more into it and they're like just doing the software. It's like, couldn't you have probably, I guess you get people that they're experts in software when it comes to markets, but it just seems like you could have, Bank of New York is a huge company. They couldn't just build their own app. Like, it's not like it's going to be a complex app. I think you just take the money and it just goes into the S&P 500. It's not like they're letting these kids that they're giving the money for, to YOLO options. They're not going to say, here, 5-year-old, right? You can YOLO your 0 DTE spy calls, have a blast. Yeah. So it's just, I don't know. It seems weird. And the market, didn't really react too much to it. So maybe it's not that lucrative of a contract anyway.
Yeah, we will have to see. All right, I'm going to have to head out dealing on moving issues. Have an amazing trading day, and I won't see you all tomorrow, but I'll see you guys at 8 a.m.
Yeah, see you next week.
Alrighty, bye.
Bye. So yeah, the looking here on the Qs, right? It's been down pretty much right from the open. We had this one spike, and then we've just been grinding lower. Kind of the same with the SPY in the middle ground. So this is just showing that at least from the open, tech has been giving it up, right? So I've been talking about how good the mags opened at. It opened up. It was one of the only areas that was positive, and then the slow bleed here on the mags. So that switched entirely. Whereas IWM has been holding up. So on the open, it was big cap tech up, and then the everyman down, and then that has reversed pretty much entirely, where you have most things kind of dragging down in the big cap tech land. And then you have everything from the IWM holding up and holding strong, kind of in that zone. So it's interesting, right? And I like when the market starts to flip like this, because it just kind of shows that, yes, there's that rotation that's happening intraday, as just like there's that rotation that's happening, from day to day. And overall, I think that's healthy. I think it will lead to the choppy market that I've been thinking that we're going to be in for some time, which is fine. it's I'm all right with a choppy market for a little bit. It means you just have to put on your patience hat and just say, listen, everything's not going to go screaming back up just because the war has been in a ceasefire. But it means we're on the path, and we're on the path to kind of chop around and to hang out and that type of thing. So the IWM, this is actually looking like a pretty nice base here. So we need to see what's going to happen. Let's copy this link. View only. See what happens later in the day, right? I don't really expect a huge kind of move on either side of things. I just kind of look at this as, okay, this is just going to be some kind of tight consolidation here. And once we hopefully can get through that, maybe we start to trend and continue a little bit as well, right? So, float rotation. That was an interesting conversation. I've always looked at it as market cap, but I could see the idea of looking at it at just as pure float as well. I still don't know if I agree with it, but I see the merits behind it.
So what's happening?
Well, look at the item. Not a lot there. We're just talking about big cap techs giving it up, and then we're getting more of like RSP, the everyman stock. It's perking. So biotech's trying to hold up, healthcare moving higher, finance moving higher. And then silver this has been like the first strong day from the open in silver in like a week.
The railroads, man. Remember that UMP trade I talked about yesterday? It's hot today. UMP, guys.
See if it can
boring.
get through yesterday's high.
I'm telling you, the boring is where you should be looking at right now. That value type of life.
Way up. That'll be interesting because that 250, right, struggled there for a while and then just completely fell apart all day. Now it's right back up there. So probably a lot of stops.
Costco, Walmart, Target. I'm telling you, it's the value trade and it's coming alive.
Costco a little bit above yesterday's high. That's where I think tagging and marking to the prior day's high is going to be important, not just because it's a random prior day's high, but it's that huge gap that we had, right? Things that can get through that. And that's what we talked about this morning with the SPY, right? We were right in the middle of the range. So if you're looking for things, this is a good way just to anchor relative strength and weakness as opposed to just guessing what's strong and weak. Look at things that are through yesterday's high or at yesterday's high, because the SPY has not gotten anywhere close to that yet. So if you're at that price, then at least for the day, you're relatively strong there, right? Talking about OTH. What's an OTH? Yeah, not a lot of volume on that one. Just be careful. Doesn't mean you can't trade it. Just means there's not a lot of volume. Not a lot of volume there to trade. So you just got to watch it. And I'm not one that I'm anti. I trade a lot of stuff that is considered low volume and liquid, and I don't mind it at all. I think it's pretty important.
I don't mind it at all. I feel like
you just gotta
avoid it like a plague, and it's not.
Well, you size down, right? You plan for slippage, because especially in disaster scenarios, slippage will happen. So I think it's one of those. It's like pros only, right? The lower volume stuff is like, right, the harder, the black diamond ski hill. You just have to know what you're doing before you pop into it. That's why most people, you'll actually see this. It's funny with newer traders, they'll generally gravitate to futures and things like this. And then as they get more and more experience, you'll see them either move or, in the case of more systematic trading, expand out and expand downwards into, say, okay, well, now I've got my future system that makes a couple bucks. Then they test something in like liquid assets and holy smokes, right? There's just more edge there. And you're competing less with large hedge funds and institutions and things like that, because they're not going to know what an OIH is. They're not going to care. They don't care about your penny stock or your BATL or whatever. But I haven't gone over the trades today because I'm just flat on the day, but bought this EQT opening range breakout on this one, and the CRH opening range breakout on this one. Just summarized yesterday. I think it made like $18 yesterday. So we're sitting down 400 on the account now. Under 500, it triggers. Eventually, I got to grab all these presentations, put them together. It just triggers a cut the size in half thing. Because everything has been planned from position sizing to, when to size up, when to size down, that type of thing, with the goal of beating this account. And then I have Claude. If I look over here, I have Claude out there just grinding away.
Claude, get to work.
To do more, right?
Get to work, Claude.
He's out there just banging away on I think we talked about this the other day, a VWAP to VWAP strategy. We went back to our boy Kenny Glick and said, this strategy was interesting. I couldn't find a way to fully automate it before. That's why I kind of left it behind. Everything I do, I want to completely fully automate. And now I see that it's kind of an option now, right? So it's something I could potentially do. So let me take a little bit of a deeper look to see if I can actually do that. Especially so Claude would kind of wake up every morning and make the watch list and put that in trading view and blah, blah. Again, if I have to do things, I don't like it. I'm inherently lazy when it comes to my trading because I want to be able to do more and more. I finished. I don't know if anyone watched. I gave you the link for the Lawrence Ben's drop interview with Trading Lion. Dude's up to 75 strategies. It was a really exciting interview. It takes him 10 minutes a day, and then he goes for the day. So take 10 minutes a day to run 75 strategies, and then I think another maybe 10, 15 minutes a day to reconcile that because you just build automations. Taking a look here, going to the RSP, right? Just nothing there from that side of things. The SPY has been chopping around, but actually holding up nicely compared to the Qs. So on the open, we had a great move from big cap tech. It gapped up where everything else gapped down, but then it's been just a flip kind of since then. So
still holding in
VX
though.
futures just fell. So the VIX took a tank. Well, maybe there's some news. Let me take a look here. Everyone's looking at the straight. So that would, even more than looking at futures, might be interesting to look at oil here. Because, oil did in the last minute just have a little bit of a sell. Because I bet you everyone in the world is tracking to see if boats are going to go through or not. Because I think there was like 2 yesterday.
Is starting to see some boats flying through. Next
Well, that's
thing you know. Oh, the strait's open.
Well, you just need...
There's more probability, I think, of someone saying that the straight is open than there is someone saying the straight is closed, continued. That's what I feel like.
Beauty of it is you can track it, right? Is there's trackers on all the ships, so you'll see how many go through. So it's like,
but the problem is they've turned their trackers off a lot, Michael. That's what's been giving people the fits. They're having the ability to turn off their trackers because of the war. They're usually not allowed to, but in this case they are. So that's one thing I will say. There's a caveat there. You have to actually satellite image and find them. They block the trackers on them. So
I'm not seeing.
But that's how the few that have been able to actually pass the straight have able to get through. They've been able to get through because they took their trackers off and then tried to get through. Some of them got attacked by trying to do that little move. But hey, that's the inherent risk you take. There's the reason why not everyone's jumping out of their seat to ship a cargo ship full of oil.
Well, yeah, it's
you know what I mean. Like no one's
wanna. Well, and it's the
not
again,
a job
it's
that's super exciting.
It will be interesting because you'll either get the oil on the other side or you won't, right? So I think it's because there was some chat with the German guy and they import a lot, but really, right, it's what 1% or 2% of the U.S. oils goes through the strait, but like Korea and Japan, it's like all of it. So you'll hear from those people, I think, pretty quickly. Yes, we got our tankers through, or no, we didn't.
Yeah, I
You know,
agree.
these things it won't be a nebulous thing, right? If South Korea goes, oh yes, we're finally getting tankers now, that's great. Because yeah, I read somewhere, I think it's Japan, it's like 90%, and South Korea, they import 100% of their energy, and they're a large energy consuming nation, right? They're manufacturing a lot of technology and things like that in South Korea. So problematic for them, I guess, if you're Samsung. Yeah, you know, they're going to have a lot there, but yeah, a little bit of a spike down. It looks like oil's bouncing back up, but definitely a good one to keep an eye on. I just keep going back to look at my car, and
Me too, man. I'm trying to
it's
position
not
it.
really
I'm trying to
doing.
add to it right now. So we go to my screen, we can look at it here. But looking to see right now if this is going to be able to kind of break down. I'm looking for a trend line rejection here. So I don't really want it to be back above 275. So I have a really small position right now. I want to add to the position, but only once it starts to actually show me the strength, right? Which would be weakness here in this case. So you need to see it do like a quick breakdown back below this, right? So that'd be the look, right, where it just goes boom back to 250. Next thing you know, you got the top in, right? So I think it's a good shot, right? We do have the hourlies that did do a blow off top, right? That gives it the look off the daily, like a blow off top type of look here. Really, it's just going to be dependent if the sellers can take control, right?
Yeah, and
There
it
it
will be
is.
a
There's a
flush thing.
nice.
Yeah,
That's what I want to see. That's
it'll be a
exactly what I
flush
wanted to see.
thing if it happens. It will
All right.
just
So
be.
now I'm just like on the offer now. I'm just gonna sit on the offer, trying to add to the position now at this point. So that's what I was looking for, right? It's that quick little motion that you want to kind of wash through. Now we need the volume to increase on this. I want to see volume increase. I wanted to get towards like something like this earlier, which was like about 100,000 shares going through and breaking down. We'll see what happens there. Car.
Yeah, for me, this is a swing, right? I want a couple days down
SPY
on
pulling
this
back.
one, right? I want
Also,
to give it some time. That should help, right?
yeah.
It's a mid cap name, right? So it won't be in the SPY, but it'll be in the MDY. I think might be in the IWM. I don't know, but yeah, it's mid cap ish. 10 billion we just looked at. So yeah, SPY broke. So it's new lows of the day for the market here. IWM is holding up a little bit better, but it's getting really close to that low of the day. They all kind of broke down there. So it had a quick wick up and then reversed. And the whole time, I'm not seeing anything. So there's nothing.
Yeah, I just think you watch the hourly levels. You're just still within that hourly range. So right, you got to break out of that hourly range here.
Yeah, absolutely. And that's, again, I'm in the camp that this isn't going to happen probably this week. It's not gonna happen on, in today or even tomorrow. I think you're gonna get maybe a little bit, fill the gap a little bit, so this back and forth action, blah blah blah, and then some other news catalyst coming in. So either a full deal signed or something, because the beauty of the markets, the pain for us trader, is that everything gets priced in very quickly. So it's like, okay, we have a ceasefire. We can almost immediately reprice the market to, this is what a ceasefire means. This is, what we're looking at. This is the change that takes place. And then from there, it's like, okay, well, what's next? What's the move that happens next or after that, right? We get a nice pop when that kind of next event comes. And because we're on another event with a timer, that's another thing that I think that that helps that out, right? We're an event with a 2-week timer, and we just have to wait. We got to wait that 2-week period and just go, okay, what's going to happen? So if we get, just like we were talking about on the day of, we were saying, okay, we're going to get a news event this day or by 8, I think it was, or earlier. And that was kind of the deadline. And when it came through earlier that, yes, we have a a ceasefire plan, the market's ripped. I think it's the same thing now that we've got this 2-week thing. So either in 2 weeks, the war starts back up, or there's a plan by that. And when that headline hits, you'll get a huge reaction in the market. And then I think things are a little bit more free to move. And then earnings too, right? As earnings starts to trickle out, we get a better understanding of just how stocks are, because stocks move, stocks go up when they make more money, and they go down when they make less money. We just have to wait for that, right? So
I think we got to continue to watch. It's just going to be on the Strait of Hormuz. That whatever happens here, if it's actually closed or open, is going to be the binary event that takes the market to the next levels. So we're a headline-driven market right now, and the next headline is going to be what drives the market.
Well, and with, right, these headline-driven markets, it just behooves you to do some mean reverting, and then also to make sure you're not getting emotional on either side. Because, right, when you're in a headline-driven market, you get one bit of news and the market spikes. And if you chase that spike, then you get another bit of news and the market tanks. And that's what I showed you guys this morning when I showed you, right, this particular strategy of buying every time the market was up 2.5%, like we were yesterday, and how quickly, remind you for people who came in, I'll remind you of this equity curve. This is what happens if you buy at the Qs every time it was up 2.5% and had like this wicked move either intraday or overnight. You lose all your money. Whether you hold it for a day, a week, a month, you generally lose all your money, because these events occur not in smooth, cool uptrends that you want to be hanging out in. These events occur, if you look at where all of these are clustered, they're all around kind of uncertain times that create uncertain markets. So that was my premise for don't chase it, right? The math says 50-50 chance whether we're up today. If we're down way more than if we're up. So it ends up being a completely losing strategy. And then also 5 days out, it's the same thing. You know, you lose money if you chase the market. The market's very fast. That's why you got to generally do the opposite of what a lot of people are doing, right? And I do have a little education thing queued up. I have a
I think a lot of people though are short the market here.
Well, we can find out with the thing I'm going to talk about, which is commitment of trader data. We can look at that. That's the beauty of it. We don't need to guess.
All right, let's bring in Josh here. Josh joining the show. What's going on, Josh? How you doing?
Good. It's Thursday. I love Thursdays. Thirsty Thursday, baby. Slower small cap market day, looking at some leftovers from previous days, but you take what you get. But it is a good day, my friend. I'm above the ground, still breathing and living life.
There you go. Amen to that.
Oh, man, I got
Iran saying the same thing right now. So,
I got an outside workout today, and it felt amazing. It was finally warm enough to go outside, do some pull-ups. I brought my dumbbells out there. Oh, it was great. It was great. It's warming up.
You don't want to go out here and do that right now. You end up sweating your whole life away.
That's why all summer I cancel my gym membership every time in the summer, and then I buy it back in the winter. Trying to build something in the basement, but trying to get all the pieces around, man. The tariffs and everything, it's rough.
Oh yeah, for sure. On that end, for like equipment like that, I mean, you're better off looking for somebody to resell it, right? Somebody that spent the whole bunch that doesn't want it anymore.
It's gonna cost me around 10. I think I have budgeted out to get
lowball them. That's what I do. I'll look at the gym that I want, just look at the gym you want, man, and just start looking on Facebook. There's somebody that already spent the money, doesn't want it no more. Especially workout material, man. There's be guys that spend like $10,000. They're like, oh, I'm gonna start working out if I buy this thing.
Oh, and treadmills, man. They'll
treadmills, exactly.
They'll give the treadmills away. Like, get out of here.
People, it's just like that all the time. That's why do you think the Pelotons didn't last, right? Because people used it, for like a month, 2 months. And they saw
Peloton, it was like worth more than ExxonMobil, and no one thought there was anything wrong with that.
I mean, for a moment there, it was the best thing to do, right? In the pandemic, I mean, dude, Peloton's that was the.
I'll say I have on a probably right now about 130 week streak straight on my Peloton, and I
Oh, good for
absolutely
you.
love it. So
There you go. Tell us
I
more
don't,
about
I,
it,
I
Josh,
don't like
as a
riding.
first-man experience.
Yeah, I don't
Tell
like
us.
riding bikes. I mean, as much as every time I'd get out and ride a bike with my wife, she'd kick my ass, and I didn't like that. You know, I'd be like having, I just
I'm with
sucked
you
it.
on that.
And so the Peloton, I can beat some people, you know, and then I just kind of turn off the leaderboard when I don't really care about it, and I can just ride my bike, you know, and then I can go different sceneries. I got different guys and girls to lead me through workouts, and I can listen to
There
music.
you go.
Or
Yeah,
even the
different
cool thing is,
energy.
hey, during sports season, I can throw on TV and watch my YouTube TV through there and watch my sports and or in whatever app. So
There you go, man.
I
mean,
like it. And I get it. Yeah, it's
have you tried the new stuff from Peloton? Have you tried any of the the other workouts, the guided other workouts? I know
Yeah.
they have like HIIT workouts and
Yeah.
different things like that they can guide you through. Have you seen any of those, Josh?
Yes, I love them. Yeah, oh yeah, I do different weight training with them or different strength training. You know, the main thing is it's like it's like you're at a gym and you have someone to lead you through and to motivate you. I mean, it's like you kind of need that in stock trading, right? You need someone to motivate you and push you through what you're going through, and it's nice to have that versus, I'll be honest, trying to do it, doing it on your own, it's a little less fun. For at least me mentally versus when you have someone there that you're talking through and they're whatever and they're getting excited. I don't know. It makes you feel like, hey, I'm at a gym and then these guys are working out with me. But I like mine. Yeah, I think it's one of those things where it depends on where you're at. I'm very busy. I don't have time to get out to the gym. And then by the time I do, 4 or 5 o'clock in the afternoon, I don't want to do it because I still have 14 dogs. So I want to walk them. I want to feed them. And then anyway, so I'm like, there's a gym at the house. I don't have to go anywhere. It's like, and Avery wanted one of those too. It's like those things you can put. I think those were like a lot of that. They were huge during the pandemic. The thing you could put on the wall, like the mirror you could put on your wall, and it will like keep track of stuff. I don't know if y'all remember seeing the commercials for that.
Mhm.
Yeah.
Yeah, I saw. No, I've switched recently to working out at home more, and it just saves you so much time going there and driving there and getting ready and all that kind of crap. Where it's like, okay, I've got like 10 minutes before stream, and that's all I got. Let's just go and do some push-ups. I'll bring it on stream one time. I've got a digital resistance thing. It's called. Thing's nuts. It's like a little automotive part, and you just set the resistance you want on it, and it uses like electromagnets. So it can go up, this little thing that's like this big, and go up to like 70 pounds.
Wow.
Just got a handle on one end. You can strap it to whatever you want and do whatever you want with it. So I bought 2. It's nice. It's a nice
There you go.
digital resistance. Right? It's going to be AI-driven. Workout and do this. There's people already doing that. There's already AI workout program.
At least there's one thing I can say. Yeah, the Peloton stock might be down, and you can talk trash about it. Go ahead. But I wasn't drinking no American Rebel beer, my friend.
See, that's what they miss. They miss you, right? You didn't give him your business, and now he's gone. Never get him back.
I tried,
So
man. I was looking for the beer.
We blame you.
Was not spreading my money to that, my friend. This wasn't going there. I did it for the Peloton, and now it's.
Oh, that's the kind of website you don't put your credit card on. Just looking at that website, you don't put your credit card number into that one.
Lesson 233 of how to learn.
You're saying my man didn't build a safe, secure website?
Yeah, no, I'm not. He's immediately selling that credit card to China just instantly. You got to pay him through Bitcoin or something to try to keep it. Oh, speaking of, I saw let's do a meme time when the market's just chilling. This was hilarious. So to get through the Strait of Hormuz, it's crypto that they're doing. So I saw this little video. This is what happens to the ships for 45 minutes as they're sitting waiting for the Bitcoin transaction. It's like, I paid you. I just thought this was a good one, because if anyone's ever paid anything with crypto, it is not a fast thing to do. You're not just hitting a button and getting the counterparty to say, yeah, he's good for it. You got to wait for the whole next block to be minted, which it can take up to 45 minutes. So that'd be
depends
real.
What you're paying. Hope you're doing Ethereum versus Bitcoin.
Well, that's what they're accepting, Bitcoin. That's why go into this if anyone wants.
Ethereum would be better, but
that's why the Litecoin and Ripple and Bitcoin Cash and all these things existed. Like Ripple existed because Bitcoin is a horrible way to pay for anything. because it just takes so long. So
That
the
makes
idea
no
is
sense.
like Ripple, a lot of these other protocols came up and just be like, we're fast. So, but yeah, just sitting there as they're pointing something at you, say, did you pay your toll? Like, I did. You gotta wait. Just gotta wait 45 minutes while we stare at each other and hope everybody's cool the whole time. It's like, imagine doing a drug deal with Bitcoin.
Yeah,
Like,
right.
you know, it's meet on the street corner and hang out there for an hour while hopefully no one notices.
Hey, so got any word on the transfer yet? Yeah, still waiting, man.
I hope no cops see this incredibly suspicious activity that's taking place. But I mean, that's it. That's why I think I'm real big on the digital, the U.S. dollar, like digital currencies. I think those are going to pick up big for transfers because it's a more stable currency than a lot of the countries that are using it. And $1 is going to be $1 because when Bitcoin really moves, imagine. You're buying a house and it's like, okay, send me $1 million in Bitcoin. You go, okay. By the time it hits, it's only $990,000. And he's like, well, now you owe me
Yeah,
10
right.
grand.
Yeah.
You send him the 10 grand and now the Bitcoin's worth like 1.2 million. You're like, okay, you got to send it back to me. And it's something that's just chill for a little bit of time. But so far, each of these bounces are just getting sold into. We just saw another one, right? Increased volume. You can see the little volume spike we had here. A little bit of a bounce and then just immediately slapped right back down. But in the grand scheme of things, if you zoom out, like
Just
nowhere
look at
near
the hourly,
yesterday's
right?
low.
We're
We've
just
done
hanging out here on the hourly, right?
nothing.
So the real key, we need some clarification, right? We got more clarification that came from a CEO of I think it was it Amoco here? No, United Arab Emirates, a state-owned oil, pretty much saying that it's not open. But he said it's not open because what's happening is, of course, is Iran is made it clear that ships must obtain permission to pass through. So
Yeah.
he's saying that that's not freedom of navigation. So that's what I think is really the key here, guys. Are we going to get a free, clear pass, or are we going to still get you need permission slips? So that's what you need to be kind of looking at in the news cycle.
Oh, remember those back on the permission slips. You got to
That's what
get
you
your
need.
permission slip signed to go to.
That's it. That's it right there. That's what Iran's telling you right now. You need to get your permission slip, dude. You didn't get it. You didn't get it. Well, you might be attacked.
Off to the principal's office with you. Get out of here.
Yep.
So you're done.
Of course, a lot of the analysts out there are saying, no, this is not going to normalize anytime soon. Right. So we'll see what happens out there, man.
Well,
I have a tendency of being wrong more than half the time. So.
Well, it could be one of those. They have a big.
Big oil.
Another big hissy fit on Twitter. It says, "Listen, if you don't let them through, we'll send you the Stone Age or something again." And tacos.
The airlines are offsetting inflation here as American Airline comes out and makes bag fees even more expensive. That's one way they can do things, right? So they're having to adjust price because of oil. Well, you can't affect the pricing of the tickets that fast because all of a sudden you get regulatory hits. But what you can do is you can do two things. We talked about this in our education. If you watch our segment, you know this already. But the jets can do two things. They can either raise kind of expensive bag fees, or they can take some flights out, right? Just fly less, right? Mm-hmm. Make sure that if you're flying with a full plane versus half filled. So it's going to be something to watch for, right? They can't just go back to the people that bought a ticket last month and be like, hey, well, now you got to pay an extra $25 to get on the plane. So the way they do it, they say, oh, well, you're coming on our plane, though. But guess what? The baggage fee can change at any moment. So if you didn't get your bag fee already, well, now you got to pay a little extra.
Yeah, I do not. I greatly dislike airlines and just the way they operate in general is just not cool. You get
monopoly.
I think ogolopoly is the technical term, but that's just happen.
It's also backed, right? And they get away with everything.
Well, yeah,
how
it's
small
like
the
it's the
seats are.
same. I always talk about our cell phone. Like we have 3 cell phone companies in Canada, so you better believe they're all roughly the same price. So there's just
Yeah.
there's not one that's 10 times lesser than the other.
All right.
Yeah, don't get me started on airlines, please. That's like a whole nother. Oh God, man, that could be a whole call-in show topic one day. Please call in and you're disgust about the airline companies. What's your worst? What's your least favorite? Which one do you like the most, but yet you still hate?
Yeah, I would just do a rant here. So yeah, I think for our education segment here, I've got a slide deck all rigged up. Something I wanted to go over with
do
you
it.
guys. Talked a little bit briefly about. I don't have a cool video. To be honest, I do have a cool video, but I haven't
It doesn't need.
listened to it
You don't
yet.
need a.
And I don't want to just put what the AI put up here, just put with like raw it. That could go bad. Maybe it hallucinated it and did something. But it's something I talk about all the time, and I've mentioned quite a bit. And we just kind of alluded to here, saying, well, I think everyone's short or everyone's long. We don't have to guess. And so I'm going to talk about the commitment traders data, why it exists, how to potentially use it. There's a handful of very well-known market wizards that use this and have made tens of millions of dollars just using this particular data, and essentially just taking the opposite side of the smart money, which is quite often and kind of normally wrong, right? So yeah, the COT data just stands for Commitment of Traders, and it's done by the CFTC, which is the Futures Trade Commission, and it comes out every Friday for a little bit of time. So the idea is that when you place a trade with your broker, a registered broker, and you need to be a registered broker to get on to the commodities market, to any of the futures market that exists out there, that broker every week sends into the CFTC, here's how many clients we have that are long, and here's how many clients we have that are short. And those are split into 2 people. You have commercials and you have speculators. And commercials are your hedgers, right? So they're the people out there, like we saw the video on, different ways that airplanes hedge, right? One of them is just by using the futures market, right? We sell a future value of the oil that we're planning on consuming. That's one way to do it. The way this was taught to me in school was a farmer, a bread maker, and a wheat grower. So the wheat grower always wants to, they both have a vested interest in locking in a future price so they can decide how much to sell their bread for. You can decide how much of wheat to sell, all of that. And that's why these things exist in nature. That's why futures are supposed to exist. They're supposed to be hedging materials. But you can't ever just have that perfect meet of someone who wants to sell a contract and someone who wants to buy it. So what makes up the difference is speculators. And that's just something that you register when you register your futures broker, right? If you are a hedger for a large institution, a farm or something like that, you are registered as such. And if you're a speculator, you're registered as such. So that creates some really cool data where we just know how many people are long and how many people are short at any given time and at any given price. Again, in the futures market, it's kind of like short float data for stocks. So, they have different ideas, right? So commercial hedgers are just hedging something in the physical market. Again, the farmer wants to just sell his wheat in the future. So he is just hedging on the fact that if wheat tanks, the price tanks, well, he's got a short futures contract that he can make money off of when selling the wheat doesn't. And then the other ones, they're degen gamblers like us, right? They're just betting on momentum. They're, trying to predict what happens next in the market. They don't have that physical side of things, but it's necessary or there'd be no liquidity in the overall market without these guys. So the reason that we have to do this by law and the reason that you will get beaten up and thrown in jail if you don't is the Hunt brothers in 1978, which is, I brought you guys those silver. This is when silver ripped and then tanked over and over again. And these guys basically just said, what happens if we just buy all the futures? It was basically the plan. What if we own every future contract in silver that exists? So they bought more than was the deliverable supply. So they said, okay, we own it all. Now what do you do? Right? And the idea was that if they could corner this market and own literally the entire market, they could sell silver for whatever price they wanted to, and the other side of that market would have to make that price. If you owned every stock in Apple, if you owned the entire company, in theory, you could sell at about whatever happened, right? So when they did this, they caused a 700% spike by themselves in the whole worldwide silver market, these two dudes. And you can see what happened after that, right? They were forced to liquidate by law. It wasn't a, hey guys, this isn't cool. It was, they were brought in front of like Senate or Congress or whatever your big membership was, and, you know, sit down. You're not allowed to do this. We're making this a law. You can't manipulate our markets like this. And then it collapsed right back down. This chart looks kind of exactly like silver looks like right now, that we're in this kind of area in silver right after the liquidation day. And if it collapses, that's happened as well, right? But yeah, this was a whole, just one of those signs of extreme greed. We're not going to manipulate the market a little bit. We're going to buy it all and then and own it from there. So this was the response. You have to now, if you are a speculator, and you don't do it. So if you're buying a futures contract, don't be worried that you're not filling out the right document. You're going to go to jail, right? Your broker is doing it. You are classified as a speculator inside your broker, and your broker is just going through and saying this speculator owns this many contracts at this price, and that just all gets anonymized. So it's not, no one can look and say, you know, Mitch is long here or Josh is long there. But as a whole, these are where our clients are long and short. And it was the only way to deal with it, right? So it created a new data source that didn't exist before, where you could know at what prices, at what times people were long and short commodities. So it created this idea of, some people believed, oh, well, if I follow the smart money, I'll make a whole bunch of money. Turns out, just like the guy who created the NAM report, whether people are bullish or bearish the market, doing the exact opposite of what the crowd does, makes a lot of sense and makes a lot of money. So the idea, and a lot of this comes from, if you want to look him up, his name's Jason Shapiro at the Crowded Market Report. He's a market wizard. He's been, published in the books. He's been doing this for years. And if you know that everybody is on one side of the boat, then any sort of market movement on the other side is going to cause a whole bunch of liquidation, a whole bunch of people selling, a whole bunch of people running for the exits. And I kind of equate this as a short squeeze, except you can have both short and long squeeze. If everybody is long an asset and then that asset starts to sell a bit, there is, margins, liquidations that will cause the asset to collapse, so on and so forth. That's what we saw in silver. For a second there, everybody in your mom owned a bunch of silver. So when we had that first downtick, it causes this cycle of margin collapse on the way down. So the main way to kind of look at this is when the markets do something that doesn't make sense and the boat is loaded on one side. So Jason Shapiro talks a lot about just news reversals. So you get, silver, for example, has good news, but then it stops going up. You say, okay, people use that good news as an excuse to get out of that position. That can cause this reversal that comes through and the margin liquidations that happen after that. So here's a basic premise on how you do it. You want to find out the crowd and where they are, and then wait for that failure, because people can be wrong for an incredibly long period of time and have this reversal. I got some ideas here as well. So the thing that I like about this one is that this would be uncorrelated to other ideas. You could do trend following in stocks and then this kind of waiting for everyone to get overwhelmed in some sort of commodity, and vice versa, right? This could be broken out and be something that's trade entirely. And it's all about just going against the herd. And as long as humans exist, I think this is one of those metrics that will also exist. As long as people get too hyped about an asset one way or another, this kind of reversal will always take place. So I wanted to give some examples. One of those, if you were tuning in last year when I was being incredibly obnoxious and pounding the table, was just talking about how everybody was shorting and still short futures, even though the market was moving higher. So let's focus on this red line and the red line only. This is the large traders. These are the large speculators, the hedge funds out there. These guys are generally always very wrong. And you can go back in history. I can give you like a million examples for why. But the fact that they were shorting into this market as it was ripping just showed me that, okay, there is going to be this underlying demand that's going to continue, because every time price moves higher, these guys are more wrong. Liquidations will happen. And you can see pretty much all last year, they were incredibly short. We're talking short like 200,000 contracts at a time. Huge surge up in price. And then all of a sudden, when the market gets choppy, it's because they're not long or short anymore, right? That there is no crowded trade in equities anymore. They are kind of net flat here on this particular side of things. And you can take a look at the different indices. So like the Nasdaq, for example, large speculators are still net long as of this. So, and by net, we mean you take all the people, all the speculators that are long, and all the speculators that are short. That gets reported every single week, and they've been betting on the Nasdaq to go higher pretty much the entire time. The only time that they stopped was, of course, as it went down. So as it goes back up, everyone's betting very bullish on that as well. And then the other thing I think that would be good, the last thing to go over here would just be energy, just to take a look at oil. So oil is a little bit different here, and that's because the commercials are always incredibly short oil. So speculators always have to be net long oil. It's just the way it works, right? It's there. If you are someone who is a commercial hedger, you are always selling the future value of oil all the time because you need to consume that oil. So you can go back in this chart as long as you want. You can go back in this chart like 1,000 years, and you'll see that the commercials, this green line, never gets above positive, which is right here. They're always short net oil, but they can be short in certain degrees. So if you look right here on the chart, the speculators were actually less long than they had ever been in the world, right here, right at this price. In the last like 20 years, there has been a larger short position that existed on oil right at $55 as it looked we were going to break down here than in the history that I can see. So in 10, 15 years, they've been short oil the most possible. And then you can see what happened with oil. So I think a lot of this is happening because the positioning was caught offside. So if you were someone, for example, who was looking at this data and saw even on this gap up day or even on the breakout day that, okay, we're breaking out, and I'm not just going to buy any breakout because that doesn't make money in the long run, but I'm going to buy this breakout. And I know that speculators are more short oil than they've been in an incredibly long period of time. That's my catalyst. And you could see, you still got a wicked percentage move from there, even if you're buying in the 70s. So just another data point, one that I don't think a lot of people focus on too much. But it's out there. It exists. It exists by law. It's reported by law at a real regular pace. And just like sentiment data, most of the time, it means absolutely nothing. When sentiment is just in the middle, there's no edge there. If sentiment's a little bit bullish or a little bit bearish, there's no edge there. But just like sentiment data, when you get a extreme printed on one side or the other, you have everybody long or you have everybody short. There is some real edge there to kind of go against the herd, to stop doing what everyone was doing, what everyone else in the world is doing, and kind of take your own trade. So it's a little commitment to trader report breakout there. I use this all the time when it's valid, which right now there's not a lot of data here, but those are some recent examples.
Something interesting to look into, guys, and that's why we have a quant here.
Quant
help us out.
I love it.
Data, baby.
Give me some more data.
That's what it's all about, guys. And while I was watching you speak, the only thing that I got from Donald Trump was the White House UFC event.
Oh, sure. Why not?
That's what he's posting up. But I did see Bitcoin start to rally now. Bitcoin is rallying here. We're starting to see the market start to come back. The VXX still holding the hourly low. So is the SPY. Markets are starting to get a little bit of an up move here now. watch for the Qs to maybe push right back as you get a little bit of an undercut and could rally right back in there. So the Qs are starting to come back there. Market's holding in. Hey, see what happens.
Yeah, and doing that with oil, doing what it's doing. That's, I think, is the real.
I'm looking for the turnaround on that USO. I talked about it at the 130 level. I think we get up to the 130 level, start to see a little bit of a turnaround trade. I was even thinking about shorting here at the 129, so we'll see what happens there. Everything that we're getting from out there is pointing towards Trump pushing towards the strait being opened. I think he wants it open. Haha. But
Yeah,
let's
can
see.
he? That's the real question.
Well, he can. I mean, at any point, he can just choose to say, well, you know what? Hey, if not, then I'll just do it by force, right? Like at any moment, he can just trigger it right back on and just say, well, then all right. Well, you don't want to do it. Well, then let's just do it by force. Send the troops, take the island. Let's go.
I hope not. I'm really liking this gap up. Again, I bought a bunch of stuff last week and the week before.
At any moment, he can do that one, right? It still leaves the realms.
I'm loving my long positions right now. I don't want anything to come along like that and just completely ruin that. That would not be fun for me right now.
Yeah, I mean, it could happen, right? But we also could just see straight open, and all of a sudden the market held for a reason, right? Market's holding. I think holding really well. If we were really seeing that the escalation was expected here, I think we would already be down. Let's say at least closer towards like 666. Haha. But I don't know, guys. The SPY is holding really well here, I think, for this type of action here. Top end of the range, whenever I see an expanded move, the only thing I care about is if the stock comes down fast. If it stays sideways, sleepy, leaves more room for the upside.
Yeah, and that's exactly what we saw in the last Great Taco, right? Which was
car starting to get in the green there for us now.
Yeah, the last taco was a huge move up. It was 2 weeks of action, and then before the next move up, it could happen.
Car, man. I have a measly 4 shares, but looking to see this thing really break down today. It'd be nice.
Car time, baby.
Car time, baby. Time to short a parabolic mover.
Yeah, that's a crazy mover. I hadn't even looked at that until Joe brought it up on the yesterday. I think on the lunch recap that we had. I was like, "Whoa, where did you, Avis? Wow, Car, what are you doing here?" Another one of those ones. Yeah, crazy move of the past 6, 8, 9, 10 months.
Yeah, at this point, as long as it didn't get back above 270s, I like it here. And at this, like, it could just be the rejection now, right? So I don't have to risk all the way up there. Just have to stay tight here, get out, get back in if needed, but positioned in at least. Bitcoin trying to make moves out there. We'll see what happens out there, guys. 10:53, almost wrap up time here. Started to see at least USAR bounce. That means probably the dollar stopped going up. Is it going up still? It actually is still going up. So see what happens on the dollar. Kind of a little bounce back day on the dollar, but not going anywhere. SPY is, though. Qs are. They're starting to climb here. Let's go. Let's break that VIX.
It's not going to be good for my car position.
No, that doesn't matter. It's for car, man. Car's a little bit different, man. The market could come up here and car could break. Reason why is I think at the end of the day, this is trading based off of rumors out there and just manipulation. So at some point, this is going to give. I don't think it's running because of the market, right? So let's see. See what happens here. If it does start to run, I think the key level is around the 276 recovery. That means you recover yesterday's high. That's what I'm pretty much looking at. Yesterday's high right now. Bitcoin trying to get moving there.
All right.
Cat is a nice little setup. If you guys are looking for setups, right off the VWAP right there, off the 780s, looks good.
I'm buying booze. It was triggered in BF. Do we do .B? How does it? BF. Can't do it here. BF.B. I guess it's a booze company. Brown Foreman. To go trade there. So there we go. Let's get drunk. What a horrible long-term chart this thing's been.
See a little spike there in CAR. That's getting some volume there. Some buyers stepping up there. So just to state that up there. Just see some buyers.
It is what it is. I got to stop well over today's high. Just take the shot. And
yeah.
Whatever happens, happens. Might be one of those I got to swing at it a couple times before it.
100%. That's what I'm thinking. That's what I'm thinking, Michael. I don't care if I get stopped out once, even twice. The key is I win the position, right? So you got to be smart. That's the key whenever you're shorting something that's a little bit, let's say, outrageous. You want to be smart. Just stay smart. The idea is not to play hero.
And yeah, that's why I'm looking at this as I want a position for a swing, not a day trade, because just knowing how the universe works, this will just be a huge gap down. They'll come out after hours and they'll say, "Oh, thanks for the triple in the share price. We're going to raise a bunch of cash now."
Bunch of cash, exactly.
Right, and then it's down 10-20% the next day. So I just want to, I want to. That's why wide stops and lower positionings, because I'm not going for a day trade on this one. I want to be positioned into some sort of a close. So I could even get stopped out today and reposition later in the day if I see any kind of weakness, just to have that, because that's how I think it ends, is just some amount of, we need money. You guys gave us crazy share price, so we'll take the money now, and then you get what you get after that.
100%. I mean, if not, they're not being very smart, right? Because one of your things as a CEO and a CFO is make sure you have the runway to continue to be the best of breed, right? If you're worried about Hertz or other competition coming in and stealing your lunch, well, you want the money to fight back.
Well, I always say that if you like the company, if you're a big fan of the company, you want this to happen, right? You want companies when they go up to raise money. If you're like someone like, I like this company, I'm my time horizon's 5-10 years. Well, then if they raise money and dilute you, that will cause a short-term down pressure on the stock. But your hope is that they can apply that company or that money to good use. AMC again being the perfect example, where the shareholder base blocked him from doing it, and then the company is near bankruptcy. He was looking to raise billions, and maybe, who knows, if he would have been able to put that to good use. But if he did, AMC might be in a way better shape. So that short-term hit you would have taken on your stock price, it may have been, way better to let him do the raise, and then go, okay, I'm gonna let you raise, and that's gonna hurt a bit, and then from there I'm gonna just deal with it after that, right?
All right, well, that's probably going to do it for us as we start to head out. I will continue holding on to my positions, CAR short, TLN long, and USAR to the long side. USAR.
Back in the USSR.
Right. I just feel like, little Beatles playing. We're going to get copyright hits real quick, but.
Just gotta, as long as we keep it less than 10 seconds, we're good.
That's it, man. Back in the U.S. Especially with the war talk right now, that song makes sense, right? I mean,
be careful, man. Careful of that.
Now they're listening in to our phone calls soon. Watch out.
My closing thoughts are just, stay patient. Just zoom out. Look at the daily chart. Right? We haven't done anything today. So
patience, young grasshoppers.
Don't get too bullish. Don't get too bearish. Don't chase any moves. Right? Have a plan.
Nope.
Chill out. The market at some point will become volatile again, and your job is not to lose too much money until that happens. So,
exactly.
All right, guys.
Have a good one.
See you later.
Yeah, have a good week.
See you. Take care, guys.
Eminem. Thank you. Boom. We're good. We're rocking. We're rolling. Mitch, have a good week, dude. Yeah. Thanks. Thank you, brother. You too, man. Thank you. Take care of them little kiddos. Have fun with them. It's a perfect time about that. I was just getting pictures the other day of spring break, missing the beach. So I know Mitch is really close to and a beautiful beach to go to. So Very jelly of that. I love some sand in the feet and the waves crashing. Oh, speaking of waves crashing, not happening ONCO. Actually, good news today on this that's running from still this morning on Onco. So Onco's been your good mover, and good alert there earlier. I think it was Crow. It was somewhere in here, Crow, that you were talking about. And I was like, yeah, it had, and I almost said something back to you, but on the chat, and I just didn't. I don't know why I didn't type right away. But right here, we have what? Kind of this, I was like, man, this is the potential for a U-shape, especially if you go into a larger time frame here, start working into a 3 or 5 minute time frame. That's really was looking sexy for a U-shape potential right here, Tighten up this mess down here and this noise, this 160 base bottom was really gorgeous, 150, 155, whatever you want to call it. Essentially about a 10-cent base from 160 to 150. And boy, oh boy, oh. Talking about a nice U-shape, and then kind of cup and handles over here. Now, again, it's not the perfect cup and handle because it's got multiple handles on the cup. But hey, we got one of those wacky cups at the wizard, the cup of wizardry. I don't know, thinking of like something off of like. Well, when I think of cool old cups, the first movie thing that comes to mind, I don't know why, is Harry Potter, but really even then right after that comes Indiana Jones. And The Last Crusade, was it The Last Crusade? Was that when they had to pick the cup? Wasn't that it? Anyway, whenever the one we had to pick the cup with his dad. Oh, Sean Connery. The Crow. Smoked tuna. Just got back from the beach. Love summer weather. Yeah. Love it. Mike, what's up, D-Rada? How we doing? Snowman, Tack, Joe. Florida Joe in the house. Florida Joe in the house. This play looks like it wants to continue up, in my opinion. Onco, beautiful, beautiful move here. Just go back in time. We'll go to the hourly here, see if we see anything. Yes, that's right. This was a play we saw gap up here. This was a reverse split or something that happened on Onco. I have to go back here. What was that? Back in March? Let's hold on here. Yep. 1 to 5 reverse split. 1 to 5 reverse split. And didn't really do too much from there. Does have good news this morning, though. Right here, we got news this morning overall for ONCO. And that news would be Realbox, let's see, launched the Vinci AI vision system with delivery of first Vinci-equipped humanoid robot to Ericsson. Talk about Ericsson. They've been around for a while. Didn't they used to make cell phones back in the day? Anywho, gonna really run into this floor right here. So this the gap up from the reverse split and that floor right there. I think we're at a time where I can do this. Let's go back and look at the charts, my friends. Yeah, here we go. So right here, this 255, it's on lock. I mean, we're probably gonna touch it if we haven't yet any moment now. So 255 is going to start seeing some resistance into the real floor at 275. And these runners usually typically sub $1. I know this has been reverse split, but regardless, you go over $2 and 225, 250, 275, 3. You don't really get to 50-cent increments until you move past 5 or so. Maybe 4s, you kind of get that. Regardless, you still can't have that. It's not always perfect. It could be the 80-cent mark and the 20-cent mark. It could be the 35-cent mark versus actually every 25 cents. But general rule of thumb, expect something similar to those lines. As I've told you guys on the live stream before, up until $1, it's 5 cents, maybe 10 cents. Then after $1, you can maybe create 10 to 15 cent intervals. And then it's about $1.50 to $2 when you start running in these 25 cent intervals. Anywho, so that's your move on the way up. So what we're going to do is we're going to come over here and we're going to click on this guy and then do that. And then we're going to do this. And see if we don't run and soak our way up into this level. And then what we're also going to do is we're going to do her again, and we're going to put her right there. And there's some of that good southern drawl coming out of me. Got that southern accent. Can't imagine people like in Canada to hear a true redneck. I just want to hear Michael Noss. I should ask Michael Noss next time. Mr. Noss, have you been in the South? Have you visited Texas, Alabama, Mississippi, Arkansas, Tennessee, Kentucky? Listen, you go to Oklahoma, Kansas, it's right next to Arkansas. And how does it, like, y'all just lose the accent? How do people, now I don't really have that much of a southern drawl, but it's just weird. Like, you're in Texas, you're in, look at Arkansas. You go one state below us in Louisiana, now they talking like down there, nah, they got that Cajun Creole on there. Like, where are you, what? And they all not all talk that way. And then every state has like a little bit of a, ooh, there she is, there's that touch. There's 255, soaking, baby, soaking. Not smoking, soaking. 275 is most likely going to get touched next. This 235 and especially 220 is your new support. So we're going to come over here yet again. We're going to put a line in right there and say that 220 is your new key to success. I would have said earlier 2 was going to have to hold when we were in this bull flag for more continuation for the day. In my opinion now, it's going to be 220 is going to be in the just like it's like an AK-47 throwing darts. Shala! Slap-a-rooney. There we go. And now this is going to be the true, in my opinion, we're really going to strong resistance it up. Somewhere in this area right now, I think we're going to get a little bit of a pullback and a little bit of a fail before we start moving up for more. Now, we soaked into this a little faster than I expected there. So let's go back in time. They're going to do all the accents. That was like some like backwoods Australian person right there coming through out of nowhere. Dun 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 dun. Now, see, I was like, and then I always get these like TV shows that like get into my head, like Bonanza. There's no way we're going to 360 over 275. So where would we go, Josh? I really think 3. That's usually the landing ground. It's not like there's a lot of touching there, but I'm going to throw that line in at the 3 mark, the Trace Lay Chase mark there. We'll go back to the 3-minute time frame. We'll start to look at this a little bit more. So in the 3-minute, and there's that fail. We did reach up a little higher. There's 282. This is the line of resistance that I would say is strongest as of right now. Got the call-in show. Hopefully have everything good to rock and roll today. What's up, Derek and the Domino Saline? Here, great listen this one. Yeah. Good stuff. Kogu! Sorry, guys. I missed a lot of those. This morning, UCAR bounce at 150. Let's go over to UCARA. Let's back her up. Beep. 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 Yeah, off of yesterday's high. I wonder why that sounded so familiar, Kogu. I talked about it earlier in the morning alerts in the live stream is why. Because I said if you crack this $2 mark, I don't see what holds you up, and I don't see how you don't get down to 2. Now look where we're bouncing at, every 25 cents, right? So there's your 175 bounce area. Derek, though, how you doing? Mr. Derek Thompson. Thomas Thompson. Smoke Tuna used to work for Ericsson. That's crazy. Smoke Tuna. That's awesome. Yeah, Ericsson's been around for forever. I mean, for a long time. Yeah, I remember when you used to get, like, Sanyo TVs. Y'all remember Sanyo? S-A-N-Y-O? Y'all remember Sanyo? Like, is Sanyo still around? I'm guessing maybe over the Asian countries. Tack, do you know that over overseas? You maybe possibly smoke tuna as well. Look at it. We're throwing darts over here, team. You pull a chart up, that's me. I'm Mr. Charter, right? If there was like a superhero power, we're all like different Marvel super, like, you know, Michael Noss will be the quant, right? He's like the, right? You know, he's doing all that shit. Anyway, I would be like, just throw up a chart. I'm like, all right, throw up a chart. Well, Mike Noss won't have enough time for his to go through, right? And then like, Josh, we have 10 seconds till the bomb goes off. What's this gonna do? I'm like, all right, hold on. And there we go. That's what we're gonna trade, you know. Oh man. Let's see here. Nice, I didn't read the news. Yes, Crow just read the chart like me. Yeah, I saw it at news. We know that really doesn't mean a lot, but it was pretty decent news today, especially with that Ericsson deal. Whoa, skill. This is something new. The slide part 2 featuring the silver band-aid, and that's a good funky. There we go. Love it. Whoa, skills. Yeah, it was good lesson. Of course, Nos knows his stuff, huh? I used to run to Kentucky on Sundays to buy 6% alcohol. That's funny. That's how, well, in Arkansas, you can't buy alcohol on Sundays. So and when we lived in Northwest Arkansas, like Avery right now, she's visiting her parents. She went to, for Easter. She can go to Missouri. So literally right on the border, which is luckily Northwest Arkansas. If you're in Fayetteville, this University of Arkansas is right there. So woo pig sue, we go Hogs. But Bentonville, of course, that's home headquarters for, I think everyone knows, Mr. Walmart. We've got JB Hunt up there. We have Tyson Chicken up there. We got billions on billions of dollars up there. And yeah, it's nice on Sundays if you need to go run right, 20-minute drive. It depends on where you're at, 5-minute drive for, Bella Vista, where Avery's at and her parents. If you're in Fayetteville, it's probably about can't remember, probably about a 30-minute drive, maybe 45 at most to get to the border. And right at the border, there's liquor store galore. I mean, it's just like, all right, here's where we can put them. There's where we're going to put them, right on the border. So all these people are from Arkansas come over. Bot from Steelers. Yeah, that's awesome. I'm doing well. Good job, Derek. Or good job. That's awesome to hear, though, Derek. Good job, though, too. Crazy to think, it was already a week ago. Last week at this time was our Friday. You know how time flies. Beautiful, though. This is what I'm talking about. And hopefully when I'm doing this, I know I'm really quick at finding these levels, but usually pretty slow and decent, hopefully, at breaking them down and what to look for. It's charting. That's all I wanted to master early on. I was like, if I can master charts, then I can trade. You can just trade, right? You can then put your lines in and trade them, as I said, or I've always said. And early on, that's all I did was chart. Now, what generally is going to work is previous charting. You very rarely, say, it doesn't matter if you're AMD, SPY, Apple, Tesla, Qs, NVDA, PLTR, ONCO, of course, ELAB, SkyQ. These plays have been running over the past 3 days. UCAR, 3 days, 5 days, 10 days. Just use that chart. I mean, you can see exactly. Look at these lines. This is just truly from when we gapped up from a reverse split. I'm using levels from that. Just 10, 15 days ago, and these lines are working out to the dot. For the most part. That's it. It's most recent, team. If you don't need to go back and go for hourly and go way far back in time, or you do a yearly. If you've just ran over the past couple of days or last week or last month, and you're you've moved and you're in that area again, just go back to that. Go back to the most recent chart, because that's what most people are going to use. They're going to use those most recent levels. Rick, what's up, Rick Knight? You sound like, I feel like you're Rick, if Rick Pitino and Bobby Knight had a kid. Sorry, we just got into college basketball. I love college basketball, and especially the March Madness. I don't know why it's how fast my brain is just goofily thinks of stuff. But that's immediately when I read your name, Rick Knight, I thought of Rick Pitino and Bobby Knight had a kid. His name is Rick Knight. He's not only good at coaching basketball, he coaches women's basketball as well. Sanyo, I think, was a Korean. Oh, Sanyo was a Korean company. Makes sense. See, Queens. Tack, I know, but you travel the world, though. You were working over in Asia, and come on. I haven't done that. I've been out of this country once in my life to the Bahamas and the Caribbean, which was absolutely, I want to go back and spend a month in the Caribbean. It's like, I love the Caribbean, however you want to say it. Sandy was Korean. There we go. Went along Tesla. Tesla's been nice. Again, the large cap moves have been back on up. So I'll go over to my large cap watch list right here. And we're seeing some returns back on up for the day, right? We see Meta. There was that nice little U shape. We're still trying to squeeze AMD earlier on in the day. Same almost exact chart. Look at those charts right there. That looks like almost the same chart. Now we'll go over to NVDA here. What's she looking like? She's taking off, baby. She's a squeezing. Beautiful ascending triangle right here. Tight, ascending, lower high pattern, flat top. I just went over this. Saline girl, Aussie chick, anyone in my live stream. What do I tell you? We just went over this literally, what was it, yesterday, right? The triangles, bull flag, pennant flag, and ascending triangle. And I said, which one's the best and which one works the best and squeeze the most about ascending triangle, ATs, baby. You want an AT. Resistance. We're all kind of failing in the same spot. It's not perfect, but it's flat for the most part. You've got a lower or a higher low pattern along the way, and you pop a Cito. And when you pop a Cito, what do? You come back down and bounce off of what? The flat plat, baby. And you don't quite get there, and you squeeze a Cito. Yeah, look at that. So beautiful right there. That's almost as beautiful as a sunset on the Florida Gulf Coast, my friends and family. It's not quite that pretty, but she's pretty dang gorgeous. I'll give her an 8.3, 8.7, somewhere in there. Not quite into the 9s. 9s would be because I traded it. Let's see, there we go. Love it. Yeah, PLTR, everything must be moving up right now. Again, the market, SPY right here looking to move up as well. That and the Qs both 0.06 down on the day. Both charts almost absolutely identical here, as you can see, for the most part. Now, I'm flipping back and forth between the SPY and the Q and the Tesla. They're all about down. All the exact same. Tesla, SPY, Q are all 0.04 down for the day. All 0.04 down for the day. Little inverse head and shoulders going for both of these tickers. I would say for the most part, you can look at SPY here, shoulder, head, shoulder. We candlestick confirm, and I'd go into a larger 5, 10, 15 minute time frame over this, and she's looking like she wants to, over this 580 mark. She is going to continue to pop. Let's look at the Qs here real quickly. Trying to go over the Qs, not Tesla. I want the Qs. Same thing. Now the beginning's a little more awkward, but we still have the same U, which makes a shoulder, head, shoulder. Now to complete this head and shoulders, and I think that's may hurt the SPY, Q's getting up a little bit higher, completing that move for the SPY up, which would be good. Then they'll hold for a possible continuation, which anyone long, I know Mr. Noss right now, Mr. Michael Noss is loving this. If you did take any long-term position here recently, because you got to just think about this. I mean, take a lookie, Mr. Hook and us all have a cookie here. So if we just start zooming out here, take a look. I mean, we're moving, body moving, right? We're grinding right here off that sweep down into those lows we made in the 620s. We're back in the 670s like we didn't blink an eye. Now, yes, Trump's saying we're having a 2-week, standstill and little love fest making. Yeah, it's going to help the market. I think we've seen if that happens and then we get a deal done, oil goes down, our gas prices hopefully go back down. This goes right back up to 690s and we go, and I meant to bring up on the first hour with the boys, I'm like, how ironic and funny would it be? We, all anticipated more, but just because of this war, now it controls really the fate of what we're seeing. And if he negotiates some deal in the next week or two, SPY's hitting all-time. I don't see how it doesn't at least move back up to all-time high area. Then that was the pullback. I don't see us going back down to 620 if we end this deal, and then do we go finally through 700? At that point, then we do have a pullback. That 620 mark's going to looking pretty good. We talked about it on the live stream. I know me and Steve, the Achieve, I can't want to say Kevin Avery there, pardon my French. Me and Steve talked about this. I wanted 610, or I guess 620. No, it was 620 to 610. It was this area right through here. And it didn't quite get to 620. We got almost there. But I would have put a line in right here and said, this is it. This is where I want to get down to start adding in for a long. Had this little megaphone type of a downtrend to it, broke out of it, held, sweep up, get the news from Trump dog, go, Uncle D. Speaking of checkout lines and how they work out to most beautiful charts. ONCO. So we put our lines in, team, and you get to see. Now, I do not like shorting tops. It's just not something I'm a fan of doing. But if you like shorting the top, I just found a perfect short for you at 275. Now she's moving back on down. Wick to wick action going to come in soon here, right here at this 3 minute, probably even see it in the 1 or 5 minute time frame at this point. Is this old wick right here that was soaked right back down into the high of day of pre-market. The fact that we're doing this here again now, the quick volatile movement, I guarantee there's a high profile grid there. What happens is now we're going to try to hold this. This is going to try to hold. You can see, I'm telling you right now, this is going to try to hold. And when this holds, or cracks, my bad, when this does crack, I anticipate it cracking. Watch for an instantaneous right on down to 220. Right to it. Coach the Knicks knows we up St. John Jay. Rick Pitino's good with Kentucky back in the day. I go back to the 90s. That's where I really started watching basketball. So I remember Rick Pitino in Kentucky. I remember when Rick Majerus, that's a name I can throw out there, coached Utah to the finals against Kentucky. I think it was in 97. Yeah, I can bring up some old names, buddy. SPY, here she goes, just a walking down the street, singing do I did it. I tell Q's, where's it going to right here? Most likely Q's is going to try to get in here. We talk about the stuck. I don't like the word. We got some people that are going to be looking to get out once we get back into this area. It's going to then shut the SPY down for the time being, and most likely a lot of these other plays that are just going for a boom, boom, bam, bam type of move right now, with NVDA being one of them. It's helping the SPY out. Q's are making that little bit bigger move up. Inverse head and shoulders complete. Now we are going to rock and roll and try to hold this area at 75.60. Coming up next. Now, again, just do your run-of-the-mill retracement levels where we go from 75.80 down to 74.70. We'll call that about $1 to $1.10 reversal. Well, let's just do some math right here. If this goes up any higher, which I anticipate it going a tad bit, and I mean just a tad bit more, with the Qs going up a little bit more, SPY should go up just a tad bit more. And here she goes, just walking down the street, singing do I diddy diddy dum diddy do. Now your dollar reversal comes in back off of the sweeping area, the bottom of the head and shoulders, or inverse head and shoulders, essentially. Or it would be the top in this case, right? But you know what I mean. If you don't want to travel, you get 15. Yeah, yeah. Well, Smoke, we are so busy. Like say when we like I said, we've had 12 dogs now since when we got Groot. So when we got Groot, anyway, when we got Groot, our massive, he was our biggest Great Dane. Still, Merlin's about that size. So when you see Merlin, he was about Groot. Anyway, we were up at 12. That's 2018. We were just so happy and fine with it, and still be able to take a trip, 2 trips, even a year. People watching the dogs. Well, those dogs were really, really good. You could leave them you could go probably check on them once a day and they'd be fine. They could literally hold their poop and pee and you'd check on them once you know what I'm saying. It's just for figure, probably twice a day for sure. And that's what we told most people, like, hey, twice a day minimum, but just once in the morning, once at night's fine. If you can do 3, please, that'd be great. But they're good. They'll just sit around. They don't poop or pee. Well, the newer Danes are a little different, and we're going like, oh, why can't you be like the last set that we could leave for 6, 7, 8 hours? Anywho, so these are a little bit more hard to maintain, and yeah, we're done doing that and getting dogs and yada yada yada. So that's that. We were able to travel. Like 2018 had 12 dogs. Went to the Bahamas without a dog. All 12 dogs. We're thinking about bringing Brody, but then as soon as we went to in that country, he'd have to go get like a vet. He'd have to go straight to the vet. And he has to anyway. I'm like, yeah, I ain't doing that. This is our honeymoon, and so I'm not doing that. And anyway, so yeah, it was much different back then, and now we look at each other like, oh no, this isn't like it used to be. Oh, man. Yeah, Graska, yeah, exactly, aristocrat. Pass the grape upon. No, I have family all over the place. That's awesome, though. Tack, I thought you did, too. Let them go. Oh, yeah, for sure. Well, I have 2 birthdays tomorrow. So tomorrow I have 2 birthdays. Einstein, our oldest, turned 16. So he gets to take a ride in the little mini Jeep that we have. We have a Jeep Wrangler, like a little mini version of the purple one we have. It looks just like it. It's so cool. I've done some mods to it. So we'll take him for a ride tomorrow. He gets to drive tomorrow. And then Darla. I think Darla turns 11 tomorrow. Yeah, Darla turns 11 tomorrow. But they both have the exact same birthday, which is cool. So we have 2 dog birthdays tomorrow. Avery will be definitely making a cake, and they will be eating some cake, my friends. Got Masters on. Got the Masters on today. Reading through all these. Smoke Tuna June's coming up. Are you coming for Oh, no. Yeah, Tuna, no. Not this year, my man. Not this year. Not this year. I've got about 3 more years of like nonstop grinding work where I might take like 1 week off, 1 vacation for the year where I leave the dogs, and it'll be probably with Avery, most likely. I've got about 3 to 4 more years of this hard grind, and then I don't know. I was saying 2027, but there is going to be a year that eventually I'm going to be like, yeah, I'm done. I want to just wake up and trade, maybe chat like you guys, but I'll be done with the streaming and doing one-on-ones. I've said this since like 2023 or 24. If somewhere right around there, I forgot what year it was. I brought that up, and they're all like, "No!" They thought because they maybe barely caught it, and they're like, this is years down the line. I'm not saying like right now. This didn't, you all are good for now. But there will be a time where I just want to wake up, trade, and be done. I'll be done with all the glitz and glory or the whatever and the streaming live or the one-on-ones or I don't care. I won't care about any of that. I just want to wake up, be an old man, my mid to late 40s, maybe 50, somewhere in there, and be like, I'm done. I'm done. Time to, and then I can travel. And then I could come over, Smoke Tuna. Then I can travel. Then I'll have all the time in the world. Dude, I love that. We go. I love to tune. Yeah, there you go. Yeah, my mom wants to visit New Orleans. Tack, have you been to New Orleans, Tack? Hopefully you have. If your mom hasn't either, oh my, I love New Orleans. Now, it's It's like it's a whole world. Let's see, go join the 50 crowd. I'll be 70. Yeah, that's a good Joe. Yeah. But no, I'm for which a lot of people. I turned 42 this year. I'm like, I can't believe I'm gonna be 42 this year. Right? Yeah. 42. That's crazy. That's nuts. So yeah, I'm thinking 45, 47, somewhere in there. I'm gonna want to start slowing down the streaming live and the one-on-ones. Where eventually by 47ish to 50, it's done. You know, or I'm done doing it. I want to wake up, trade, go play golf. I'm gonna wake up, trade, go kart. I'm gonna wake up, trade, go out to the track. You know, or go. I'm leaving. I'm going to Nashville. I'm going to Dallas. I'm going somewhere that has a track, and I'm going out for the week. I'm going to take my car. I'm taking my GT4 RS, which you saw it, Joe. I mean, I got to test drive that. I mean, they had it out ready at the Porsche. They want to make a deal that day, Joe. It was like, I was like 4K a month or something like that. I was like, yeah, not yet. I got to get my house first. I need to get my house first for sure. But yeah, I mean, I'll be, oh man, that's what I'm looking forward to. That's the stuff right there. Yes, but Orleans, oh yeah, gotcha. Yeah, New Orleans is great. The food in New Orleans and just the atmosphere, man, it's great. You know, there's some really good people down there, and it's different. Like the French Quarter District is always popping. I mean, it doesn't have to be Mardi Gras season for it to get to pop, rocking, and rolling. I mean, it's always got. But yeah, and the food is just, it's amazing. It's really good stuff. Now it's one of those things. I mean, 3 to 4 days is good for me. Maybe 5 at most. You know, you'll get your fill in after about 4 or 5 days. Time goes away too. Oh, it does, Joe. Yeah, Pappy used to, my grandpa Pappy said all the time as a kid, boy, you better enjoy it while you're young. Time flies by. However, he'd always word it, but he's like, man, when it's just, and I was like, man, he said that so much, and he's so right. Like, because I don't do it anymore. Avery she just got so annoyed with it. Where I'd be like, man, I can't believe that was a week ago. I can't believe that was a month ago today. Can you believe that was 2 weeks ago already? Avery was like, Josh, shut up, stop. Yes, I know. Time flies. I stopped, dude. I finally got so busy with this stuff. I was like, man, was that yesterday or how long ago was that? Look at this. Put your lines in and trade them. Now, I actually wanted this lower. I was wanting to see if this would come down to 2 for the bounce play, and I was going to take it. Regardless, I would not have been probably filled there. Maybe one little small order. Love this, though. Absolutely gorgeous. Old resistance, new support there for ONCO. I mean, this is it. Put the lines in and trade them. I love this $1.95, $2 mark. The moving average, the VWAP was down there. I was hoping this would kind of complete the move back on down for a bounce play, and it's not going to quite do it quite yet. Another one I was looking for a bounce play earlier in the day, just not giving me my level, and I love the 85 mark because it keeps holding it. I should have traded this, honestly, by now. Just this lower high pattern along the way. I want this back off of yesterday's high and the former in-market high off this bull flag. It's yesterday's high of day right around 550. We are holding 580 really, really strong, and it does have a little bit of a higher low pattern too as well. So if you wanted to, you'd come in here and you can put a downtrend line in. You would put a trend line in on this, which looks like we're cracking that now. So I'm looking for this back under 580 for the 545, 550 bounce. Other than that, you've got SkyQ still running, so we'll go back over. And these are the 3 plays, in my opinion, that you'd be looking at in the small cap sector. SkyQ, ELAB, and ONCO. Great bounce play. I like this back a little bit lower. Didn't quite get there yet for the day at that 7, 10, 15 mark. But this is definitely another one that you're going to keep on watch today. It's multi-day runner, running over yesterday's highs. Doing a lot of what ELAB did last week when ELAB then ran to 15. Have since pulled back, but still we're looking at it. And it's all we're going to be doing. 1 or 2 main new runners in the small cap sector every day, followed up by 1 or 2 or 3 we've already been looking at. Kind of seems to be that ship that we're still in from September, where QM's popped up, and then maybe we'll get some more, but then we're still looking at QM. Of course, eventually T12, but like SMX did that. We are going to have that effect where these tickers go up, they stay up, they go up so much, they don't really give back their gains, and we trade them multiple times over multiple days, if weeks, maybe even over months. Fried gator. New Orleans is wild. And I love some New Orleans. Yeah, New Orleans is fun. Yeah, especially during Mardi Gras. I mean, even when we went, it was a week after Fat Tuesday, you know, so it was still pop rocking and rolling. Yeah, I mean, there was a guy down there, bro, and gals. Guys and broettes, or anyway, whatever. On the corner, we first get out. I'm with my trading group right at the AKNR. We get out. The first thing we see right on the corner, guy sitting there, kind of, I don't know if he's homeless or not. I'm guessing, right? Those guys that are down there, homeless or whatever, just sitting there. He's got like all his stuff with him. He's got dogs and cats, just a few of them, right? But in his guitar case and a bunch of covers and a pillow or whatever he was on was a cat that looked, I'm not freaking kidding you, team, looked fake stuffed. I'm not kidding you. I thought at first was dead. I'm like, is this cat real? What? I mean, we were all, was it like, is it, and it barely would move. It's laying on its back too, is why. So imagine a cat you see sitting in the guitar case, because that's, put the money in there. He had some of his stuff. He had shit all around. He had all kinds of stuff on that corner, and dogs and cats just chilling. But this one cat was up, like he had it up on his stuff with the guitar case, because it was like, I didn't have to bend down to see it. And this cat's literally just laying back with his hands, paws like this, just sitting there like this. And no, I'm not frozen. That's how still that cat was. I mean, I'd be like, about to kind of touch it. That cat ain't. I'm like, what? You'd kind of barely see it move, like barely whatever. Like, it was almost like those people you see, like the mannequins or whatever on the street that are like, hold the pose. Whatever. That's what it was like. It was doing that. It was like, I am holding my pose. I cannot move. My master will get very mad at me. Let's see. Amazon Plus. Joe, what's up? What's up? Forward to Joe. Yes. You were missing click, but low volume. Click. Now that would be to slow down time. That would be something that we could use. Click. We could slow down time with click. If I could slow down time. Yeah, it's all right. It's all right. It's slow. It's slow for me today. This is a slow day. I'm not a big fan of slow movers. It's good for you guys that need some help with discipline and patience. I'll tell you something again. You get all the dogs and the cats and all the stuff. Just stocks are nothing anymore. Stocks are just absolutely like boring for the most part to me anymore. Now there are some exhilarating moments, right? But for the most part, and it should be boring. I think it's like we've talked about, where you're rinsing and repeating the same thing every day to where it's like when I worked for Dillard's and I sold women's shoes. That got boring. And no offense, but when the ladies would come in and you think they're at some like, I don't know where you get really nice shoes, but we'll just say at Tiffany's where I know you get nice jewelry. They feel like they're coming into Tiffany's for women's shoes, and they like would come in and, oh yes, I want this one and I want this one and I want this one and I want them. Like, oh, some fraggle rock. How many? Then you go get them all. You finally find them all. Because then you're always going to go, this size or that size. You may go half size here anyway. So you grab like 80 boxes of shoes. She goes out there, wants you to put them on her feet. Her corn, gross, booty feet look like she's been torturing her feet with a hammer and a toaster for her whole life. And I got to put them on, get on my knees, putting on shoes for her, all the different sizes, and then she don't buy one of them. I'm like, did you literally just get all dressed up today to come to Dillard's to try shoes on? Is that what women do? Because that's what we came to figure out, that women do that. I haven't ever asked one, and I think I should. But I'm not kidding you how many would come in, and they would you would pull out like the whole dang bag. All these different shoes. You got like 30 boxes there. And it's like, yeah, man, none of these are working for me, honey. I appreciate all your patience today with me. None of these are working out. I thank you, though. None of them are working. None of these? None of them? None of them. You're lying. You're absolutely lying. You want every pair of them if you could afford them. Oh, man. Colin's show coming up. And yes, right. And it's a good topic. Carlo had a good topic, too. He approached me this morning. I was like, we already had one. But question of the day. What scanners and chart settings do you use? I think it's a great one. Especially, for the small cap space that I'm always in and talking about. Carlo was talking about CPI or, how those type of days, news release days, and how you handle them. So that was another good one, though, too. But, oh, yeah. Did you just say your feet were booty? Well, yes. I mean, that's a form of me saying not good. Back in the day, booty was a good thing. Treasure, booty. Let's get the booty. Let's get the treasure. Arr. Did they really say arr, you think? Do you think pirates back in the day went arr? matey. I mean, I'm just asking for a friend. Just one of those things my head just immediately thinks about. Like, you think they really did? Who came up with that? Feels like a Kung Pao kind of day. Yeah, Kung Pao sounds good. Israel has claimed maybe 15% more of a Lebanon. I went along on PLTR here. Ooh, man, going long for more here. Okay, we could be at the top, so don't be surprised here. You know, with these large cap tickers, you know, they're really getting. You know, Qs went right to where I said it wouldn't have that reversal. Now it's popping for more, but I don't know how much more in the tank and the bag she has left in it. Boy, that was a huge spike that I just missed there out of nowhere. SPY on another leg up. How much more juice does she have left in the tank? Yowza, SPY, Q's, beautiful. Again, this is what I talked about. SPY going up, Q's taking it with a little bit more. This becomes a bounce area. It doesn't quite get down to it. It almost does, though. And then bang or rang for more, baby. He's got a 22%. So you're saying Trump right now has a 22% approval rating? Does he really? Because isn't it mostly like usually bad's 40%? Usually we're in like the 50, 40, somewhere in there range, 50, 40, 60, something like that. Isn't that the usual team, right, Crow? I just can't keep. I don't keep. I ain't doing it. Yes, they did. Yes, they do say R. But did they though? Did they truly do that hundreds of years ago? It would be funny if that they say funny. It's really scary when you see the pirates that are truly out there, you know, in the waters. I've seen like when the U.S. military, naval have taken some down pirates, and it's crazy. Anyway, it's crazy. What you know, they're always in some sketch boat or some sketch submarine. These pirates are. That would be funny though. I say funny, but when they go to overtake your boat, they're like, "Arg, give me your shit. Arg, let me tell you something, matey." All right, and then they would pull out an arg every once in a while and just come because. You know, these pirates are from different countries anymore. They don't talk like this, matey. You know, that's just like putting a generic voice to a pirate. I'm like, well, what if a pirate is from like Australia? Well, what if he's from India? What if he's from Africa? You know, he's from South America. I don't think he's going to go, arg, matey. That's all I was thinking. So sell maybe Energy Fam. Yeah, the 4 man. Well, listen, right here, the way this is looking, I always call this the pitchfork. Looking pretty nasty. The trident, you could even call it that too as well, right? I think Brick killed somebody with the trident. Let me tell you something. Anchorman, that, like the first time watching Anchorman, that's so, like that fight scene with all the different, like Ben Stiller shows up, you know, with the Vince Vaughn's of the world, all those cameos. That scene is that movie, a lot of the parts, but that scene in particular may be one of the most underrated scenes ever. That is hilarious. All the different news teams shows up and they get into a fight. Oh man, no way! AFJK's doing it again. AFJK, hey, we're in that. Anything? Oh my! What are we doing, AFJK? What is this? Where did this come from today out of nowhere doing this? When was the last time this popped? Well, it's been since December. Okay, December was when AFJK last. I guess we saw some poppage actually on Friday, the 16th in January. So that had some pretty good poppage. That day we went from 48 up to 75, 48 to 75. Boy, 30 to 67 today. What a move. There we go. Metals popping. We got the metals popping. SLV silver and gold. It's silver and then we have gold. They are both popping. Very similar charts to you as well. Nice, beautiful moves from mineral plays today. Josh is the booty in the bull market. The booty and bull market's boss, you know it. They don't call me, what was it, ass man? Hopefully you guys have seen that episode too. Speaking of great shows, my gosh, that's got to be one of the funniest Seinfeld episodes ever. And then there's a GIF. I mean, you can literally type in "ass man." I would imagine on any GIF server, and it pulls up, or at least Kramer Seinfeld, and that's one of the first one that pulls up, and it's an elongated GIF where Kramer gets out of the car, and there's a back in the day when you'd have like somewhere monitoring the parking lot, like a police or patrolman or a security guard, really, right? And the security guard's like, "You can't park there," and then all Kramer does is he points at the license plate, because he had called them vanity license plates back in the day, a custom license plate like ours, like we have one that says Thanos 1. Get the pun there? Why we named it Thanos 1? Thanos and the number 1. Thanos got the W. Thanos won that shit. Doomsday, Groomsday, whatever that last movie was, whatever it was called, they had to go Back to the Future. They even said that in the movie. Me, myself, who I have very much similar ties to Mr. Tony Stark and Iron Man, go, "We're really doing a Back to the Future?" I gave up on that movie in the theaters, just so you guys know. I gave up on it. You should have heard me. Avery was like, "Shut up." I hate that movie. Movie is terrible. The only good part I like is when all of them show up back at the end, like, hey, at least I get to kind of see everybody again real quickly. I hate the movie itself. The movie itself, I'll never watch it. Infinity War is 1 trillion billion times better than Endgame. Back to the Future bullshit. Anyway, Thanos won, baby. Everyone loves it when they actually like, "Oh, hey, Thanos," but they're like, "Oh, Thanos won, I get it." And I'm like, "Oh, that was a good one." Anyway, ass man, vanity plate. He went to go pick it up at the DMV, and was like, "Whose is this?" I think he was supposed to get a different one. I think in the end was what it was, right? Anyway, that episode's hilarious. Oh man. 25, yeah, AFJK, I've got that on watch. It's halted down over here. It gapped up, hit 71. Now we're halted down at 62.51. That's all over the place. SPY, honestly, team, here I am. I've got Onco on watch. We are slowing down in the small cap sector, but the large cap sector looks like it wants to rip and go for another leg up here. This play is looking another liquidation sweep back on down. And when you see the trident form, nasty upper shadows, those wicks, and we come back and the sell-off starts to happen, but yet we immediately push back into this. This reeks of Pop City, and we're going for 680, 150, I think. 682. 682. So I have this in at 678.50. Oh, and I know who can vouch for me. Mr. Joe, because Joe's got my morning alerts. Joe, what did I say my ultimate high of day was? Joe, do you remember what my ultimate high of day was for the SPY? Does Joe remember what I said for ultimate high of day? Well, we'll just go back and I'll show you what I said for ultimate high of day. Go back here on the chart. Right there. 678. Let's see. You need an assistant. I do. I love assistant. I don't need an assistant. I like doing it all myself. And that's the thing too. Avery helps me from time to time with stuff. But man, then that goes back to the Tony Stark. I need someone like Pepper Potts. And that's my wife. I mean, they are very similar looking, and but I need more of. She doesn't have that Pepper Potts. I'm like, baby, you're just going to have to be like her and just kind of have a little bit of that. You have to tell me to shut up sometimes and really mean it, and say, listen, I'm gonna go see my parents. You can have it all by yourself if you want to for a couple of weeks. Once you shut up, and I'm like, okay, you're right. I'm sorry. I love you. Oh man, Crow, be right back. Sounds good. Sounds good. Hold a casting couch. There we go. I like it. No casting couch. We'll put this back into 3, get a little more depth for the day here. But I do like this. It ran right into it. I mean, literally on the dot. Let's just go back and look at that. Oh man, this is actually a thing of absolute define beauty. Boop. I think it just barely missed. I mean, just barely. Team, if you guys need help, Joe, put that link out there if you can for me, boss, or Ayush, if you have my stuff from my website. Morning alerts. $30 a month. I give you a lot of good information, swing play information, long-term investment information. Every day you're getting levels from small cap to large caps. I'm giving you the playbook for the day. Here are the levels and the lines to trade. Oh, right up to my ultimate high. And I said if it gets over this, that's where It's got room to 81.50 to 682. That's where my next resistance line is. I'll give 680 a little bit of leeway of maybe it fails there first. But if we get over 78.10, it's going to 680, and then we could hit 82 or the 82 mark after that. Thank you. Yes, that's over on Prime Trading Investments. Like I said, these are just trying to do things, many things I can to help you guys. I mean, this is it right here. I know Steve talked about doing one-on-ones with me yesterday, but this is it. $30 a month. Morning alerts. Live stream 70. One-on-ones. I've been doing these forever. That's nothing. $200 for 4? I've left them at half price. The world we live in now, at 23, 24, I had them actually higher. These were more expensive, but I've just left everything cheap. Like, hey, you guys need help. I'm here to help. I'm not trying to charge a lot for one-on-ones by the hour, the morning alerts. I'm here to help you guys out. That's my biggest goal. If I can help you guys out, become a successful trader, learn levels, learn this, the main thing, just find your pattern, what you can do every day. Well, what is it that if I wake up on Monday and I end the day on Friday, what is my, like I did a lesson, the 10 Commandments, which is a good lesson I have on YouTube. Essentially, here's my guidelines. If I do this Monday morning, all the way through Friday after hours, so essentially Monday to Monday, and Monday pre-market, Monday to after hours, Tuesday pre-market, like every day you do the same thing. Monday through Friday, from pre-market to closing bell, after hours, doing your homework. You do that Monday through Friday, you will become a better trader, and that's what I'm trying to do. I say try. There only is do, right? Whatever Yoda says. There is only do. Do or do not. There is no try. There we go. And there's the Instagram and the X. Yeah, it's funny. You can only put so much. You would figure you'd be able to put more text into a YouTube message. There's only so many characters they allow you to put into a message on YouTube. It's stupid. I guess gets from someone having a message, and the whole whatever and just crazy long, but at least a little longer. Give me like 400. I don't know what the character length is, but it's not long enough. All right, SPY. Like we said, now we're going to consolidate in this little bull flag here over our 78.10 mark. We're going to have another leg up and probably another good dollar plus move, in my opinion. Small cap land is starting to slow down just a little bit now as we head into pre-lunch. They talk about this, and I think a little bit too. You get the large caps here and the metal plays, mineral plays. You get a lot of sectors to push and pop like they are. Traders start to move away from that small cap sector anymore. Some days when you don't have a lot of good, solid, crazy, volatile movement. Well, traders know where to go to get that, and it really seems like SPY wants to rip here, team. Go back and look at that level 2 here. There's really not a lot on that ass side to hold this thing down. This looks like it wants to pop any moment to new high of day here. Looking at the SPY's level 2. Here goes new high of day, and there's your new high of day pop. There is nothing coming up to hold this down. There's no one coming in to push this back down. So just reading the tape here, team. I'll pull the level 2 up for you guys too as well, so you can kind of see what I'm looking at. There's just really nothing to hold this play down right now. Absolutely nothing. So when you come through here, no one's really trying to push it back down. There goes some big orders finally. There goes a couple of bigger orders coming through there. But as soon as you eat through them, look now, we're eating through those big orders. So there's a couple of 1,000+ share orders on that ass side. We crack and literally crack it like a dang shell right through them, and it gets those quick instant pops to new high of day. That's what I was saying a second ago. There's really nothing on that level 2 that's scaring me to go long or take this up for more if you're wanting to go long. I think we had PLTR long in chat from one of the traders as well. Let's go back to NVDA. Not really much surge on it, still kind of holding back. Q's getting a little bit that move with the SPY, but not nearly as strong follow through, not coming in. Surprised we're not getting a little bit more of this volume burst right there. You can see it's pretty good volume right here, but not follow through on this next candle right here. And again, granted, back to what I said earlier with the whole how much more is left in this. You are, in my opinion, from that move up, you've made a really good bullish move. We're not seeing day-wise, unless we get some sort of tweet, Trump news, whatever, the 10, 15 point mover, or even the 7 to 9 point movers. We're getting 4, 5, 6, 7 points at most, somewhere in there. Got to think about from lows to highs from the day. We've already pushed quite a bit for what the SPY typically has been doing recently. ELAB still holding that 585, 590 corridor, not cracking back through it. We do have OnCo channeling 220, 245 or so resistance. Really just channeling in the lines that we had in. All right. So coming back down a little bit there on the SPY. Nice, another wick, but I'd imagine this play holds up even through the call-in show, which we're about to be starting up here pretty soon. Call-in show topic today. Don't forget, what scanners do you use? That's huge. What scanners? Also, what are your chart settings? Do you use different time frames? What level 2 do you use the time in sales? Do you have different moving averages on your chart settings? Do you have what are they? Do you go back 5 days? Do you like looking at just the day? Do you zoom in real tight? What is your chart setting? And of course, what scanners do you use? What are the scanners and how do you use them? And then on the scanners, which ones do you use the most? Because I could say I use these scanners, but I'm only looking at a certain scanner, right? So essentially, I'm just looking at high of day momentum scanner. I'm looking at the high, the gap up, what's up on the day, like percentage wise. I'm looking at that. I'm looking at Momo scanner, possibly to see the high of day Momo go off with. So those are typically the main ones, are the halt scanner, seeing what's halted and why, I'm not seeing this. Why is this halted? Typically the main ones. What was really funny earlier, BF.B, BF.A, Michael Noss, I guess his bot triggered that on the Momo scanner I have, one of them. I see BFA hitting the scanner actually right now and hitting new high of day, BFA and BFB, which it's BF.A, BF.B, or period, whatever it is there. Check this out. Watch, still just me in here. I don't think Steve's on. Yeah, look at this. All right, so here, check out the live when it's just me. Check out the live. So we've got every single animal is in my room right now. Every dog and cat. So let's count them up. We got one cat and the second cat. All right. Now let's go through dogs. Rue 1, PD 2. Elle's right here. You can see her cute little face. That's a dog head right there. She is completely... There's 3. Merlin 4. Margot 5. Domino. There's 2 dogs right there. That's a dog's head with the little arrow on it, little white spot. So we got 1, 2, 3, 4, 5, 6 right here. And then we come over to this side. We got 7 Queenie. Oh, all but 1. Einstein's not back here. And then we have Jack, Miles, Chester, and Neville right there. The only one that's not out here or in here is our tortoise, essentially, our 16, or he turns 16 tomorrow. Essentially, you might as well call him 16 now. Here comes the SPY. There we go. Spizzle, trizzle, crizzles. Come on and give me up to my 680 mark. You know you want it, you big, bad, sexy mama gemma, you. Yeah. It's a dog life. It's a dog life for us. It's a dog life for us. We're never mistreated. We get everything we want. Oh, man. TAC, we'll go over that, and then setups. We got a lot of talking to do the next hour. And we do have a 5K eval to give away every Thursday. For first-time caller, long-time listener. So I want to hear today from a first-time caller, long-time listener. Why? Because first-time caller today gets a 5K eval. So every Thursday on the call-in show, if you haven't called in before and you're a first-time caller, you're going to get a 5K eval. Boom, for free. Whammy. How it's done, you'll email us. We'll deposit the credits into your account. And then you can go get a free 5K eval. Or really, again, if it's that way, they're just in there. It's like, you know what? It's free 5K, but it's X amount off credits, right? It's credits you get. It's going to be that you could put that toward a 50K, 100K, right? Because it just credits into your account. It's kind of like getting a gift card, so to speak. Spend the gift card however you want, right? Gift card $25. Go get $25 of stuff for free, and boom, you get $25 of stuff for free. Or you know what? Been wanting to get that thing that costs $50. Now I got 25. That's half price. You know, so use your brain. Think of it that way. You know. There goes, well, yeah, I know the Mitch just talking to the chat. Yeah, USO probably getting a bangerang move right now, so we'll get the level 2 off. Just kind of showing you guys how to look at that. USO here getting that move up, and I guarantee, oh no, it's going down. Oh, duh, market's going up. USO's getting that nasty move down. That must mean silver's probably getting a good move up here. Oh, it's still not really getting too bangerangish. And gold too as well with a decent move. So those aren't moving up as fast, but they're SPY. I'm telling you, SPY has 680 written all over it. I said, I think even through the call-in show, I'm saying SPY holds up. We might see, and especially if some sort of news comes out and they do work some deal. Nothing I'm seeing right now. I think I'm seeing a correction. Reporter Barak Ravid says in X post that Israel Prime Minister Benjamin Netanyahu has moved to start direct talks with Lebanon. All right. Lebanon. I always call it Lebanon. Lebanon. All right. So that could help spur that move up even more. Do you have a bathroom set up? We do. We actually do have a bathroom set up. It's absolutely phenomenal. If you haven't ever seen it before, I could probably show it off to you. Yeah, it's funny that... you know, you guys that haven't ever seen it before. Where is it at? There it is. I don't know why it wasn't popping up to begin with. I was like, where in there? Where is it at? Here we go. And I'll put a link out there for my Discord too as well. Always forget to do that. Here we go. Got to show this off real quickly for the people. Here we go. There she is. Trade the Poo setup. That's right. One-time limited offer for you guys. I'll sell it for $19.99. That's right. Soap included. It's a twofer. This is a twofer. This is one you don't pass up. Why? You get a Trade the Poo setup. A bathroom setup that you can also remove the monitors and play the drums. I didn't even know that until my man Florida Joe let me know that I have created a double whammy. That's right, a 2-for-1 deal. You get an amazing electrical drum setup powered by my NVIDIA 5500 G4 5550 processor that comes with an Eluxer Muxer Dabble Duxer. That's right. Listen, this is a lot like oh gee golly. It's like a flux capacitor essentially. That's what I was looking for, the word I was looking for. It's like having a flux capacitor and a DeLorean. You get a DeLorean and then you get a flux capacitor. What's a flux capacitor, you may ask yourself? Essentially you throw some bananas and old whatever pills of banana, whatever, and you got a time machine. That's right. You got a DeLorean with the doors go up, the freaking tank looks like it's fast, it's not fast. You know where it's fast? When you get over 88. Because when you get over 88, which may take you about 8 minutes to get there, you're going to the future or the past, whichever way. Trade the Poo. Get it while it's hot. Get it while it's hot. Drop it like it's hot. All right. It's a limited edition run. I can't let you guys, take advantage of me. And I've only produced 4 of those. I only have 4 of those in production right now. That setup it's ridiculous, Joe. It is redonkulantos. Your long Tesla there. All in Tesla going in long. Went all in on the Qs as well. TQQQQQQQ. Nice. I really do feel though these plays are getting getting a little heavy, a little top heavy. So just don't be surprised if in the end, we do see some sort of, consolidation coming up here over the lunch hour, which we're about to get into the call-in show. as well. Which we do have an intro for now, and it is absolutely beautiful. All right, waiting on Steve to join. Steve the Achieve. Got all the different shows he's on. Hopefully he's got the hour down right today. Again, today's call-in show comes with the 5K eval for free if you're a first-time caller. Secondly, what to call in and talk about. What scanners do you use? How are you using them to your advantage? And what are your chart settings? What indicators do you like to use? What time frames are you using, essentially? Spoiled animals. You're okay, Merlin. Everyone's happy as a bug in here. Snug as a bug, I think is how that saying goes. Woo! SPY's still going. SPY's still going. That means we're going to get some more movement up here from Tesla and probably NVDA and some others along the board. We have 1.21 gigawatts. That's truly why Doc is named Doc. And I hate that he's not around on TTP. We used to have McFly. McFly passed out of nowhere. One terrible night in May of 2024. He was young, and I've heard this story before. I'm like, oh, that's how I've heard my friend's cat or this person's cat. Out of nowhere, he just meow, looked like something scared him, and he jumped up really high to nowhere, and then essentially, I guess, had a stroke. I was worried, and then he lived for about an hour or two after that. I took him to the emergency vet, and right as I got him to the emergency vet, he'd probably passed within like 5 to 10 minutes of me being there, and they're like, yeah. And they were saying the same thing. They're like, this happens with certain cats. Like, it just happens. I'm like, what? Oh, here comes 80. God, here comes 680 finally. Here comes that surge. Here comes that surge right here, team. Boy, oh, what a move. She is motoring right now. Motoring. I forgot how that song goes. Oh, man. Yeah, this is nice, good squeeze right here. Good squeeze here on the SPY. Nice, good move on up here. Do we have anything else really getting some trucking with it? We got Google getting a good move. Apple finally getting that nice little surge here. We know Tesla's already moving up with it. I'm betting that means NVDA got a little pop there, and there she goes. She's getting a little bit of a move on up today. So starting to get those moves here from the big boys. SPY, and the Qs here. I'm going to go to Qs, not Google, but boy, looking for that inverse head and shoulders completion. We got it. We had double the move after that. You know, if you think about it, we go from the shoulder to head portion was essentially 603 to 606.50. That's a 350 move, 350 area. Then we go from 606.50 all the way up to 610. That is another 350 freaking move. This is huge movement right now on these. Here comes 680. We're gonna get 682. SPY right now, team, if you're looking to trade this, snipe this on the way up, please start to scale out here. I don't care if you're in Tesla, whatever you're in. This is definitely going to see resistance at 682. Qs, I'd have to go back and try to find it on my end. 682 is going to be strong for SPY. After this overextension, I knew this was probably coming. It took a second out of that 678 mark, but here she goes. Blowing up perfectly right here. Steve must be going bonkers and trading this possibly. I don't know. I don't trade this time of the day. I like to just call it as it is and be the sports play-by-play kind of announcer. This is where that mode starts to kick in. My trading for the day just completely takes a stop, and I like that about my head. It doesn't have to keep trading. It is just, hey, I'm done. There are certain days, like my small caps, I've taken bounce plays. Like we got filled. God, what was it the other day? Again, the Sky Q trade that I showed you guys off, that was close to being halfway through the day. And if I find those bounce plays that I like in the small cap market, and we can go back to Sky Q here, and this was day before last, right here. Pretty much right around the middle of the call-in show, I had this order in. This was Tuesday, if you do remember that. After I got off the one-on-one live, or after I got off the TTP stream here with you guys, I told you guys where I have Forever Line in for a bounce play, and it was absolutely perfect. SkyQ was perfect there. So there are certain days and times where I like tickers for a bounce play when it is the bullish day, bullish ticker. It's got that look to it. Today, I don't really see it too strong across the board for that move in the small cap. SkyQ, though, is not bad back at this 710 mark. It's a Forever Line that I have in, 710, maybe down into the 690 mark. Not a lot in that small cap space. Now, again, here goes SPY starting to top out possibly a little bit there. Nice, strong bullish move. Sweet. I'll go over to the Google real quickly. See if Steve the Achieve joins soon. Steve could be trading this, or maybe just truly has something going on his side today. Which I can only call in show by myself. Yeah. Cool. I'll do that. That's what I was doing now. I was like, I'll just go ahead and join it. There she is. Oh, I've had to log back in. Okay, cool. What? Hey, Yoshi may have to message me the password number. I found it. I was like, "Where's the password?" I guess I didn't save it. I don't know why it didn't save it. Oh, okay. Okay, duh, because you're the one doing that. Duh. You're good now. Let me join this. Yeah, you're good now. I'm coming in. Duh. Join now. There we go. Boink. There I am. I am in. Okay. Boom. There we go. I've unmuted it. The EV Mux. Okay. Well, I know here this will bring in. There we go. At least for now. Until we get Steve in the call. Hopefully, can you hear me now, guys? Back on EV Muck, so hopefully you guys can hear me. Yeah, here. Cool. All right, so yeah, I want to run these in real live. I'm going to keep my eye on QMs, TCGLs of the world. It's like, oh, what is going to happen with these plays? It's usually what happens. I usually forget about them, but I have luckily not forgot about the QMs and the TCGLs of the world. ELAB trying to get a little bit of a pop off that 680 here. We'll go back into the smaller time frame here. We'll go to the 3 minute at least. Trying to get this kind of looks a lot like earlier on Onco, and we'll go back to Onco. What it looks like it's doing is this. It's kind of finding this base and bottom and looking for that U shape back on around. And speaking of Onco, look at this working the channel over and over and over. 220 back and forth. 255, that stronger resistance area up top. And then the strongest, of course, coming in right around the 275, 280 mark. Back down below, this is most likely going to be your main corridor for the support for the day. We have the VWAP moving average coming in behind it. That 50 I do like, even going to the 5 minute time frame just to see the little bit larger time scope. You can see back down here, we're going to have a lot of support in the lower 2 area. However you want to dice it up, we've got some good support down there in the low 2. So this play looks like it's going to be the one that holds up all day. And don't be surprised if look at ELAB, look at both these pops out of nowhere. Don't be surprised if we're looking at Onco tomorrow. Almost 100% positive, I promise tomorrow we're going to be looking at ELAB again in pre-market, SkyQ again in pre-market, and Go again in pre-market. So here's exactly what I was looking for here on ELAB on the pop back on up. You can see the wedge was getting tighter and tighter and tighter and tighter and tighter. Put your lines in, trade them. There's your downtrend line. You come in here, you put your uptrend channel line in too as well. Stop messing with me and just put everyone in there. And look at the angles, 5 degree, 4 degree, the exact same angle moving into one another. Beautiful downtrend break. Like say we go into a 15-minute time frame. That's a pretty nice flag. Does have this weird dinosaur kind of like pointy head to the top of it. Beautiful flag though forming overall. Saline. What happens when you have a downtrend and a trend line? If you have a downtrend and a trend line, what kind of flag is that? Is it a descending triangle? Is it a pennant flag? Or is it a bull flag? What's up, Jen? How you doing, Miss Jen? Jen, drinking a gin and juice maybe this weekend, Jen? Now that would be one thing. There had to have been a gin at some point on the face of this earth. Oh, an ELAB. Macawackies right there. But anyway, not only was her name Jen, but she liked to drink gin. I am sorry, El. Domino, get up. Domino, you did this. Or Domino, no. Domino, up. Domino, get up. Get up. Domino, get up. El, come over here. Come on, El. El, get in there. I'm trying to get the bull. Oh, and then Dad's down. Dad's down. The chair fell over. Oh, the dog. Get up. Domino now. Dad's being dad. El, come here. El, come here. Ellie. El. All right, El, go. I can't do this, guys. That's what happens when you have. This is what I was saying. The first pack didn't do this. Dad down. Yeah, Dad down. Dad down. Dad's down. Yeah, that's hilarious. And this is what they do, though. They'll lay on top of one another. And Elle's the smaller of our Great Danes, and so she was like, "Okay, y'all are too heavy for me." These are truly sisters. They have the same mama. So these two girls right here they are almost identical. They have the exact same mom. They have the exact same bark. Oh yeah, Dad was down there though. Took a shot. Get the call-in show going. I guess Steve's not coming in today. I guess something's up with Steve. Hopefully all good. Gin sounds good now. Good, Gin. Yeah, Gin. That was it from earlier. And then saline. Yes, pennant. It was. That is true. Pennant flag. Good Jorba. Beautiful squeeze right there. They usually typically won't pop that beautiful all the time. That's a better pop than normal right there. That's a pimp alert. Dad down. Yeah, Carlo, any of you guys want to? If we want to get into the call-in show, whatever you guys want to do, it's up to you. I mean, I can just run it this way. If y'all want to throw the intro out there, we could throw the intro out there. Whatever you guys want to do, I am here for anything. We got Dave, so we got Dave on board. Okay, cool. Did y'all see that? Did y'all hear that? Beautiful. Absolutely beautiful. Well, if you guys do right now, so if you want to call in, call in. The number is the number. 617-544. You're good. We're getting my mic situation. Yeah, it's weird here. It's like since Kevin left the call-in show. It's like Kevin's got to come back now. It's the only way we can get the call-in show. Because now I'm back to my back seat role. Oh yeah, let me shop. Yeah, boom. Cool. Let me know. Let me know how we sound. All right, so back to what I was even saying. ELAB, high watch. Onco, high watch for tomorrow. Keep those on high watch. Silver up 2. We got the other coins are moving. We're tracking, just joining. Coach TB. What's up, TB? Have we found out what TB stands for? Oh yeah, Tony Braxton. Tony Braxton. Duh, you're not the Tony Braxton, the hot, gorgeous, beautiful singer. You're the handsome, studly coach. Talk stocks. Audio's fine. Cool. Big me to fit me. We sound good. Coach TB, Jack, we hear me? How about this? I want to sing you a song. Today, we have Carlo talking to me. He says it's 11:19 in the Central Time frame. Sky Q moving again. Yeah, okay, nothing. Okay, I thought that was popping up. It's got but that's gonna be on watch tomorrow too. That's gonna be on watch tomorrow too. All right, we're working. All right, so I'll get into me. Not that it's always, got to be about me. I want you guys to think that. But just scanners. I don't use a lot. I'm not a big scanners guy. I think the biggest thing for me when it comes to scanners is finding the one or two you want to use. I wouldn't go overboard using 50 scanners, at least at first. Get to doing this like the tax of the world for 20, 30 years and the Michael Nasses of the world or whoever. You've been doing it for 15, 20 years and you know how to use them and find them and you're using out of them appropriately. Too many could be too much effort with too many traders in the world. Even just the trading style that they want. They want to go long, they want to go short, and within going long, they want to go short. So they have all these different styles. It's not going to work at first. You need to really narrow it down and just find it over and over and over and over. And so, my opinion for me was bouncing. So I didn't really have to look at the right? I was like, okay, what's because I need to know what's up for the day. And that would be maybe lead me to like a news scanner, if you want to use news. But Thinkorswim already has the news already. So I have TOS. I love their charting. It's just something I'm never going to move away from. I love using them. I can just press the in button, which is their news button. And then there's a bed back here. Merlin, go lay down. Merlin, yeah, come on, right here. Play with me. Queen, get up. Merlin, right here. Right here. Bed. Merlin, right here. Right there. Yes, sir. Queenie, you're going to lay. No, Queenie, you're right there. Anyway, sorry, guys. Dealing with kids. So I didn't look a bit anything for the most part. The first 4 years of my high day momentum scanner, the local scanner, the gap scanner. What's up today? And what's moving today? Why is it? What's the new one? Why is new high day, right? That's all I cared about because I was going long. And then even when you're going short, that helps you and leads you to where the short, shorting the highs, reversal areas because it's spiking. So you need the higher day momentum scanner to find those if you're not already looking at it. So I kept mine real simple. I think there's a lot of scanners and systems you can use out there. If you want to use a different news system, all for it. Go do what you like. I'm not going to promote one. I don't think there's one better than the other. There's a few you can use out there, or you can just keep it simple like me and use something that's free. TOS, Yahoo Finance, FinViz, Stock Titan's another one I use. There's many of them. It's like you want to know the float. Oh, go to FinViz, go to Yahoo Finance. There's a little website called knowthefloat.com. That helps out for sure. So I've always simplified the process. I was never one to at least because I saw it first. I wouldn't overdo it. When I did overdo it, I was doing way too much. It did not help me out as a ball. And so for me, main thing is I'm always looking at, first thing I'm looking at is a gapper. Why is it up? Is there a decent reason for it? Then after that, it's nothing but the Momo scanner. Momo scanner, high day momentum scanner, halt scanner. Maybe if I'm not seeing something that's halting, I guess like maybe even earlier. I don't know if Pro caught it that that first mentioned AFJK. That's how you catch those plays. Like, oh, whoa, it's halted up. Why is it halted up? That's it for me. There's a lot of other scanners and different things that you can plug in. I just kept it simple. Where I'm just looking at the high day momentum scanner. I'm looking to see what's spiking, charting from there. Because then I can go to ONCO, I can go to ELAB, I can go to SkyQ after I know that it has the mob. It's not people that are trading it. It's a party that people are showing up at. Well, I can show up at that party and get some of the snacks. I can get me a couple drinks. I can hang out for a little while. We can't overstay your welcome. It's a party. I always say, you ain't gotta get out. You ain't gotta go home, but you can't stay here. Get out of here. That's kind of that's how stock trading is. You can't overstay your welcome, and so I didn't want to overdo it with the scanners. Now overall, what you just saw earlier, and the second part of this is the trading part. And you see, I'm going through a 1 minute, a 3 minute, a 5 minute, a 15 minute, a 4 hour time frame. Sometimes going to the daily, but those are my favorite: 1, 3, 5, 15 hourly. We use 1 hour, 4 hour, either way. That's my bread and butter. And I see other traders, and I'm going and do. Sort of Joe's trying to pop in. I can't hear you yet, Joe. I don't know why. I don't know why I can't hear you. Oh, go! I got to join. Yeah, Google Meet. No, Steve. Yes, tack. No, Steve. Oh yeah. Hopefully, Steve's okay. I'll reach out to him. Do I have you, Joe? Joe's coming in. He's coming in soon. I'm telling you, this Collins show was like a magic trick. Get it figured out. Joe will be coming in soon, though. But my 1 minute, 3 minute, 5 minute, 15 minute, 4 hour, 1 hour. But I'll say when I get to doing like the Michael Noss of the world or the Adrian Manns of the world, you're at the money show. These guys have been doing it for 10, 20, 30 years. They're doing and teaching the same level, same time intervals, essentially. And which ones are we using? It's just awesome. I was on the right track the whole time. And not having a lot of lines in. Whether it's you like to use, you can see there's a lot of traders that love the VWAP. I like it. Moving averages, the 9, the 50, those are my two favorites, the 9 and the 50. And that's it. That's my charting. Very, very simplified. I don't want a lot of lines on my chart. I don't like to overdo the process. A lot of the time that just messes with when I get into those trades versus very few lines, indicators and charts, so that way I'm not contradicting each other. I did that happened a lot early on. I didn't have many lines, didn't have very simple. Joe, are we in? We see you. How we aren't hearing you is all right, I'm gonna put this out. And there's the Google Meet if you guys do want to join.
Things freezing up on my computer.
There we go.
Yo. Hey, the audio's coming through.
I hear you. Do you hear me?
I sure can.
Love it. All right, so Joe, I just gave my, kind of scanners and the charting settings that I like to have and keep. It's very simple. What about for you?
Yeah, for can you say that again? You said the scanners? It was echoing just a little bit for
How
me.
about now? Can you hear me now?
Yep, I can hear you all right.
No echo?
I do have echo.
Huh, I have no echo. Make sure on the EV Muxin you're muted, both top left-hand corner, bottom left-hand corner. So there's two things to mute, top left-hand corner, and then your mic itself in the bottom left-hand corner.
Yeah. Let me do that real quick. All right, how's that?
How is it? You sound great to me. How do I sound?
You sound good. I still get a little echo, but I'm going I'm going so slow talking because I can hear everything talking back to me. Hang on. Okay, how's that?
How is it? Let's keep talking until I don't have an echo.
Perfect.
There we go.
I think we got it there because
we're good and we're rocking.
Yeah,
so talk about your setup. Yeah,
it's funny.
What?
Yeah, you gotta mute the website. You have to mute the studio. You have to make sure that it's just a lot of different audios going in different directions. Yeah, but anyways, go on. Yeah, good to be here.
Yeah, good to have you, man. Hey, I love it. I love it. It's I get different people to come and hang out with me, so this is a good time. By the way, ELAB just halted down. No news on it, but it did get a huge rug pull from 640 down to 574, halted down right now. No offering on it, but it is halted down. But yeah, so of course was going over my charting settings, my overall scanners and what I'm looking for, what scanners I use and why I'm using them. Very simple process for me. I want to keep it simple because I just want to essentially, they're telling me, hey, go look at this chart. And then my job is to go look at the chart and break down the chart and trade it. And so that's essentially what I let the scanners do. It essentially is doing the hunting for me. And then I can go do the slaying essentially after that.
Yeah, absolutely. And I know in small caps, especially, it's nice to have that high momentum scanner going because a lot of times during the day, I mean, you know how it is in pre-market, you get several runners. They're all trading places too. So having a scanner to kind of let you see which, like you always say, which one is getting the mob. That whole thing with money flow and where it's going is really important. And you can see that, in the scanners. I know on mine, I have a separate scanner with Thinkorswim. I have a scanner that a good friend, Taquito, you know him, he had developed, and it's just awesome. And but it searches for trades per minute, percent change, volume. It's I really like to have my settings, especially pre-market, above 500,000 volume.
Right.
I haven't been trading pre-market either. I've been really just starting after the open, but as you get into that 7 o'clock hour, I'll up it up a little bit, 750 or a million shares traded, you know, and then I just kind of keep increasing that throughout the day, just so that way I can kind of keep an eye on the ones that are moving. But then, you know, there's some of those other scanners out there that will they'll pick up on the next stock that really starts to take off and takes attention. And sometimes that's hard when you're starting out new, is to find something like that works for you, because a lot of times you can end up you know, stuck on I mean, trading low volume's fine too, I guess, if that's your strategy. But you know, I'm really looking for higher volume stocks, you know, bigger moves. That's what I want to see. So
love it. 100%. Yeah, I think it's one of those things where you got to find that too. You know, what floats your boat, so to speak. You know, and some people can trade a plethora of stocks, whether it's low volume, high volume, you know, big spread, little spread. The key is most can't. And so you have to figure out where your comfortability zone is, so to speak, in my opinion. And that's the key, is find where you're comfortable at, what you can trade daily without your brain getting in the way, you know, and that's because that's going to happen a lot early on. And yeah, and then that's what a lot of traders struggle with, is that the charting and the settings and what to use, and especially then what scanners to use, because I think, and they all think it's super necessary at first. I think people get overwhelmed, and they overwhelm themselves with that, you know, where they just they try to get too much going on early on, where I'm like, listen, you don't need scanners and all that. Like, when you first start, you need to just worry about like a stock, like a ticker, maybe two. You try to do the squirrel game early on, and you're going to lose, and you're going to lose a lot, versus sitting back and just waiting for that one trade, that one stock to form a setup that you can trade. You know, it's just a lot harder to just go from one to the next and one to the, you know, and flip through them and flip the channels. We as humans, just because, you know, like back in the day when I went and rented Sega or whatever I'd rent and went to Blockbuster, you'd rent 2, 3. I'd more games than mirror, whatever mom would let me, however many I'd rent. I mean, there were times where I'd rent, and I hated it when I look back at it, and I'd get like 4 games to rent. I'm like, oh yeah, I got all the ones I wanted. We're going to get really tied into one, and by the time it's taking you to get 3 days over the weekend to have those, come Sunday to take them back, I'm going, dang it, I didn't even play these other 2, you know. So yeah, I rented 4 games, but I didn't play them off, because you know, there are times, very rarely, where then on to the next one. Okay, let me play the next one, right? And you're you know, I'm acting like I'm putting a cartridge in, Joe. That's how old I am. Like I'm putting in a Sega cartridge.
Yeah, cartridge.
Yeah, it isn't working.
It's not even CDs.
Hold on, we got to blow it out. Remember, we had to blow out the old Nintendo cartridge, right?
Blow it.
Yeah. But yeah, so that just reminds me of all the stuff back in the past. You just can't do it at first. Find your one game you like to play and play it over and over and over until you know that game and you can beat it, and you're just beating the crap out of it. And then you can move on to your second game. And that's how I, you know, treated stock trading. At first, I was trying to trade too many or play too many games. Wasn't good at any of them. Like, okay, how about I just trade this bounce trading game over and over and over? Actually, I'm pretty good at it. I'm getting pretty far into the levels. I haven't gotten that far yet, but way further than all those other games I was playing. Let me try this one out, you know, and let me stick to it. And that's how I, you know, kind of concepted that was a concept to my being in stock trading. Like, Josh, you can't do all this stuff that you want to do, but here's one thing that you're decent at. There's one game that you're pretty decent at. So why don't you just go trade that game over and over and over? Yeah, exactly. I always talked about the muscle memory, and that's what your brain does. It builds. I mean, like I was so close yesterday. So yesterday, Joe, we're on the call-in show, you know, with the call-in. So the lunch recap with Steve. And if you remember during that, I don't know if you're kind of in and out of it, but I jokingly brought up, he said, well, Josh, what's your crystal ball saying? I brought up this goofy mic because it kind of looks like a crystal ball. And I was like, it's going to go to 76.14 and then it's going to reverse. It went to 76. I was close. It went to 76.50 and then got the crazy reversal back on down. But it's just because you see these charts over and over and over. I've had people throughout the years come over and say, hey, Josh, hey, AK, break this play down for me. And then haven't even looked at it all day, but I can go back. Again, it's just a chart, and you break the chart down and what's going to happen. And then to come back later and say, oh, man, thank you for that alert. That was awesome. It was a killer. You know, I got a great trade out of it or whatever. But that's why I always simplify the process. I realized that for me early on. I don't need all these scanners. I don't need all this. And then you're paying all this extra money a lot of the time for those scanners. And then I've worked with people where I've seen people that have their chart settings and they just have, I feel like I'm looking at, it's just, I can't even make it. I can't even see the chart anymore, you know, because they have so many lines or indicators in. And so, yeah, for me, it was just simplifying the process, my man.
Yeah, yeah. I've got an analogy with that too, with playing music, and a lot of the guys in the chat have heard, that I played music before and things like that. But when I was young, starting out, obviously I wanted to become the best I could be at playing piano or saxophone or whatever it was. And I progressed pretty well, but it wasn't until after I got past high school and I got hired by a first kind of professional company to be able to play in. And that summer, it was with a amusement park called Cedar Point up here in Sandusky, Ohio.
Yep, yep.
Real famous for the shows. The one thing that was different and really increased my skill level was the fact that we had to play the same show 6 times a day throughout the entire summer. So the amount of dexterity that got built into my fingers from playing the same thing over and over and needing to make sure that it was right and perfect in front of the public, it built the skill that became lifelong. It wasn't a matter of trying to read the music and learn it and play it. It was more, I was speaking the music and I could just do it. It was coming from my mind. I'm living and breathing the music, and that's kind of what I see you do too with the charts as well. That's something that I think all of us traders are trying to get better and better. It's that dexterity to know what to do, where your entries are. It does become robotic. It does become automatic.
Right.
Don't get into the emotions of it.
All right.
So
We have a caller. Who do we got calling in today?
It's Tack. Good morning.
What's up, Tack? How we doing? Hopefully we heard
Hey.
you better today than we heard you last Thursday.
I know. You guys are talking about a subject I could actually talk about. Oh, let me turn on my scanners. I got scanners all loud. Here, on my scanners. I don't know if you can hear them. It always pays to have a scanner, but I really don't use it. I use it for news. But you're talking about trading, starting to trade. I've been training traders for about 6 years now. They usually come into my room because my son knows them. So you had to be a graduate or graduating from finance or economics or something like that. He has to know you in order for you to kind of like get into the door. So I usually fund them. I give them a few thousands of dollars, and we go about it every week. And I train them the best that I can, because I usually do get them jobs in Wall Street, or I'm coming from a finance background, so I still know a few people in the business, and I try to get them hired. My son is actually a quant right now, which is pretty cool. And the one thing that we do is I teach them how to trade pairs. So we're always trading a long short position. It doesn't matter what's going on in the day. Traders here usually don't even put on the news, because they trade like TSLL and TSLZ or any other type of pair that I put down in the chat. And this way they kind of get used to the ticker and how it moves. So, chasing things is good, but I'm a little too old to do that. And that's the way I'm kind of teaching them. Knowing like charts and all, I teach them turtle trading the best I can. I don't really get too much into it, because the whole thing is just kind of understanding, when this one goes down, the other one should go up. And that's what I kind of try to teach them. It's more like a muscle memory kind of thing. So it's a good subject you guys are trying to teach right now.
That's awesome. I didn't know that you were doing that. Fun. So essentially you're like a mini trade the pool, huh?
Yeah, probably not that much capital, but it is a few accounts that I'm trading. Probably like 8, and it has 401k money, it has IRA money, and it's just regular day trading accounts. So I try to hedge off of the long positions. Sometimes I don't touch the the smaller trading accounts because the big accounts are doing so well. I use the smaller accounts to hedge. So I'll trade SQQs or FOXS or FIX. You know what I mean?
Yep.
And most of the day, I'm just kind of just sitting around checking screens. I really don't do too much. I mean, that's why I'm always typing. There's not really that much to do when everything's kind of running on its own.
Right.
It's always I think the biggest thing, you're always talking about what's running, but where are you getting the information from? Can you talk about that when I get off the phone? I mean, are you getting this from a specific squawk box? Because you're only as good as the information that you get. You know what I mean?
Right. Well, do you have like certain favorites that you go to every day?
Like trades or squawk boxes?
No, for the squawk boxes, as in essentially where are you getting your information from, and how reliable do you feel it is?
Finance news. I keep up. We keep up CNBC, Bloomberg. We got a lot of screens. So CNBC, Bloomberg. Oh, what's the other one that's on Thinkorswim? And the one Schwab. I do have one or two squawk boxes. One of them I got from a competitor of yours, but it's very reasonable and it's pretty much inexpensive, and it's pretty accurate. That's the main reason it's accurate. So squawks are real good, for the runners, like how you guys say, ELAB or this or that, because people, I'm pretty sure, are saying, where are you guys getting these runners from? They want to know, where are you getting this information from? So if you could talk a little bit about that, that will help me out a little bit more.
Yeah, sure.
But other than that, trading a set number of stocks every day, for me, I would gather my list, just my personal list, just from the volume. I'm not going to trade a stock that has no volume in it. So the ones that usually run are like TFLL, FOXL, TQQs, and the shorts, of course. So, TSLL has a 73 million share count right now, which is pretty reasonable. The lowest stock I have on my list is 147,000 shares, MPWR. So I'm not going to trade something that doesn't have a lot of shares traded or a low implied volatility. I like to trade vol over, I guess, 75 vol is good, implied volatility. I'm not really too worried about put to call ratio, but implied vol. If you get stocks that like TSLL has a implied vol of 101 right now, which is pretty juicy. What's more juicy than that is FOXL at 122 vol. That's huge. And on the short side, since everyone's selling all their short positions, UVIX has 162 vol right now. UVIX, 162 vol. That's because everybody's selling. So it's good to identify the position with what it actually means. Like if you go short oil, I'm going long metals. If I'm going long oil, I'm going short metals. It's good to know the relationships, I guess, of what you're looking at. It's good to know how to trade, but it's even better to know how to trade it and what you're trading.
Yeah, it's kind of just sets you an advantage for the next day and the weeks to come. So you're already more mentally prepared versus, when you first started traders, like I know you've worked with, that aren't there. You're essentially always preparing yourself for more and more to come, and the more prepared you can be, the better your trades will get.
Yeah, we actually keep a playbook. I actually keep my own playbook, and I know the traders keep their playbooks. And of course, your playbooks are like your best setups that you have. You got your A setups. Everyone knows what their best setup is. You ask anybody, I'm pretty sure Crow has his own setups too. Tuna, they have all the best setups. When you think something is going to come back down into the range, or when you think something's going to bounce or a reversal. So it's always good to know those setups and chart them, and maybe take a snapshot of it and keep it in the book. And when you see something starting to accumulate that way, and you kind of say, "Oh, hey, this looks like this setup over here. Yeah, I'm pretty good at this this month. I'm 75%. So let me sit down and watch this." So it's always good to know, setups and what stocks should do, not what they're going to do, but what's going to be your best way to win.
Yeah.
So that's really about it. That's really
That's a
about
good.
it. But
I never think
I'm not
about
a newbie. I'm not a newbie, but I didn't mind calling in. It's okay.
Yeah, well, good. We need someone to talk to other than just ourselves. So yeah, hopefully we'll get a first-time caller at some point to call in, so they get a free 5K eval. Geez, I just call in and say, "Hey, first-time caller, love you guys. All right, get that free 5K eval." just hang up.
It is. Everything is good. Don't even worry about it. So thank you. I got to get off the phone now. I see people starting to accumulate in back of me.
Oh. Have a good one, but have a good weekend, Tack. Have a good weekend.
All right, take care. Take care, Joe.
Thanks,
Good words of wisdom there for sure from a man. Yeah, I didn't think of it that way. Of course, I'm a big, Joe, we love sports. Football, you think every head coach, say what they got that thing and all their plays on it right there, that's it. And they know, the better coaches know in what circumstances and what situations. Okay, it's 3rd and 2. Well, 3rd and 2 versus this team, this is what has the highest percentage to get the yards that we need to get to. You know what? Even though there will be times, and I know you've been there before, watching your teams play and going, 4th and 1, and we passed it. What are we doing? We didn't want to run it you couldn't get 1 yard. You couldn't run it. What are we doing here? But yeah, I mean, that just kind of reminded me of that. I'm such a big sports maniac, of course, and then being in that field and loving and wanting to even be an offensive coordinator and football back in the day was like a passion of mine. Yeah, I'm like, yeah, there you go, Josh. That's right. Because then there'll be certain times against certain teams, like as in my point being, I used to trade a lot of trend line cracks. I'll put a trend line in every time. I mean, from 21, 22, 23 to 24, you put a trend line in, Joe, you crack the trend line, it goes down. And then you get it was so easy. But now that play in the playbook, they figured that play out, right? So to speak. And that play's not working right now. But now, okay, flip back over. Oh, no, bounce plays though. Oh, these bounce plays and these breakouts are money right now. And they can't figure this out for whatever reason. So let's just keep going to it. And you'll see that in certain games where a pitcher will go back to a certain pitch and at certain area of the strike zone because he knows that batter is weak at that area. You'll see a football team that says, hey, I'm going to run these 3 or 4 running plays because you can't stop them, whatever it is today. Like back when, you probably remember Broncos and Terrell Davis. They pretty much ran the same 3 or 4 running plays the Broncos and Terrell Davis did. It was that zone blocking. Hey, man, hit helmet on a helmet. Stop us. If you can't stop us, we're going to keep running it. And they kept running it to 2 straight Super Bowls. And so you got to find what's working. And sometimes it's a pass game. Sometimes it's a long pass game. Sometimes it's short passes. Sometimes it's a run game mixed in with a little bit of the play action and a bootleg from your quarterback. Sometimes it's offense just isn't that great. It's a 2015 Denver Broncos and your defense wins the championship for you, And so you got to figure out in the playbook what it is that's working. And then you're going to stick to that.
Yeah, absolutely. And you got to know when to push the gas on it because the market change, just like you said, like in small caps, sometimes the shorts are not working. They're not breaking pre-market highs or they're testing them and failing, or we're in a market where the longs are not super long. They're not squeezing the shorts hard enough. They're not a January like we had. And you got to know when to back off too. And that nuance of when do you put size on, when do you, and how do you adjust your size during those times as well. But the thing about the playbook too, is that all those plays, you got to know the plays. You can't just like maybe know about them. You need to know them inside and out, and like without a doubt, you're seeing that setup. If you're guessing, you've already probably lost the battle.
I mean, let's just be, for instance, like game of flag football pickup game. Me and my boys back in the day, and I'd be the quarterback, and I'd be like, all right, Chris, you're gonna do this. You show them the rat on your hand, like, hey, run to this. Versus people that like when I, of course, if I played in high school, I like went to college and hung out with college. Point being, in the NFL, what are they doing? The reason they know that playbook is because they ran it in practice 474 million times. As in, you was like playing that summer. You said you had to play the same thing over and over and over, 6 times, whatever times. However, you knew it. You could do this. You could be asleep and just like, yep. because you did it so many times, you know exactly where to be, where to play it, whatever, you know, or where, how to block it, how to or how to trade that, you know. So that's it. Yeah, like you're saying, there's a playbook for a reason, is because you go to it because of certain time frames and certain areas. This is where your edge is at. It's 3rd and 1, we do this. It's 2nd and 9, we do this. If it's this market condition, we trade this way. Hey, it's this market condition, we put the pedal to the middle. Hey, it's this market condition, I'm going to ease off a little bit. Hey, go to my playbook because this isn't working, but this play is, and I know exactly how to run this play over and over and over and over and over with my eyes. Like, it's, you know, and that's like me with bounce plays right now, where I've gone back to, because my edge in the shorting market, where I shorted and how that was working, isn't there right now. But now the other edge has represented itself, and so it is. And then Tech even asked us how we're finding Tech. I'm either looking on different chat room, like where I find them every day. I'm going to trade the pool. I'm using I'm very simple for me. I don't really have a certain source, I would say, for any certain trader, but just go around the board. I mean, I used to be on Tradecaster, trade the pool. There's different people on YouTube that have, like, you know, scanners up that we talk about all the time that are free every day. And there's people in there talking. So essentially that is my squawk box. You know, I have people just squawking away, and all I do is I'm looking for a chart and a ticker that I haven't looked at, because usually, as you can tell, and Joe can tell, obviously, back to the morning alerts, I am a million miles an hour. I can go through 10 tickers before most can probably go through one. And so I'm going through the 5-day momentum scanner. What's up on the gap, you know, the gapper board, and all I'm doing is throwing in tickers. A, B, C, D, I'm in 5 minutes. Meh. Ooh, you know, until I get that. Oh, like I've always talked about, I'm at the bar, I'm hanging out, and Joe, you know, me and Florida Joe are hanging out, and we both go, who was that? That's what I want to see in the stock, you know, on the stock chart. So I'm just sitting there, and so, you know, Joe's alerting, Tax alerting, Crow's alerting, all these people are alerting on different, you know, boards and places that I'm at. And I keep it selected to where I have my 2 or 3 that I go to, and I see what you guys are talking about. Other than what I've already seen for the day, then every once in a while, when you guys throw up a ticker that I haven't looked at, I throw it on my chart. Is it something that I like to trade? Is it chartable? Like you said, Tac, does it have volume, and does it have a, you know, essentially area to run to get profit? And that's where I'm finding mine every day. I keep it because then what we're doing is we're just going back and look at the same tickers. We're looking at SkyQ, we're looking at ELAB. So then it becomes really easy. I've had that asked so often throughout the years, like, how are you finding all these tickers every day? I'm a million miles an hour. That helps out. B, I already know most of them because I've been doing this for so long. I just go to my normal momentum scanner, my gap up scanner, hit the commentary and see what people are talking about. And usually general rule of thumb is you'll find what's up on the day and those people talking about it a lot. And then those are the tickers that generally we're going over and trading. And that's how I'm finding them and going to them every day.
Yeah, absolutely. And it's funny because, I mean, funny and not funny. It's serious. You know, when Smoke Tuna starts to, you know, throw out tickers, the Crow throws out tickers. We're you know, if we're in a small cap space, we're generally, you know, in the same, you know, looking at the same stuff each day. So when those I mean, first thing is like, you know, I'm looking at gap ups overnight, you know, in the after hours and the morning in pre-market. But those tickers, they stay on my list for the second day. So you always have this backlog of like maybe 2 or 3 or 4 days going out, because you're trying to, you know, define which ones have the momentum today, which ones could be a continuation play as well on a day 2, on a day 3, on a day 4. They come back. You know, sometimes they come back. Sometimes that's a short. Sometimes that is a multi-day continuation long. But so it all states. I think that I've had this conversation before with some other churches. I learned from MIC, my investing club, but you know, there was a point in time of how do we find the day 0 stocks? You know, it all seems to start with day 1, but how do you find the day 0? But I think for me, it's always day 1 right now.
Yeah.
And then that continues for several days until it fizzles out and it's no longer important.
Yep. DJ AM. Yeah, I don't know where Steve's at today. We're going to check in on Steve. Must have something pop up today going on with Steve. We have Florida Joe. Come on in. Like always, the Wizards shows up when you need to. How do we get our scanners? So I don't have scanners. I don't know if you're asking me, DJ AM, or if you're asking Tac. I know he probably has something. And then, of course, we have Smoke Tuna that has his own AI system that's out there. What was that? Got it. Oh, we're going back to the going back to almost show. There we go. Yeah, I was getting a little extra feedback. Sorry, Ayush. I was like, where's that feedback coming from? But yeah, to me, find free ones. So what I'm doing every day, DJ AM, what the hell? Yeah, there's Mike. What's up, Mike D? Rida, how we doing? So what I'm doing every day is I'm using free ones. So I'm going over to YouTube. There's a Zindu over there. We've got Stock Rocks over there. Stocks Rocks over there. They've got trade idea scanners up every day. So there's people that have deals, I'm certain, with these companies. Trade ideas is great. I like using them. And that's all I'm using is using when I'm there. I'm just in any system you can go. There's many across the board that you can go to Yahoo Finance. You can go to, you all on fine. The main thing is the top gainers on the day. Usually out of the top gainers, top gappers, whatever you want to call it. Then from there, I'm plugging those tickers into my chart. And then other than that, then you go to places like right now, which we do have popping, the Momo scanner. And I see ZNTL has just been flying up the Momo scanner and has go pull up ZNTL. So that's all I'm using. Finding what's out there for free, using the bare minimum just so I can then find the chart. Because I don't want to look at 30, 40 charts. I know I can break them down, but I want to look at 1, 2, 3 charts and then wait for my trades to come to me. And that's it. That's it every single day, going back. And then like Joe just said, whether you have a watch list or you just like, like myself and Joe, you just kind of remember what like ELAB, SkyQ, for 3 days, 5 days, maybe even 10 to 15 days, you're going to be looking at that ticker till finally. And it's a lot of the time, Joe, I'm sure you're like there with me where, oh yeah, what happened to SkyQ? Because you kind of forget about it finally because you got new tickers that you're looking at for the last 3, 4. And then it's been 2 weeks and it's been a month and then it's been 3 months since you've looked at SkyQ and that, just say SkyQ fizzles off in a couple of weeks, whatever, whenever it is. It fizzles off even this week. And then you go, oh, yeah. And, you'll go back, what happened to that one ticker? And then it just is one of those things where you have a new set of tickers that you're looking at over and over and over and over. Then eventually those kind of die off. And then you're looking at another new set of tickers. But then what eventually happens, Joe, we go, oh, there's SkyQ again. It's back. And then we're looking at that ticker again, even though we were looking at it, say now, March into April, it recycles itself next, this coming October or next June or I promise you right now, we will see. I've already seen ELAB before, but I guarantee you, anyway, we're going to see. Remember, write it down. SkyQ, ELAB. We will see these tickers again, and then like Tack was saying. I always say, hey, those were like pizzas. I know if I see a pizza, right? I remember how that ran, and then you'll know other tickers because you come familiarize how that ticker ran, and then there will be more tickers that run like it. Yes, it's a new ticker. It's a different company, but it runs just like ELAB. It ran just like SkyQ did. You see a piece of pizza, a piece of pizza. You see some cheese dip and queso or what, and you know what that is. And that's how that starts to come into your brain going, ooh, I've seen a play like this before. It's like ELAB or Sky. This looks just like it. And then you know the capability of it.
Yeah. Yeah. How many times have we said, oh, man, I think I've traded this before.
Yeah,
I have traded this turd before.
Yeah.
Sometimes they're turds too.
Yeah. Yes. 100%. Yes. Tack. Yes. Socks Rocks. Yes. Reasonable and free. I'm a freebie kind of guy. If you want to pay for stuff, there's out there that you can use. And I think that to me is when you get multiple years down the line, then you can really branch out and kind of diversify your trading style and your portfolio. But for at first, like you've heard it from all of us, you got to keep it simple. Just keep it simple. Find the 1, 2, 3 tickers that you can go trade for that day, and then keep your chart setting simple too as well. You don't need a lot of different charts up, and then a yearly and a daily and a 1 minute and a 5 minute and 3 minute. You need to be able to learn to float through them. That's fine at first if you're looking at one ticker and you do have multiple charts pulled up. So you're looking at the 3 on one screen, looking at the 5 on another, maybe looking at the hourly on another. But we're looking at one ticker when we're doing that. And again, we're not using a lot of different chart setups. You want to keep it very simple. Early on, I think these are certain things that we can learn from, which you've heard from us today and what we're doing and what we're using. But then that's the key too, I think, for a lot of traders at first is just keeping it simple, stupid. So many times we say that in this call-in show about topics that we're talking about, address to the traders that are out there listening, that are struggling, that are newer. Do what we're talking about because we've already went through the trouble, the trial and tribulation. And so this is kind of us saying, hey, like back in the day when Pappy would say, boy, you better enjoy life, but it flies right on by. And he was right. I wish I would listen to him and enjoyed a little bit more when I was earlier and the things I could have done when I was younger. And now all that's gone. And so we're telling you this for a reason. We're the old wise men, so to speak. And you guys just need to start to, take this in for, not with a grain of salt. I talk about take this with a grain of a boulder. Any last words, my man? Mr. Joe, thank you for stepping in today, Florida Joe.
Yeah, it was fun.
How the eyes going over there?
Yeah, it's going good. I got the, this one's really good. I just have to keep it covered because the difference in the vision right now. So I'm waiting to have this one done next week, and it's cataract surgery. So it's completely painless. It probably recovery time like two days. So yeah, I'm looking forward to getting it done because I won't be wearing glasses after that.
And
So,
no more patch.
Yeah, and no more patch. Yeah, I've been wearing this patch for a long time. I'm turning into a pirate.
You're like, we do. You're like, yes, we do say arg.
Yeah, we do say arg.
I love it. I'm glad for you to step on in today, man. Good times, of course. Florida Joe, I know I've said it enough. We got to get a trip going, something together for Trade the Pool. Hopefully this year we can get together and get Katz and Carlo and Gillis, all of them back into over into the States. Cause I would love to see all you guys again. That was so fun in Florida. So much fun in Florida.
Absolutely.
And good people too. Great people. It was one of those things where it wasn't like, oh man, I got to work with this guy. I love all these people.
Oh, I see Taquito in the chat there. He says Joe has a dangerous scanner. That's why he ain't saying anything. I do have a dangerous scanner, Taquito.
He brought it up, and Smoke Tuna did bring yours up.
I did.
Yep, Taquito, but he brought yours up. Smoke Tuna, we both brought yours up at the start of this. That you guys have your own little AI.
Yeah, good
scanners.
stuff.
So yeah, it's definitely one of those things, the world we live in now. I am my own scanner. I am my own everything. I want to be that kind of. That's that Bravo. Again, back where I would say we're late to like the Tony Stark when I was saying earlier about in-game and how much I hate in-game. I'm like, God, but that's me. I feel like I'm Tony Stark or, Iron Man. That's kind of how my brain is set up. And so I want to do everything. But, even him, he would have AI and who knows all that stuff running for him. But I'm just so like macho headed. I'm like, I ain't getting into that. I can find my own trades and I know what looks good. You don't need to tell me what looks good, computer. All right, brother. Well, have a good rest of your day. Good weekend. You going to join tomorrow night for the Friday Night Live?
Absolutely. Yeah. Friday Night Live. Yeah. We got a bunch of things coming up, really. Obviously, Power Hour with Steve at 3 p.m. I'm assuming he will be there. And if we'll just check in on him, make sure he's doing okay. And then tomorrow morning, Steve and Dave from the Fivers are doing the CPI Inflation at 8 a.m. Brand new stream. That we're going to start doing some things on Friday. So Friday morning at 8 a.m. he will start, and then Steve will carry on into the market open at 9:30. Dave will leave, and Steve will carry on with what's going on in the market. So then, later tomorrow night we've got the Friday Night Live. What?
Sweet. I'll see. Because this morning I was busy. I didn't get to join. I'm always busy on Thursday mornings. I was like, oh, those are like the worst for me in the meeting, but. I'll pitch then to them. We'll see how long Steve wants to go for. We could do a lunch recap on Friday. So we have it Monday, Wednesday, Friday. So Steve could go live into the lunch recap on Friday, and then I can join him, and then we could recap kind of the day and the week there overall. But yeah, because I've talked about doing something on Friday. I know Kevin can't do that anymore, but I would love to join the Friday. I'm usually free.
Recap would be cool. It'd be really cool to go back through, what was hot on the week.
Yep. And then what to look forward to into the next week if any of these plays, especially for the small caps, are going to carry over. Yeah, I would love to do that. So I'll pitch that for sure. I'll message Gil and see what she says about that. I'm sure she'd be down for me to do that. And then join Steve. That would be awesome. So then we could have it Monday, Wednesday, Friday. Cool. Look at us. We got a lot going on here, baby boy. Lots going on. So, okay, we'll end it on this. And we're a little past time here. Cleveland Indians. You're always sporting the Cleveland Indians. Is this like your favorite sports team?
Yeah, it is. It's the so they're like them and the Ohio State Buckeyes,
Mine are the Denver Broncos. It's clear cut. I know I like my Hogs and all, and I love them, but the Hogs have nothing on the Denver Broncos. Is it that way with the Cleveland? Is Cleveland kind of set above everything?
Yeah, pretty much. Except unless you're talking about the Factory of Sadness, the Cleveland Browns Stadium.
Oh yeah.
It's I still root for them. I still go to the games. I'm a tried and true Browns fan through all of the hardship and sorrow.
Yeah, that's when I always bring that up on my live stream, which I know you join sometimes. But when I talk sports, I don't know if you caught that, but I bring up, of course, my Broncos enough. But I'm like, man, I can't imagine being a Browns fan There's a few franchises where you're just like, man, you got to feel for them because they're never good. And anytime they get good, you're like, oh, wow, they're getting pretty good again. And it's for like a year. And then they just go right back.
They blow so many plays, so many games. Like it's so hard to watch.
Yeah.
Sometimes, but the fans love them. Everybody loves them. The dog pound.
The dog pound. Yeah. So I just always see you wearing that. It's like I just had to ask if it's kind of like my Denver Broncos where you kind of said it. So how do you feel about Cleveland though this year? How do we feel about them? I know it's been a while since they've honestly been, worthy of getting to the World Series. So how do we feel about them this year?
I gotta get up on my stats and watch. I've got some tickets for April 22nd, so looking forward to that, and hopefully going to get to quite a few games this year. I'm hoping.
Please tell me you got to go-to. You got to get you a hot dog and a beer when you go to the game.
Oh, geez, I always go on hot dog night. Don't even listen. There's a story with everything, brother. Don't even tell Rachel. I mean, you can tell. She'll tell you. I got some funny stories.
That is fun. That's awesome. Yeah. So hey,
about 6 hot dogs shoved in my pockets.
They're so good though.
They are. Those Sugardale hot dogs. Yeah.
They're so good. That's just like that, and a beer ain't nothing better at the ballpark, my man. That is classic. That's funny. Love it. All right, guys, we'll end it there. Mike, what's up? What's all the people joining today? Mr. US Man, Mike D. Ryder Taquito. Yeah, we did see that earlier. Yeah, we saw that earlier. AFJK, we did see that earlier. That was nuts. Y'all guys have a great rest of your day. Great weekend if you're out. Don't forget though, if you are sticking around, Steve will be back for Power Hour and his usual daily recap. Then tomorrow, we're rocking and rolling, as Joe just said. So join us tomorrow morning. Live stream now continues on Friday. And, of course, Friday Night Live tomorrow night with myself, Joe, Kevin, and any of you guys are more than welcome to join for that. Have a good one. I'll see you guys tomorrow.
Have a good one, guys. Oh, you know what? I got to get the scanner up. Oops. Scanner's coming.
There we go. All right, we're back. Back on. Well, real quickly, Joe's about to get the scanner up. Joe's going to get the scanner up real quickly. Josh, jump in for a wild one. Yeah, no. Taquito, not just AFJK. I did trade that when it squeezed in December, maybe even a couple times, but no, not a day like today. I'm not touching AFJK. I'm going to get AFJK. If you're AFJFJ, I'm going to get AFJFK, whatever, anyway. I don't want that.
Okay, I'm going to be out of here. Josh, if you want to stay for just a second, because I have to switch to a different computer to get the scanner.
Do it. Yeah, do it. Go on. There's Joe. There goes Joe, my man. Florida Joe, One-Eyed Joe, the man, the myth, the legend. FOMO Sapiens was his draft team name. Yeah, AFJK, that's a wild one. Wild one right there. I would be one not to touch it. Not at all. Not touching that one. Joe says, I'm getting in here, putting the scanners up. Well, the scanners up here in just a minute, and there they are. Joe with the scanners. You guys have a great, safe, blessed, food-filled day, like I said. Steve back for Power Hour. Tomorrow morning, join us. We got you covered Monday through Friday now. It doesn't matter if it's Monday morning in pre-market, Friday even in pre-market, or even Friday night live, or yes, Friday at 9:30 Eastern. You can join us, talk about what we've traded and how the week went. Until Power Hour with Steve, that was a call-in show. You guys have a great one, and the scanners are coming up right now. See you guys then.
Yo, microphone check. How's it going, guys? It is Steve Tileman here with Trade the Pool. It is Power Hour, and we are going to get right on into it. I'm coming hot off the presses of the Trader TV appearance. If you caught me there, thank you so much for hopping on over with me. Shout outs to Neil and Sean. They are the bros. Always good to be on their program there. So SPY, crazy guys, we got the continuation day that we were looking for. Let's go to a 15-minute chart so we can take it all in. We can drink in all this profit that bulls are finally making. I see the music on. Let's get that going. Let's get that off, I should say. There we go. It should be stopped. All right, guys. What's up, Snowman? How you doing, man? Awesome. Good to see you guys in. So, what did we see? What have we seen? Okay, the big breakout of our complex head and shoulders that we had forming down here. We get the big surge up, a big measured move, about 2 times the distance from the move from the bottom to the neckline. We'll zoom out a little to show that. We should go to an hourly, guys. Let's not get lost in the weeds. We gotta make sure we know what we're seeing. What we are seeing is euphoria. Everybody's so sure the war is ending. Is the war ending? I don't know. We'll play the chart, though. What we do know is we got the downtrend line break. We got this inverted head and shoulders. I'm going to whip out the pen, and we are going to get going with some analysis here. Bear with me. Who wants to donate some RAM to your boy so I can do more stuff at once on this thing? Load. All right, while we wait for that, I'll talk it out for you guys. The left side of the screen, this left pullback here, this is our left shoulder. Then we have the big old head, and this was the right shoulder. It happened so fast that I thought it was fake. I thought we needed to come down again. No, sir, we just consolidated here. Get the news we're looking for. Big surge through. I'm going to try one more time to get my Epic pen to load here. How about the old run as admin trick? All right, now we might be in. Guys, so we got the big surge through that downtrend line. It played out this head and shoulders pattern. We are going to also just observe the measured move. So let's pull up a fib and find that for us. I believe that it transacted pretty cleanly here. So we take the bottom. Then we're going to, I lied to you. We take the top. We pull it down to the bottom. Then we get our expansion lines up. Where did we just transact? The 161 fib extension, right at 679.85. So see how that lines up so cleanly? You have that big round number, the psychological resistance. You have that lining up perfectly with the fib extension from the bottom to this neckline where we surge through. So it makes complete sense if we trade a little bit sideways here. We could come back and test the 670, 669 potential level 2. We could come back and test that, chop around here before going for that 690 push. That'd be the 200%, the full measured move. So that's what I think we're starting to see. But today we got the really important continuation. Now we're going to zoom in. Now we're going to zoom in and we're going to just draw out this pennant here, show you what happened. Really tight action. Into the morning session, we got the look back, and then that was the breakout back test before the big surge up. Beautiful action there, exactly what you want to see. And now what we're looking for when we're trading sideways after that big push into that 1.6 extension is we're looking for how it plays with a back test of this kind of zone that was resistance and is now support, hopefully. So that's what bulls are looking for. Look for that rising support to come in around 677 up to 678-ish or so. That's the area I'd like to see us consolidate into. Just like we surged up here, then started to base. We surge up here. Now I would like to see something like this. Some sideways flagging here, finding support here, and then we can push up for continuation. Kind of what I'm seeing there. So, Snowman calling out ZNTL. Let's take a look at that guy there. We're going to bump Sunbear off the screen. I have no idea what SNBR is. You guys do that? Is that just a me thing? You're just like, this is the word that this ticker makes me think of. Z-Intel. This one's Zero Intel, because that's what I'm going in with. Zero Intel. We're going to look at this one. This looks incredible. Very, very nice on the 1 minute chart. You have the same kind of pennant, flag, break, climbing up the right wall, creepy crawly up the wall. It looks to me like it wants to squeeze. Your guides are these 21-minute moving averages as well as this 9-minute moving average. That should hold this trend up. Let's take a look at the higher time frame. Frame this trade for y'all. Real quick, we'll bounce into an hour, then we'll go to a daily. I'm doing it backwards, guys. You should be doing it the opposite. You don't go into a 1 minute chart, say it looks great, then zoom out and go, oh, well, maybe I missed it. You should start high, then zoom in. Bad practices on my part, but I got excited. Let's look at the daily. Oh, holy moly. Look at this. The daily is doing exactly what the 1 minute candle is doing, right? This fractal kind of flag, break, pushing up the wall, right? Wall, we're now through the top, just like we are in the 1 minute, or at least very close, I believe, on the 1 minute. So, a pullback where we'd like to see the buyers step in is this high volume shelf here. So we're going to redraw our zone right here. See how I redrew that? So first I just started it at the top. Then I'm like, well, that's not as important because look, it's actually a low volume node right there at the 380-ish area, 390-ish area. It's a low volume area. So price could come down, reconfirm this high volume area as support, and then go. That would be totally valid. So that's the area we care about. If it pulls back there, that's our probably high probability area to look for a catch, especially in this like really low volume node at 383. It could wick down into that, then pull back. Now let's go intraday here and see what we see. Hey, Adrian, your NBIS is printing. You did tell me. You did tell me. I don't have faith to buy in those dip zones, but your system, you've really got that dialed in, so I respect that. Boom! ZNTL, Zero Intel, pushing up through that high a day. Nice little flag. And now I would expect this one to continue to try to run. Let's watch and see. If it doesn't need to pull back like we talked about into this higher support zone, well then, hey, maybe it's ready to just keep that momentum going. Let's look at an hourly to get kind of in the middle. Michael Anthony asking about RCAT's potential rebound and is there any reason to be falling? Let's talk about it. Let's talk about it. Look at it. We can definitely go over that. Good to see you in here, brother. Yeah, ZNTL is just cooking, man. I think we need to go even higher. Expand. Zoom out. Where's the next area of interest? All right, this is where we get spicy. So this candle high on going back to the what? Oh, geez. November 2024. So this high was 444. Our high today, 436. So watch the interplay at 444 to 450. I think it sweeps through that, and then there may be shorts that step in. So that's an area to watch if you are long this bad boy. What did I say? 444? Yeah, to 450, that round level. Squeeze through there, quite possible. The next big area of interest that I'm seeing is going to be the 5 handle, just because big round number, and then 545 to 550 is the next kind of squeeze target. So those are your levels, guys. 444 to 450, and then 5, and then 544 to 550. Get it? Got it? Good. Meanwhile, BBGI, I don't know what this one is either. I don't know. I won't try to make a acronym for that one. This one, nice tight flag pushing out here. You can, I don't know, look for a little bit of a pullback into this expansion candle and these rising moving averages. Around 850 is an area of interest for that guy there. We're going to pull back to the 1 minute on this ZNTL just so we can keep watching it. Meanwhile, we need to get a minute chart up for an index so we can see what's happening. It's looking like we are having a constructive power hour so far, only 10 minutes in, but yeah, very nice action. Creepy crawly up this wally after we got a little bit of a pressure release. What are we seeing? I believe we're seeing a nice rebase. So sure, this made this low. This one did sweep out that low, but since the bottom there, this is a nice bottoming structure. Came down, pushed up, came down, formed a nice constructive higher low, pushing up nicely off of that. Starting to look like a big old W pattern there on Qs and likewise on SPY. Good stuff there, good stuff there. Palantir, though, can't get off the mat. This was a group talk. If you're in the chat, come and take your flowers. I'm up like easiest 10, 15% of my life on that PLTZ. I don't even know. I looked this morning. It was right around here. I said, oh, I got to take some off. I wasn't expecting that. It was into 130. Yeah, 130. So slightly lower than where I trimmed a bunch of my PLTZ. I will take that free money. Thank you, brother, for that call out there. That's why you got to be in here, guys. It's not just about me and Josh and Kevin and the whole team. It's about who's in the chat, because we got some real killers in there. We got some real players. All right, let's go around the horn here, see what we see. We got to check in on energy, because boy, oh boy, is energy having no fun. Let's take a look at USO. USO, it is actually holding better than I thought. It is up a little bit from yesterday. I don't know if I'm buying this bounce. I think it's probably a short-term short opportunity. I'm not sure that oil is done. Remember, this is just a 2-week ceasefire. We will have to see what mood Trump is in. To get them in early, have the market start looking forward through that little period of volatility of turmoil, and we could be starting to price in a return to normalcy. Will we get the return to normalcy? Well, that's a tougher question. All we can do is keep on playing the candles we see. And what I got to say is, hey, man, SPY broke through the pattern, and now it's putting in a follow-through day. I cannot be bearish, even if I don't believe in these headlines. That's where I'm at. That's where I'm at. So I'm in a weird spot, guys, where like I still have a decent amount of shorts. Some of them starting to hurt me a little bit, but most of them are actually doing really well. Like Tesla Z, that's been a great easy one. PLTZ, that new one, a lot of relative weakness there. We cashed in some on MicroStrategy short, and just a lot of these are still showing relative weakness. Even AAL, which I am a little red on, this one's still, I'm not convinced that it's it is a terrible hedge to have going into earnings and stuff like that. So I'm still keeping some of these hedges on. Yeah, I gotta respect, and that's why I sold the PLTR, or a lot of the PLTZ too, because just, man, market's green, my short's working. Shoot, I should probably start generating more cash and monetizing some of this stuff, and just, being ready to buy the dip if we do get like a higher low getting put in off of this. We're gonna pull back to a daily because I want to show you what I would like to see on SPY. I don't know if we're going to get it, but this is what I'd like to see. And it'll be modeling what we did after the tariff wipeout. So it looks like I don't have price history going back that far. I'm going to pull that up on TradingView real quick. Give me 1 sec to do that. Basically, I want to show you guys what the market did after Trump tacoed his first taco. It was the OG taco. The OG taco, and you guys will remember, insane bullish day, but then there was a pretty steep pullback, and that represented the real buyback or buy-in opportunity. You're holding VG as a hedge as well? Yeah, I have some dead calls for May. Those are rough. So we'll see. Maybe, those are my insurance. If the world ends, at least I'll get paid a little bit. No point selling them now when they're down 80%. Glad I trimmed. Sorry, bear with me. I'm pulling up this chart for y'all. Here we go. All right, SPY daily chart. We're going to be talking about what it did in the tariff crash and what it did after that. So zooming on in, this is the day I'm talking about. Absolutely insane. Absolutely insane. Absolutely smashing. Look at that. An 11% day. This thing was insane. Absolutely insane move. So what did it do? Well, it took us from the brink of a major meltdown all the way right back to the 50% of the range. You see that? In one session, it went from the very bottom of the range and smashed through the middle. Wild, right? What do we see now? Sorry, lag. Gotta go slow. Want to go fast, gotta go slow. Okay, here's what we see now. I'm going to take the fib, do the exact same thing, right? pull it from the bottom up to the top. And the 50 is all the way down here. So we really smashed through this thing. You can't ignore the strength. What I would like to see, though, is the same thing that we saw on the tariff day, or the tariff relief day after that. What we saw there is it chopped and came back and gave back 50% of this crazy move, and that represented the buy-op. So 50% of this, of this move, 520. And that provided a really, really nice entry. So that's what I would like to see. The strength that we just got is not sustainable. Doesn't mean that we aren't going higher. I think we are. I think we probably put in the bottom. But that doesn't mean we can't retrace some and get a really nice entry. I would not recommend getting too hasty about just like buying longs up here because you feel like you FOMO'd and you missed. If you weren't DCAing through the drawdown, well, you have a few options. You can start DCAing in things that you think will recover that haven't done this, ripped off the bottom yet. Stuff like the Microsofts. I don't hate that. Just got to recognize that you're playing the game of buying the not hot stuff because you don't want to buy the thing that's working, that's up a lot, right? So a 50% retrace would be pretty egregious at this point. That would be all the way down to 655. That would fill this big old gap. I really just want to see this 666 level test. That's the really big one for me. Kind of a retest of this big hollow zone. If we got a 660 retest, I'd feel really good about getting involved there probably. So that's kind of where I'm thinking on the indices here. Let's get back into our grid. See what we see. Yeah, BBGI, that gave us a nice entry there into these moving averages. I still think this one's nice and constructive here. ZNTL. I'm not convinced that this one doesn't need to come back a little deeper, but let's keep watching these moving averages. To me, it looks like it might be failing the moving averages here and just losing a little bit of its really strong momentum. And in that case, it would just need to come back and retest at a bigger level, perhaps 410. I'd like to see 380. But hey, if it can wick down to maybe 423 and catch really strong, close back over these 1 minute moving averages, it could be just continue to be valid there. What else are we seeing? Just a little bit of a red couple candles there on Qs. Let's see if there's relative weakness when we compare it to SPY. See if we can identify where this weakness is coming from. What's up, Steve Canyon? Good to see you in here saying CL sitting on the 20-day EMA. Good to know. Yeah, let's take a look at the daily on USO. Hey, Billy, what's up, man? Can I take a look at MEMU? Absolutely. We can look at that right after USO. Yeah, for me, I got the 21-day on USO down at 120. So you're talking the futures contract. So I was talking about this on the future stream, the Fivers future stream with Dave, how you get these interesting zones forming when you look at key levels on the futures contract versus the cash traded ETF. BBGI, by the way, starting to get that move. Looking to me like we're going to get a squeeze here. So congrats if you got in this 850 area we were talking about. You'd be up 40 cents already and looking there. At this point, I would manage risk under the 820. All right. Let's see. So we're going to talk MU in a second. What I was going to talk about was the zones that are created from the CL 21-day EMA compared to my USO 21-day EMA. So Steve's mentioning the 21-day currently around on USO. If we were to transpose that CL, the futures contract of oil, onto this USO, the cash traded ETF version, that would be about 126.50, right around there, 126.50. So we have this zone of support from 120.50, which is the 21-day EMA on USO. And then you have the 26.50, the top of that zone for the futures contract. So we can kind of watch that as a band of rising support. If that can hold, we can consider USO holding that trend. I'm skeptical. We'll see. I'm really not sure, to be honest. So let's just keep watching that kind of zone there. And on the top side, we're looking at the same thing where you have the USO 9 moving average at 128.39. And maybe Steve, if you're still here, you could let us know what the 9-day EMA is on CL, and that'd be the kind of top ribbon. So we have these two encroaching zones that are moving together, and once that kind of reaches an apex, that kind of pinch, usually you'll get pressure release, and that pattern will go one way or the other there. All right, Adrian saying he got into MU on Monday with the insane news from Samsung for memory and single-digit PE with insane growth. I just closed my eyes and bought. Yeah, it's always, you got that crazy low PE on these cyclicals, and, that will not last. I will say that much. Let's look at MU. Let's talk about it. I think it's still going up. I mean, dang, it's just so tough. I don't know. This is not like a pattern that I'm super comfortable with. I like the SanDisk chart a lot more. It's just this expanding megaphone pattern that seems like traders like Adrian are much better at playing than myself, to be completely honest. Because I like that higher low. I like the volatility tightening up. I don't like this lower low from this. That doesn't give me the warm and fuzzies when I buy. But I gotta respect that just overall, this is looking like kind of like a messy flag break. See that? And this is what I had been saying since this area, that MU is going to do a big choppy flag, and then when it's ready, it'll finally go up. So it might be actually ready. I do not hate this. What I will say is there was a large order of MU 395 puts, I believe. Maybe 400 or 395, one of those strikes. They are for April 17th, I believe. So I don't know. Do those guys get slaughtered? Is that just fuel for the fire? Is that just a hedge? I don't know, but just something to keep on your radar. I would like one red day for MU where it comes back and gives me an entry off these rising 21 and 9-day moving averages and test this gap and holds. I'm not sure if I get it. It held the gap pretty nicely twice there. But that's kind of what I'd be looking for. I think if we do get under 400, then you're looking for kind of a strong buyer to step in under there. And then you can either, jump the gun there or wait for the 400 reclaim and take a piece there. Still really good gains to be made, because the next spot up is going to be the top of this kind of megaphone pattern that we're seeing play out. Right? So you have the potential to trim at the top of this megaphone when it sweeps this high. Say it sweeps, runs it a bit higher, you see sellers step in 480 or so, you trim there. Then you have the potential for the squeeze of the megaphone to actually play out. And if you get the measured move, you are making buku bucks, because measured move of this pattern would be looking like 573 with potential to 625 plus. So don't sleep on this. That's not, this is not like crazy overextended, is all I'll say. It's the same price it was at the end of January. Let's see. Okay, Steve's got the 10 on. Yeah, I respect that. Basically the same. We're still looking at the same stuff, right? The 9, the 10, the 20, the 21. We're basically tracking short-term trend and the kind of middle of the trend. So the 20 or 21 is always going to represent kind of equilibrium of whatever time frame you're on. If you use a Bollinger Band, Keltner channel, mean reversion, linear regression channels, anything like that, the midpoint is going to be calculated off the 21 EMA. So just a good little thing to note, that's always a really good guidepost. You can see here on USO, it still is holding over its yellow 21. So the trend is still up technically until we lose that, but we did lose. We got overextended off this blue trend, and now we are potentially testing under that. You see, last time this happened, it maintained the strong uptrend, used this as a buying opportunity. We will see if that still is the case. That would take some bearish, hawkish headlines out of the Middle East. So praying that that does not materialize, but just got to recognize that there's still that, last gasp holding on for oil. I'll call it that. BBGI, we did get the little squeeze there. Congratulations if you got in at 850 there. I would have been trimming heavy at the 930. I would just be in runners at this point. Very nice there. The ZNTL starting to push up and make new highs. It looked like it, So I always say I'm never smarter than my moving averages. I said it looked like it was failing, but we just got to watch the moving averages. If it reclaims, back to the races. It reclaimed, back to the races. So there you go. There you have it. What do we got here? Adrian talking JP Morgan price targets for SanDisk. Price target of 1,200 base case, 3,000 bull case. That is wild. I don't know. Let's look at it. Is that possible? Why not? Yeah, Chevron's great. Got good news today. I'm in Exxon. Maybe I diversify to Chevron a little bit. Either way, that's like my safe. Like I don't think energy is going to be less important going forward. Nice push on ZNTL. So we're just negotiating our first selling point. So this is the first area to trim here, this 444. Remember we said that is the exact level where there will be shorts trying to step in. Can we squeeze above that? Absolutely. But that is the level we watch. See 444, we are now stalling here. Doesn't mean that we're not going to push higher. In fact, I think we do. But just saying, that's the level where you lock some in. You lock some in because you're already up, what? That's a good percentage gain right there. I mean, hey, just since we started talking about it, if you just bought off that 8 moving average, you're up 3% already. Not too shabby. Not too shabby for a 10% move. All right. So SanDisk, they're saying 30% base case, bull case is a 400 or 300% move. Yeah. Yeah. I don't disagree. I will say that that kind of euphoric bull case price target makes me think that we are in for a good euphoric bull run, but we are not going to get that crazy. And let's see, Cole's crashing hard, got out of BTU at 30, tried to pick it up at the 200. EMA got stopped out fast. Yeah, if the trade ain't working, it ain't working, right? So Michael Anthony, we were going to talk RCAT. Let's take a look at that. To me, it just looks bad still. I remember saying, I think yesterday or a couple days ago, these top wicks off the moving averages, it's just technically people aren't interested in this. So you can fight the tape and say, hey, well, the fundamentals are good. Hey, well, I like it. Hey, well, X, Y, and Z. The market is not on this side yet. So you see we had this consolidation. I'm going to go full screen in a second here. We have this consolidation. And to me, it looks like we flipped this blue, this yellow, this white, these 3 moving averages, and then we retest it. Resistance, resistance. It was support, now it's resistance. It was support, we bid off it, we tested as resistance, we fail. We tested as resistance again. I'm sorry, we tested as support and fail. Now we tested as resistance and we're starting to roll over. If it unlocks a new low here at 1116, I think that this goes and targets this imbalance down here. You can see these big gaps on the volume profile, and we're at the bottom of a shelf. If I reversed this chart, it would look very bullish. It would look like an inverted head and shoulders. It would look like it's ready to push off of this big base down to the next level, 1066, probably targeting this much bigger level. Goes from the high volume node here to the biggest high volume node below at $9. If it were to go to $9, would it fulfill my horizontal level? Exactly. It would exactly fulfill the horizontal level I'd like to target, which is this breakout zone, this breakout gap up. So that's definitely my target to the downside. If you're a bull, I would wait until you find buyers off of this 920, 950 kind of zone. Drones are not working at this time. Yeah, I'm a big bull on ONDS, but long term, I just don't look at my shares. I think this one might punish me down to $6, and I might get a chance to buy it really cheap for a long-term buy down in the 5 to 6. Am I going to sell from my like 980 buy-in just because I'm a little red? Nah, because I like the company, and one of these days it's going to do some BS, get a good article, and be up 20-30% in a day. So yeah, ONDS is damn great. They're just not damn working, so whatever. It can take its sweet darn time. We're looking at the daily and it's frustrating, but look at the monthly. Talk, what's up, brother? How you doing, man? How's that Palantir looking? Great call. Great call. I cashed in most of that position this morning at 1:30. Really appreciate you. Really appreciate you helping me have a nice green day despite still having a lot of shorts and not really catching this long move as much as I would like. Been a doozy of a week for me. I'm helping my system move. I'm trying to keep up with everything. I feel so burnt out. But hey, Making money on shorts on a big green day on the market feels really good. ONDS here. This is the high time frame structure that keeps me in. I don't care what it does. It could come back down to 5. I'd still want to buy more because I think someday it's going to be a lot higher than 15. A lot higher than 15. The fundamentals are great. A lot of the other drone companies also have decent fundamental. I think Kratos is really nice. AVAV is really nice, but this is my favorite. I think that it's very similar to AAOI, just in a sense that it was considered a, can I say shitco on here? A shitco. It was considered a bad company, guys. And then leadership really stepped up. They had an absolute run in terms of great acquisitions, great just management in general. And here we are. They're considered a very legitimate contender in the space, trading 10 times higher than what they were a year ago. That is how all of these unicorn stories start. I'm calling my shot. Whoa, SPY exploding to the upside. Beautiful, beautiful, beautiful. Oh, and BBGI, guys. We called it at 8.50, currently trading at 10.40. Bada bing, ring that register. Ring that register. Pay yourself, guys. If you caught that, pay yourself. You can see me over here rubbing my eyes. I'm falling asleep. I didn't catch it. I'm sleepy, guys. I've been taking a break from trading. Oh, but that's okay. I'm under accumulation, you know? I'm under accumulation. And when it's ready, then we'll move. Palantir in a lifeline. Hey, Kyle, what's up, man? Thoughts on Nike? Let's talk about it. My thoughts are it looks bad, but let's talk about it a little more than that. I don't know why it looks bad. I didn't read the recent earnings. When something bombs out on earnings like that, I don't feel like I need to know. You know, something's bad. Something's bad. So we got to zoom back out to a monthly start there. Hercules Jack, what's up, man? Hey, you right in time for the for the ONDS. You felt your ears burning, huh? What's up, man? What else do you want to look at? Give me another ticker. We can look at whatever you want. While I wait for that, let's talk Nike here. And we got to go to the TradingView chart just because I need that price history. You know it's bad when I got to pull out the TradingView chart and we got to go back into ancient history, into the what do you call it? The what's that called? The Akashic Records. You know, we're going back into the ancient scripture here. Oh, gross. What a gross chart. All right, let's talk about it. Steve, talking Fastly. We're going to talk about that in a second too. That's a name that I want to find a foothold in, and I wish I just plugged my nose and bought into Strength a month ago when it got the massive breakout rally. Sometimes you just got to say, hey, that is Strength and weak tape, and you got to say, oh, yes, please, I'll buy some of that. I didn't, guys. I'm not really happy with how I've traded the past month. I've missed a lot of opportunities. So good news is it provides good content, and I've been streaming a lot more, so it's a good time to have more content. Bad news is maybe I'm not giving you guys the best trades, but we're making money. It's just not explosive like I should have been a lot longer, I think. The past day or two, just because we were into that deadline. So like, yeah, I had my hedges on still. I monetized hedges into it in case it didn't work, but I didn't really put on enough longs in case we did get the resolution. So that's on me. But I'll stop ruminating and we'll figure out what we can do from here, because there's still a lot of money to be made, especially in the sectors that haven't really caught a bid yet. So if we can isolate the ones that are going to start participating, we can tap in. We can tap into these rallies. But first, let's talk about Nike here. This is a monthly chart, so long-term stuff here. What we're seeing is this was a very, very big volume shelf. See why I'm drawing this zone here? See this big old chunk on the right? So very defined level there. Very defined level there. Oh, did Fastly give the breakdown? All right, we'll definitely be talking about that one next because I might be pulling the trigger there a little bit. Oh, Adrian just twisting the knife. Fly is one of those names that I mentioned multiple times about a couple weeks to a month ago. I took one position. I just got bored. I stopped out for like 1% profit, and then it dipped for a while. Then now it's like twice as high as it was then. Crazy move on Fly and a lot of those space names. So we can talk about the space sector too, but I want to hit on that Fastly. I know you told me about it. I know we were talking about it, dude. You're in the pocket, dude. You're in the pocket. I'm all over the place. I got too many plates spinning here. But it's a good thing. It's a good problem to have because it's really because there's so much more content we're producing here at Trade the Pool. I was, I started doing this, making my own community, all this stuff, just so I could figure out a way to turn this into a full-time job without the stress of full-time trading. Because I think I'm better with education than actual execution at this point in my career. So mission accomplished. I'm getting more hours. I'm a full-time streamer now. This is good. So now it's time to lock in and start to hit these big money, fat pitch trades as they start to present themselves as the market's trying to bottom. We caught the big money on the way down. Got to catch it on the way up, though. Got to catch both sides of these trades. All right, now I'm done with my pity party. We can talk about Nike. It just broke down from this major trend line here, or horizontal level. Where is it going to go? I think it's going to go to the next big level down. To be completely honest, guys, I don't think Nike's a buy until it proves itself from 37 to 40. That's kind of where I'm at there. Let's see. Mike talking flies funny, but be careful. Something about a lawsuit, missing money after the IPO. Dude, I don't know, man. I have no idea about the fundamentals. I just know it was an explosive chart that done exploded. Let's pull it up real quick. So yeah, Nike dead money till it proves itself at 90 or it reclaims that big volume shelf wherever it dropped from. We'll talk about that as well. Yeah, Fly, now I think it's time to ring that register. We got the W pattern breakout, and now it's showing some sellers into this kind of mitigation where it sold off from. So I'll draw that out real quick here. Real surgical, right? Where did the sellers step in? As soon as it reached the bottom of this shelf where it broke down from. So for me, that's the trade's done, and it'll reset up probably. And I would like to see a washout to the top of this big volume shelf. So I'll draw that out as well. There's your kind of the meat of the neckline, right? And that's kind of where these moving averages are rising up to as well. So I wouldn't be surprised if this got bopped right back down to 30, 32-ish, something like that, and then consolidated there for a while. I think it does end up going higher, but I don't know. Can't buy it up here, that's for sure. All right, we're gonna talk Fastly next. Let's see, Kyle. Kyle, did I have a ticker that I was supposed to get for you there? I'm drowning in comments. I love all the stuff. Oh, you were Nike, I think. Yeah, Nike. Okay, cool. Yeah, let me know if there's something else you want me to look at there. You're using Palin TD. What are you, a coward talk? I went hard. I went with the PLTZ. I still got a third of this position on. I was just up a lot overnight. I was like, I don't know, man. Market's so green. I'm gonna ring the register here and hold that runner. That's exactly what I did with Tesla Z, and it allowed me to hold through that bit of a red couple days there, and now Tesla Z is still trading back up right around the highs there. So I'm still holding a third of this position as well. My Who's, I'm also holding a third. This one, it's coming back. It was tough holding through this though, but like I said, I was down to a third, so I had my stop under this 29 for the Who's, and I think it's still okay. This, of course, is 2x leverage short on Hood. So Hood, big rejection yesterday off of the sharply falling 50. This tells me this is not over. It's just bopped back in this consolidation pattern. I think it still needs to wash out to the 56. We'll review Palantir real quick while we got the chart up here. I still think that it's going lower. See, right around here in this consolidation pattern, I said, hey, I think this path could play out. So we're starting to see it. I don't know why I even took some off other than it just worked so fast. I'd love to see a little bit of a mean reversion dead cat before it really plunges and takes these lows out. I'd be looking to add the size back on. In all honesty, this is I don't know why I cut the flowers here. Trade, it was we even talked about this. I said, is this extended? Am I dumb for shorting down here? And I said, but the pattern's just breaking out. This looks like a bear flag just breaking out. It should expand down. I can hit this. Yeah, I don't know. It looks better. It looks like a better short here. I should hit it again at the end of the day. Will I? We'll see. We got 10 minutes, 20 minutes left to make that decision. Talk saying it looks like the entire IGV sector software is taking a beating from Mike Burry and Anthropic. Good. It is hurting my ACAM position though. But I think this one's still valid. I think this might be a buy. I was looking for a reclaim of 10. We're entertaining it right now. So this is one that I might add a little bit to. My entry is at 110 a while ago. Trimmed a little bit at 120, but not, nothing to write home about because I thought it was just breaking out. It's now retesting, back testing the breakout. I do believe. BBFI? Are you talking BBGI? Baby girl? Oh, there's the baby girl. Oh my goodness gracious, guys. Who's in? Anybody catch this? We talked about it at 8:50 20 minutes ago. Currently trading at 12.50. How's that for 30%? How's that for 30% there? Not too shabby. Not too shabby at all. It goes without saying, guys, if you're in this, ring the darn register. Pay yourself. Leave a runner, sure, that's fine. But pay yourself, please. Zeta, yeah, they're a disruptor. They're in software as a service. They were one of the only names I was interested in potentially buying. That lasted a whole day or so before I said, oh no, gross again. Can't even entertain it yet. Software is not acting right. To me, this still looks ugly. Still looks like it wants to go lower. No touching for me. Oh my goodness gracious, guys. Who's giving out levels? Here today? We said ZNTL, your level is 444 to 449. Could it go higher? Yes, but that's where sellers have a chance to run it back. What did they do? Bada bing, bada boom. 2 minutes later, back on down 20 cents there. So these levels are playing, still consolidating here. I still think it's constructive, but this was a great cover if you took it. If you always cover some at these obvious levels, then it's really hard to lose money, guys. You can really fumble the bag on the last quarter, last half of a position. If you're locking in money at these key levels, selling into strength, you really can't go wrong. I'm telling you. BBGI, my baby girl, ripping and roaring here. See how burnt out I am, guys? I'm watching this thing go 30%. I don't even care. Like 43%. I don't even care. I just want to go to sleep. Next week's going to be good. We'll hit the ground running. BBGI, absolute powerhouse. Still going. All right, let's get you guys some higher time frame levels for the BBGI. Where's baby girl heading? Guys, I don't want to call the top on this. All right, let's look. I got to go TradingView to get the farther back levels. BBGI. Beasley Broadcast Group. What the heck's a Beasley Broadcast Group? Who knows? Who cares? What I do know is that we just hit the mitigation block and look for sellers to step in here. Just a little bit. And we will see what we're going to do. What's a mitigation block? Well, they've just gotten anybody who was stuck long in this sell-off right here where it free fell from 12.76 all the way to, $4. So guys, major level where people are stuck at. So it squeezed above it once, got everybody out. Everybody should have been out, but if you bag held, you didn't have your limit order, this is your next attempt to get out right here. So now if we go back to a 1 minute, I bet you anything we'll see sellers responding to the zone we just drew. Boop. Right? Just works. You always got to look left, guys. You're still holding CENX, the aluminum? I'm holding AA. Let's talk about that. How's it doing today? No, it failed the little breakout there. To me, it looks good. Just not quite ready. Waiting for these, like the hourly trigger to move up here. This one's is playing games a little bit, but I mean, heck, I was saying yesterday it's a buy. As long as 70 holds, it's a buy. I was saying, hey, it looks kind of here in a 70 right now, but I bet you it's going to close the candle strong and it's just going to continue to go. So it's acting right. I'm not worried about this one. Whoa, skills. I love you, baby, and if it's quite all right. Yeah, what is that? Is that is that Sinatra? I'm just thinking of the dancing frog from from Looney Tunes. The hat and the cane. All right. You think it's toppy here? SENX. Let's look at it. Yeah. Two top wicks. It's running a little hot. It probably needs to cool back down to 60 or so. That'd be reasonable. But here's why I'm still bullish on these guys. I think it looks like a megaphone that's about to break out on the weekly to me. And on the monthly, these things, like, look, it's like a magnet. It wants to go home up to 80. And for AA, it's like a magnet. It wants to go and retest this yellow zone, I think. At the very least for AA, I really think that there's strong incentive to pull this up a little bit more. What I'm seeing is we're zooming into this previous swing high. You see this gap? This gap, I think, is very viable to reach up to, and I think it's the next area of interest. So you just extend the rectangle to the right here, and then that's going to show us exactly where I'd like to transact. Come on. I need Micron to crash so I can buy some more RAM. I'm going to keep saying it and willing it into existence, putting it out into the universe until I manifest $100 DDR5 RAM upgrade. Okay, so guys, there's the gap. This looks pretty reasonable to me. It should align with this measured move of this previous range break we just got. Yeah, right in the middle. Totally valid target for it to come up, sweep through this gap, hit the measured move here into this major higher time frame band. You see this yellow here. So I think that's where we're headed. PLTR to me looking like it's trying to break this downtrend and probably get a little bit of a mean reversion move to the upside. We'll see if that's the case. We'll see. QS ripping. Did we enter into silver? I still hold a little bit. I bought a little when we were talking about silver and gold. Not much. And I bought it like 64-ish on SLV. Gold, I think, was like, what, 410 or something? It was like 418, 417, something like that. So I just have little positions, nothing too crazy there. I couldn't read it. So I'm like, I can't read it, but it's probably a good place to buy it. This is how I kind of been with a lot of things. Copper needs energy to extract. The copper play feels like back in play. HBM still holding from last year. FCX, another one of my I just don't look at it. You know, look at it go. It's back to all-time highs just about. Beautiful. But it's sloppy now. Now it's like got these gap ups and stuff. I don't freaking know. I'm in from like 45, 48, 47, in that kind of zone. This little consolidation pattern here. So heck, I don't know, man. I don't know. I'm just going to hold and not worry about it and trust the thesis that we've had all year long, that we talked about since January, which is commodity supremacy. It doesn't matter if no matter what happens in the world, whether we go screaming up high growth narrative, data center, AI, well, then you're going to need a lot of copper, right? If the market continues to, or if we see more or saw more geopolitical turmoil, then I would expect countries to continue to stockpile these resources in anticipation of the scarcity, the age of scarcity that we will see in a multipolar geopolitical economy, which seems like the way we are strongly trending. That's been the thesis for multiple years, for me at least, that there's going to be continued unification of alternative supply chains outside of the U.S. So basically BRICS nations, China, the EU, a lot of coordination, a lot of working together to get around the fact that we kind of control everything to some extent, right? So if we're slowly shifting away from that, you will see basically what we're seeing. We're seeing, I would consider them pretty desperate attempts, not desperate, but, pretty serious attempts to retain dollar hegemony through, the petrodollar, through these wars, through the, the things we're seeing with oil prices. So that's kind of how I'm reading all of this in terms of the bigger picture there. Qs, y'all were talking about it. Are you talking QS or are you talking literally Qs? QQQ. Like, I don't know what I'm seeing on QS. This looks more rippy. Yeah, rippy. There we go. So this is not slowing down, guys. This is strong. It's surging up, coming back, testing it again, cooling off. Not even getting to VWAP, though. Already hammering, trying to go higher. Do not short. Let's get back to the grid. We had the mock candle. That was the mock candle that we just saw, guys. And let's go to BBGI. I think we easy money snipered that top there as well. Where do we have that drawn? Was that on TradingView? Let's look at that. Yeah, we looked at Baby Girl on TradingView. The Beasley. Oh, Mamma Mia. Doesn't look like a big pullback, does it? But that's a 20%. 16% pullback. We said there's the spot. There's the spot. And it's halted down. Beautiful, beautiful. And Palantir, low-key rippy off the lows there. Glad that I covered some. I'm not covering the rest. I'm looking for a bounce to add in. That's one that I will stick with short. I'm down to just a little bit of that. I have TSLZ. I have the HOOZ, a little bit of that left, all at 1/3 runner positions on those. And then my last short, I don't want to look at it because I'm probably getting cooked. AAL. These are May puts. So they're down like 50% now. They were back to flat yesterday. They've been oscillating around. I thought I was smart buying this pop. Thought I was really smart when it traded back down here the next day. Should have monetized. Did not. Got cooked here. I should have added. Did not. It felt like I was throwing good money after bad at that point. So I keep the position on. It's 50% down. It can wipe out a couple $100. The longs will counteract that if that is the case. If AAL misses earnings on the 23rd of April, well, my May puts will all of a sudden be a double from where they're at now. Probably get out break even if that happens, to be honest. But I'll keep them at this point. At this point, I'll keep them. That's my downside hedge. But you know, getting more and more bullish. Even though I do think that there will be a pullback and a nice entry. And I'd like, for example, buying right here. I do think that we go higher, but this looks like poor structure. I'd like to see it coming down, make a higher low on like a 5-minute chart here, and not just play this squeeze up and expect it to just go straight vertical. I think maybe a higher low to could hold 679 today. I don't know. I think maybe a little bit of a pullback overnight would be healthy, and then we can keep on climbing higher. BBGI will be down tomorrow. Short it. Do it. Not financial advice. I don't know. Let's look at the chart. It did hit that major level, though, and did find a decent seller here. Now we're trading back into this halt up gap, though. So definitely keep a close eye on the 1044 handle to the downside and the 1117 handle. That's your zone you're playing on BBGI. You got to watch for where that zone breaks. If it loses that, then it can flush out pretty decently back on down to, oh, heck, reaching under 8 would be my target to sell. By the way, ZNTL is also looking like it is failing. A little double top here into bada bing, bada boom. What do we say? 444 was the first high to 440 or 450. That was the second high. I don't know, guys. All right, so Palantir very strong into the close here. Just getting that mean reversion pop that I do like to see. A little fake move up on, I don't know if it's fake. Why am I trying to fortune tell? It felt fake. It feels fake. That candle, the strong push up and then immediately the reversal like that into the flat top, kind of a little 1-minute flag. Often these just do not have the actual structure to push out. They give one fake little look up. You can even see, yeah, I think it's playing out right now. You can see it had that 1-minute little pennant, right? The little downtrend line that every other one has worked. See, that one got the explosive move up. This one got an explosive move up, but then it started putting in top wick. So there's a seller here. It tries to break through that seller, rejects. I think what we're seeing is that thing that I like to talk about the trend starting to curl there. See that curl, curl, curl? Now it's curling like that. So I think that this is the potential start of a little bit of a failure here. You could call it a little head and shoulders on the 1 minute. We'll see if it plays out. It gets invalidated if it pushes back through this level that was selling it. So you can see the top of this volume shelf here, 680.50 to 680.60, that kind of little band there. If it pushes through there, it can squeeze through to a new high a day. Of course, we got 4 minutes left, so I'm more talking about after hours price action here. But it would make sense if we see a little bit of a de-risk into the close next few minutes here. We got 4 minutes left. 4 minutes left, guys. BBGI still halted. When did it halt? 46, so it should be opening up here if it's going to, I do believe. Maybe, what are the rules on the small cap halts? Is it always 10 minutes? Is it 10 minutes in some situations, but sometimes longer? Is it like at least 10 minutes? I'm not sure. I do my best to not get caught in halts, to be completely honest. The DRAM ETF for memory. Yeah, let's take a look at the DRAM. Holy, oh, it's a new, talk. The new ETFs. This is such a great strategy. So guys, I got I think just ETF DB. There's got to be somewhere, I forget the exact link, but look for a link that posts new ETFs. If it's a hot ETF or a hot stock and it's a leveraged version of that, an ETF version of that, so often you'll see a big influx, and it's just the easiest 10, 20, 30, 40% you can make sometimes on these. Look at this. From 26 to 31 in a few days. This is just easy money. If you knew about this, you buy at the end of the day when it's strong, you're up 20%, guys. It's insane. So DRAM, also amazing ticker, right? What a ticker. I want to buy it just because of that. Very cool, very cool. Treat Micron like a side chick and nibble at times. Just a little bit. Okay, nice. So this gives you access or exposure to SK Hynix and Samsung. That's pretty dope. So this one isn't super exposed to Micron. I think I kind of like that. Micron's my least favorite of them. I'm not gonna lie. Interesting. 2 minutes left. So DRAM, we're focused on this for the long. I still like Soxcell. I like AMD for longs. I'm not sure how I feel about crypto yet. My toxic trade is wanting to buy crypto for the big mean reversion uppies, but I don't know if it's time. I don't know if it's right. The talk's just saying QQQ, maybe a 3-day-old ETF. Yeah, it's got 4 days on it. It's still a young warthog in the bigger picture there. So still a lot of room if this theme can catch fire. And really, we're just it's literally like, hey, is the Strait of Hormuz open? Okay, let's rip these. We've wanted to rip them for 3 months. Now we finally get the go-ahead. Steve, I like that you're in here, brother, because you're mentioning a lot of names that I like. Net is one of the only software as a service names that I'm even remotely interested in. Even remotely. Weird day today, but recovering nicely. Finding support at the 50 DMA. Let's pop it up on the trading view. See what old lines I have. All right, so my system, very interesting spot here as well. I mean, no shocker. My system it's going to pull up, if it's a major level with another system, like, oh, lo and behold, what do you know? 50-day moving average that Steve's mentioning there. Looks like you use the DMA there as well. I like the SMA / DMA for the 50 and the 200. I find it much more responsive. So we did lose the 200 today, but this seems like a value. How I look at this is the higher time frame is more important, but the lower time frame is more active, right? So this is more of a passive seller over 200 still. But if there's an active buyer at the shorter time frame moving average, then I would expect this to renegotiate and eventually digest through that passive seller at the 200, move on up and find or establish basically fair value above or at or above that 200 moving average, which is in the middle of its current range here from 175 to 225, right smack dab in the middle, right at 200. You got that really clear break point, right? So this is a little low cheat entry, I would call it. Not as high probability as a lot of others, but I got to respect my weekly trigger at 195 plus that point of control, the recent point of control as well, 192. The 50-day moving average, 194. This is a band of confluence. What's up, Larry? Good to see you. So glad you could join us for the last 10 seconds. Pencils down, his talk says, that's all she wrote. So we'll review the daily candle on SPY, then I'm gonna hit the bricks. Oh, what a day. I think that we are overbought short term, but that doesn't mean we can't go higher. We're reaching up to this big point of control here at 683, 683.70, 683.70, guys. So let's see what we do there. I would expect at least some sellers to step in and, take a shot at shorting. Can we get back to the 50-day that we just squeezed through? I think that's a decent place to look. See that low volume node here at 674. That's your first short target, major short target if we do get distribution off the 680 to 683 level. So that is what the trade setup is for me going into tomorrow and the and next week here. Potential to short back down to that 675 that I mentioned. If that fails, hey, we could see 670, 666, 667 retest. That would be really nice. It'd be a back test of these confluential big level resistances now flip to supports. So we have the 200 day, we have the weekly trigger, we have the daily trigger, we have this previous high volume node, the lower side of the high volume shelf, and we have all the hollow space in between. So it would make sense to me if we negotiate from the 665 to 680 zone for another week or two. Awesome. First time here, Steve. Great to see you, man. Hope to see you going forward. Us Steve's got to stick together. Steve solidarity. We're just built different. It's just how it is. Always good to have another in the chat. So, guys, last thing I'll say, the oscillator, daily oscillator. This thing works, right? Yet we haven't gotten to this point of control yet. We got room to the upside. They're low to get really heavy into our longs. Until then, keeping a little exposure on the short side to the things that aren't really working in the market. That software as a service, that Palantir, that, what else? Tesla, like a dog in the street. Weak, but it is into my target here. So I did trim down to 1/3. All right, guys, that's the, that's the play. Yeah, maybe Steve will come on to a call. Two guys named Steve said, CPI doing a whole special on that, then carrying on the momentum into the cash session for that hot first hour. So we're going to be trading that live. Don't miss it. That's the Friday special this week. We're going to be starting to do this Friday programming too, expanding, not just Monday to Thursday now, looking to keep going Monday through. Let me reload my Discord and see if I can't get you guys a link before we leave. Reloading right now. I've frozen myself? Did it freeze? It shows me that I'm still alive. I'm gonna try to get you all this link, but if I'm talking to myself, so be it. We're gonna drop that Discord in the chat here. Thank you so much for joining, guys. I will see you on the flip side tomorrow. Take care. Have a great week.